Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Buy now.
Sell immediately.
Hold it, boss.
Buy now. Sell.
Hold.
Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. down the stories shaping the world. From markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning and welcome to India Market Open with me, Neeraj Shah, and my colleagues Alex, Matthew and Hiral Daria.
It doesn't happen every day.
It doesn't happen every day simply because the decks are looking fairly solid, even though the market may be looking a bit stretched. Because if you thought that just the conflict bugle being cooled down and therefore the resultant impact on crude is one thing, it is not just that. Earnings are solid, auto sales are solid, rupees looking okay.
$36 billion in terms of FCNRB.
Yeah, and overall flows of $40 billion, including the other windows that they've opened up.
And SBI at the Business Leadership Awards telling us that look out for September, that might actually be even stronger than what August and July have done. So I think the deck is looking solid. The only two hitches to my mind, guys, and I don't know how you guys think about it. One is that the market is looking slightly stretched on the FNO side. So if there is a rally today and a strong one at that, you might be actually bordering on the side of extreme greed. And Bloomberg is not taking India on the bond index.
That is a negative.
Couple of issues.
At least for now, if there was an expectation that FY27 was when we would see the inclusion, and remember, compared to the JP Morgan bond index, this is a relatively smaller percentage allocation to India, but it would still be several billions worth of inflows on account of those passive flows. If it doesn't come in FY27, I think the direction is right.
Yeah, but
FY28 it will come through.
But Alex, I'm not very happy with the commentary that you put out as to the reason, where I remember reading that they're saying that it's mainly on the back of the performance that they don't want to include India.
No, but they have said that pending tax changes, etc. This is on the anvil.
Exactly.
So in fact, the commentary for when it could happen is actually fairly constructive.
Okay.
Maybe not thus far, but they are saying that it will happen it's
Imminent.
So if not FY27, FY28, I don't think as things stand right now, and hopefully the FI outflows from equities gets stemmed, if not reverse, right? But you put in place your bond inflows on account of the tax changes that the government has brought in, which are actually very robust and significant. FCNR, you don't have an issue with inflows at this moment. Touch wood.
July was good.
July, yes.
Let's see. All right, let's talk about the global cues. US President Donald Trump has said that talks with Iran are set to take place on Monday, but no deadline has been set yet for that agreement. So before we get forward with everything that has happened over the weekend with regard to US and Iran, let's listen into that comment from Donald Trump about the latest talks and what is scheduled for Monday.
What prompted you to call up at that time? I was asked by Saudi Arabia, by UAE, by Qatar, and by Iran. We were all set to go just about at this time right now, and would have been the massive republic. We're all set to go, but when the allies asked to call it off, you got to sort of say, "But let's see." Well, the reason they asked is I think there's a deal. There's a deal on Hormuz, and then there will be a deal on the nuclear, or you might call it the denuclearization of Iran. I call it the denuclearization. So what's the way back? We're holding it. We'll just see. Do it anytime we want. But we were asked by the three primary groups. We were also asked by Iran very strongly, actually. They said we'd like to make a deal. What happens now? Well, now what we're doing is we're talking to them in the form of a negotiation. It begins tomorrow afternoon, and we'll see if it's true. I'd love to do that. Save a lot of lives, save a lot of unnecessary power, to be honest with you. It'll take many, many years to ever build it back. If it could, I don't think it could be even buildable. So we had an attack that would be the biggest attack since World War II. And it would have been disastrous for them. And they didn't want us to do it. And frankly, Saudi Arabia didn't want it either. They thought that a deal is imminent.
Okay. All right. So what US President Donald Trump is talking about is the fact that earlier over the weekend, and that's on Saturday, he called off strikes against Tehran and saying that strikes were called off provided that a deal is struck rapidly. He claimed on Truth Social that Iran and other Middle East countries had asked to hold off, but Iran's Mehr news agency has denied that Tehran asked to hold off on strikes. In a post on Saturday, Trump said that the US was, in his words, locked and loaded and ready to go against the Islamic Republic of Iran at levels of military terror, strength and power not seen since World War II, unquote. On Sunday, though, Saudi Crown Prince Mohammed bin Salman had a call with Donald Trump, and that call was apparently aimed at reducing regional tensions, and that's according to the official SPA press agency report. Now, what is the market reaction? Clearly, there has been a de-escalation, and you see the first reaction in the oil markets. So, of course, on Friday itself, you had the equity markets in the US end higher, but Brent crude down as much as 5% in trade as things stand right now, hovering around that $84 per barrel mark. Gold got a little bit of a pop. You had bond yields that cooled off across the board in the US, and US futures, and let's pull that up if we possibly can, those trade in the positive. You have equities in the Asia Pacific region. There you go. So those are the US futures as things stand right now. Equities in the Asia Pacific region, though, have opened a little bit weak from the initial ticks. And if we can pull up the Nikkei 225, it's trading with cuts of about 2% or so. Shanghai down about 0.5% or so. So it's not really been bought into in the Asia Pacific region. Let's see how India opens up. But let's go across now to William Lee, who is Chief Economist, Global Economic Advisors, who's joining us right now. William, thanks so much for taking the time, as always. The latest developments in geopolitics seem to be moving in the right direction. But how much stock can you have with this? Will you wait for the next couple of days to see if there is a durable move for peace? Because we've seen this movie before.
We have definitely seen this movie before. In fact, we've seen the sequel to this movie before. And I think the markets may actually be getting tired of this this non-progress. I think one of the things that you notice is that the price of crude has really been bounded. It's never gone very, very high in the sense that it has never given up on the possibility of peace, but it's also never really cracked much below where we are now. And I think this indecisiveness is something where the markets have put the conflict toward the side. And except for Asia, which is so dependent on having energy supplies from that region, the rest of the markets have gone on. They've focused on where profits are going, where the AI trade is going, where technology is going, and where the future of the global economy is going, outside of the energy dependencies on the Middle East. So I think the markets themselves are really taking this with a grain of salt. We've seen this movie before. Let's see if Iran is serious or not in terms of its negotiating. And I think it's very difficult to be serious or not, or to be able to conclude whether Iran is serious or not, because the government itself is so fractured. The Iranian Guard and the militants will always be saying, we are not giving in. We're going to fight to the very last man. And the negotiators, the more moderates, and also the region itself is saying, we have to have this conflict contained. We have to open up the supply chains. We have to open up the Strait of Hormuz and the Red Sea. So these are the things that I think the region is demanding. And I think the U.S. being a reasonable ally for this region has listened to these arguments over and over again. And I think you've seen these iterations going back and forth. But I certainly think President Trump's patience is being tried. But I think the one thing that he's been consistent about has been to try to exploit every opportunity for peace and not go to to extreme conflict.
Okay, so interesting, I mean, yes, we have to wait and watch and see till things actually fructify. William, good morning, Hiral. How are you looking at the long-term FDI and the strategic money that's coming into India? Because now you're talking about close to what, $40 billion till the 31st of July under the swap facility that the RBI has managed to garner. However, when you talk about capital markets, the FI inflow not there to that extent. So it is quite cold, I would say. We're seeing outflows from Indian markets. However, the quantum of outflows has receded as well. If you have to put A plus B together, how are you looking at the Indian markets then?
The flows, I think, are less than what you would want to come into India, because I think India has really not demonstrated yet enough progress in developing the kind of infrastructure and financial market infrastructure, as it were, to entice global investors to treat India seriously as a second alternative source of manufacturing to China. And it has really not gotten far enough in convincing markets that the best place to put capital is India. Right now, I think markets are absolutely obsessed with where their dollars are going to be used most effectively. And that, unfortunately for India, is still the advanced economies where the technological progress is happening. India hasn't demonstrated yet that it really will be a source of profits, especially in the AI trade on the applications layer. And I think that's where I think markets are starting to focus on. All of the discussions I've had with our clients and as well as global investors in general has been focused on where will the AI trade be making its profits and where will the profits be returning the highest returns. And that seems to be not so much in the raw chips area, because that has really maxed out, but rather it's looking for where the applications are. Where will be the killer apps that utilizes the commoditized LLMs? India has not demonstrated that it will be the source of a lot of these technological innovations. Even though India really has a lot of the talent and a lot of the software capabilities, but it really hasn't convinced global investors this is the time.
Yeah, point well noted. Well, let's see if the democratization of AI leads to that being less of a worry. William, the other worry or the other wrinkle on the banana peel, if you will, the yen intervention and the conversations thereof. If indeed there is some bit of engineering done there, could it disrupt financial assets, or do you think Japanese central bank would be cognizant of that?
You know, the misalignment of interest rates and exchange rates is something that a lot of people have focused on as an explanation for why it is that we are not seeing more global capital flowing toward global markets and so much of it coming into the United States. And I think the Japanese represent an issue that has really plagued them for decades, which is the ability to get off its middle income trap of having moderate growth, moderate technological innovations, and moderate declines in its capacity for innovating and for building. These exchange rate interventions, I think, are sort of the last attempts at trying to make small changes along the fringes. What Japan needs is to be able to demonstrate, again, as does India and the rest and other emerging markets and other markets in general, that it is a source of innovation with which I think global investors will be able to invest confidently. Japan has many success stories, but unfortunately, many of the success stories are stories of the past. And right now, I think the markets themselves are again focused on the success stories of the future, and that's not in Japan.
Okay, so it is going to be a wait and watch in the end as well. But I'll just correct myself as well. That's what Neeraj and I were just discussing, wherein in terms of the month of July itself, I mean, we've seen a pump of what, $2.3 billion that have kind of come in after those heavy outflows. So it's a marginal number, but still an inflow that has come in. But thank you, William, so much for joining in. Always a pleasure to speak to you.
Thanks for having me.
Always. In terms of markets as well, we've extended that winning streak to a third consecutive session when it comes to Friday. And your benchmark indices opened on a positive note, extended their gains throughout the session, and that is what Friday looked like. There was support coming in, which was broad-based buying across sectors. And you had stable crude oil prices, easing geopolitical concerns, and improved investor sentiment to some extent that aided this kind of recovery. In terms of close, we gained around 0.3% in terms of Nifty 50. We ended just close to that 24,380 mark, while Sensex advanced close to 0.2%. Media, auto, these are the sectors that emerged as the top performing sectors, with additional support coming in from financial services as well. What was on the downside was FMCG and IT. And there was that mild week of profit booking that was coming in during the session for these two sectors as well. In terms of the broader markets, your mid-cap 100 gained almost 0.4%, whilst the small-cap 100 also advanced in similar range. You've also witnessed healthy participation beyond the large-cap space, which is encouraging. And overall, if you have to look at individual sectors for the month of July as well, IT and auto, these two have been the top performing sectors in the month of July, and 2.2% is the kind of Nifty returns that you've seen in the month of July. So a peak of 24,430 is what we've hit on Nifty 50 if you have to look at July as well. The question is how decisively or how soon, Neeraj, we're able to cross that high of July as well now in the month of August and sustain above those levels.
Yeah, I think that answer best answered by Kushpur and some of
Absolutely.
the others for sure. But we can talk about the factors that could lead to something like that, right? And one, by the way, just remember, the earnings season is not just strong in India, it's strong in the US as well. I think the last statistic that I read in Barron's was that 60% of S&P 500 index companies have reported results with 90% beating EPS estimates. So equities by and large across multiple markets are actually doing very, very well for themselves. Now the trade setup for India today, well, healthy domestic macros as well as strong Q1 earnings season continue to support investor confidence, I would say. And something that we all discussed right at the start of the show, look at the factors supporting today's deck. Fall in crude prices, strong auto sales, strong FC/NRB data, all of this will aid sentiment today. In some sense, except for the Bloomberg news, wherein India has not been included in the Bloomberg Standard Bond Index, but could be at some point of time later on, is probably the only negative. Otherwise, things look very, very strong. And frankly, I'm just surprised and amazed with the auto sales depth that has come in, to be honest. So that is something you would definitely want to keep an eye out for. And in terms of cohorts and pockets, I think we've discussed about chemicals, pharma, and a bunch of companies enough number of times. I dare say, look at precision manufacturing companies, because what's happening out there in that space is really, really amazing. The companies are growing at a compounded annual growth rate, at a strong compounded annual growth rate for the last many quarters, with a very strong outlook posted. The ROCs are in high teens already, and gross margins are northwards of 50%. This is stuff that consumption companies are made of, but Indian manufacturing is now doing that. And the gross block of a lot of companies has multiplied 4 to 5 times in the last 5 years, which is quite amazing. So now they have size, they have scale, they have great ROCs with the promise of more, superb gross margins, and the growth outlook is positive. I mean, look at what Sona Comstar has done, for example, 10x in 10 years. Sansera is saying they are at 3,500, but they'll go to 10,000 crores of revenue in 3 years. Craftsman Automation, Happy Forgings. I mean, the bunch of companies doing this kind of work is quite stunning, really.
So just a small point on that and a question here, in that if you look at the trailing multiples, they look expensive, but
yes,
would you argue that you should be ideally looking at FY29 perhaps to gauge the real value that some of these companies might have?
So Alex, if history is to repeat itself, if you looked at FY25 numbers when you were in FY25, you would not have bought these companies, and they have given terrific returns.
Yeah.
And their outlook, I mean, now again, it depends on every individual's investor appetite and whether they believe the company can deliver. But hypothetically, I'm just saying, I do not know this. Only time will tell. But if Sona, which is trading at an expensive multiple right now, but great margins, 60% gross margins, by the way, for Sona, right? Great ROCs, etc. If they do 10x in 10 years, if they do, then the stock right now is cheap. It may still not give returns for the next 12 months or 18 months, but over a 5-year period, will give solid returns.
Interesting.
But you got to pick and choose your winner and ride the risk.
Absolutely. And just to add to your auto sales numbers as well, what's interesting is the trend that's coming up, Neeraj, in the entry-level cars.
Okay.
And that's what is evident from Maruti as well. Hyundai, likewise, it's beat numbers. So it's your entry level which is really firing on all engines, and this is not only this month. I think it's a trend over the last
Since
2 to 3
the GST,
months.
since the GST announcement.
That uptrend has not gone away, and I don't know if that is going to play up or not. And second is, you're talking about the SUV portfolio as well. So
Yeah.
whoever is coming in with new launches, that's what everyone is riding on right now.
So SUVs and small cars, not sedans.
Yeah.
Interesting.
So I mean,
Alex, unfortunately for us.
Both of us drive sedans, in case you were wondering. But having said that, before you get into the factors, Hiral, it's important to also, we haven't looked at it yet. The implied open looks particularly strong this morning. So you are pretty much likely to see a strong open. Whether we hold on to that or not is another question altogether.
yeah. I mean, 2 days have been good. Let's hope the Monday is also pretty good with what we're seeing. But clearly, a strong recovery is what we've seen last week. The rebound has reduced the risk of a deeper correction and restored a positive near-term outlook as well. And that's what Alex is actually alluding to, seeing that implied open in trade. Now, the immediate focus is on the key resistance levels now, which the analysts are expecting the indices to overcome. And the immediate resistance, it's at 24,500. A breakout above this level actually opens up your upside targets of 24,750 and 24,800. If there is a decisive move past that 24,800 mark, it actually will unlock momentum towards 25,000 plus. But a rejection at 24,500 could pull the index back towards that 24,100 movement level or 23,900, and that's where you will see that consolidation and range-bound momentum happening. Medium-term outlook, you're trading with a broad range of 22,000 to 26,500, and across above the 24,800 clears the path to test levels of 26,500. And from a longer-term perspective, the bullish bias remains intact with the ultimate target of 28,000 and 30,000. And if negated, only if the index falls below 22,000. So these are interesting levels. And you have seen Bank Nifty, which is consolidating between 56,650 and 56,750, 420 as well. Immediate hurdle, 57,500. And a break above that targets 58,500 and 59,000 as well. So very interesting levels that one is watching out for in terms of Bank Nifty as well as we speak.
Yep, things are looking okay. So the question only is, what do we do next, right? So I think that is the key thing. Should we focus on the stocks as well? That
We should
each of us
actually
have in
talk
mind?
about stocks. So let me start things off, and I want to talk about Maruti Suzuki at the start. And it's a thumbs down based on the numbers because it's a miss. It's a miss on bottom line on account of a margin hit, and you're probably wondering why that is. The margin miss is on account of an overall 300 basis points commodity cost impact in the first quarter. Now here's an interesting update because Maruti Suzuki has moved to a monthly supplier settlement process, and 110 basis points impact was seen in the first quarter on account of this. I'll come to that in just a bit because brokerages have weighed in on this to say that this is the reason why there was a miss in the first quarter, but it actually could hold them in good stead going forward. Demand outlook has, however, remained robust, and you will see this in the sales numbers that my colleague presents to you in just a bit. But take a look at some of those numbers, the key numbers. Cost of materials up as much as 46%, the PAT number down as much as 12%, revenue uptick of 36%. So the demand was robust during the month. Or rather the quarter. EBITDA is down as much as 14.5% and the margins have contracted to 8.2%. I've picked City on Maruti Suzuki. They've maintained a buy, but they've cut their target price pretty dramatically to 16,500 from 18,500. What they're saying is that the margin hit is partly a timing issue and it's not structural. They're saying the supplier settlement moved from quarterly to monthly. It means that Maruti's margins should recover faster than peers once the commodity costs ease. So that is what I was referring to at the start when they moved to this in the interim with the margin implications negative with higher input costs. It's negative for them, but once that reverses, they'll be the first off the block to benefit from that. FY27 volume growth guidance of 10% reiterated despite the miss, and multi-powertrain push continues. What Hiral was talking about, multiple models are set to be launched, 7 new models planned by FY30. I've picked a second automotive company because the numbers look particularly strong. Mahindra and Mahindra, we've spoken about this, and the worry really for Mahindra and Mahindra was tractor sales. So first, let's get automotive sales out of the way. 26% increase, pretty robust. Exports look very good. Of course, it's a very small component of the total, up about 47%. Three-wheeler sales also pretty decent growth. These are high-margin products, and so that's good as well. Tractor exports are up as much as 3%, but here's the kicker. Domestic tractor sales are up as much as 21%, and the total tractor sales are up 20%. That's pretty robust, and that eases concerns that the full year FY27 is going to be a little bit weak for the tractor segment. Last but not least, and possibly a contender for stock of the day, is Divi's Laboratories. Because look, it was expected to post a very good set of numbers heading into the earnings season or the result presentation, but it has beaten those elevated expectations as well. They've reiterated their double-digit growth driven custom synthesis, and actually that is what has driven the growth as well. You've had strong mix shift towards the custom synthesis, and that has boosted profitability. A better profit mix has therefore lifted the profits. The solvent costs have remained high, yet the margins have expanded pretty sharply. They've guided for a 60% gross margin for FY27, and they've guided for a flattish EBITDA margin year on year. But take a look at those numbers. They look really pretty. 28% revenue uptick, 72% EBITDA uptick, margin at 40.7% compared with 30.2%, and you have a PAT number that is up as much as 66% on a year-on-year basis. I've picked one brokerage, City, on Divi's. They maintained a buy, and take a look at this. They've hiked their target price from 9,450 to 11,700. They're saying validation drives a strong beat. Commercial volumes can transform earnings trajectory. Margins may remain elevated. Strong commentary on peptides, contrast media, and generics, all positive. They hiked the earnings estimate by 8 to 15% and retained Divi's as the top India pharma pick.
It's interesting to see what's happening with Divi's Laboratories as well, and especially the CDMO players in totality. On my watch list as well, I've picked up three earnings. The first one is ITC. It's a thumbs down in all honesty, because it's missed estimates on all fronts. Now, this is the first full quarter of tax hikes, which has actually impacted volumes. FMCG and others have continued to outperform. Agribusiness disruptions have continued to weigh in on the performance as well. And unlike Jeffries and Nomura, other brokerages have gone ahead and cut their target price as well. Revenues down 14%. If you talk about the EBITDA as well, that is down around 27 to 28%, coming below what the street was estimating. EBITDA margins at 26.7%. Expectation was 28.7%, and you've seen a degrowth there. And in terms of the profitability as well, a downtick of around 27% and below the street estimates. In terms of brokerages as well, if you have to look at Macquarie, they've maintained a neutral, cut the target price to a 300. HSBC has maintained a hold, raised the target price to a 320 just by 10 rupees. JP Morgan has maintained a neutral, and they've cut the target price to 310. Jeffries is upgraded to a buy from a hold, but they have a target price of 350, and you see the others as well, like a Goldman Sachs. But the lowest target price from all of this is around 290 from a Goldman Sachs. So that's one on my list. The second one that I'm talking about is a Glenmark. Now, this is kind of a thumbs up, because overall, yes, the numbers are pretty much in line with what the street was estimating, but the India business is up around 15%. They've continued to outperform with regards to where the IPM growth goes. Respiratory and oncology launches have been scaling up, and your North America business is up 41% on a year-on-year basis. Talking about Europe's branded portfolio and specialty products, they have contributed a richer mix as well. Rialtris, Winlevi, oncology assets, and the IGI pipeline, that is what is expected to strengthen the portfolio. A 23% revenue growth, EBITDA a 38% growth, margins have improved as well substantially, and they've reported a profit of 483 crores versus of 47 crores. So hence a thumbs up on this one. And likewise in terms of Dixon Tech as well. I mean, the numbers are pretty neutral, but it's the commentary because of which I'm giving it a thumbs up, and what the brokerages have done. Your revenue has seen a growth of 21%, though your EBITDA is down 4%. Margins, I mean, the estimate was 3.3, it's come in at around 3%. And your net profit I would say close to in line, 218 crores versus a 231 crores. But the net profit excludes the fair value gain of Aditya Vision and the non-controlling interest. The margins are a miss. The PAT is weaker. The mobile volumes are down 22% and the operating profit is down 6%. Macquarie has said that the margin compression is explained by the first quarter without PLI support and general input cost inflation as well. And if you have to look at what brokerages are saying, you have Nomura, which has maintained a buy on Dixon Technologies. They've raised the target price to a 17,086. You have Macquarie as well, which has maintained an outperform. They have a target price of 16,000. Goldman Sachs has a sell though, 10,980, and a CLSA, which has an underperform, 10,600 is their target price. But it's mainly the management commentary and the outlook, because of which there could be, some bit of positivity that you could see with regards to a Dixon as well, Neeraj.
Yeah, I mean, it should be interesting, and it's covered a bit of lost ground, but I think the earnings estimates for FY27, as people have said, and FY28 will see upgrades because of the Vivo JV, so keep an eye out for that. I have no doubts that Divi's will be the stock of the day on the long side. I have two accidents of the day, or one accident of the day maybe, and one which could actually have a bit of a downtick. So the first one on my list is Muthoot Finance, and while the Morgan Stanley note is a bit sanguine, but I think the key details on that note tell you what's happened with Muthoot. So they maintain an overweight with the target price of 3705. They say Q1 is decent. There's a high consensus estimate, make it look worse. Sadly, earnings are all about meeting or beating estimates these days, and I think there is a misestimate out here, and which could actually lead to a bit of a corrective move there. The net interest margins missed estimates. The overall miss was contained due to better loan growth, says Morgan Stanley, and the consensus numbers were much higher, which make the miss look worse. And I think this by itself, we have not written which make the miss look worse, but effectively that is the reason why Muthoot Finance could have a bit of an issue in the current period. So don't be surprised if there is a bit of a downtick on Muthoot Finance in the session today. I think the Jefferies note was a lot more harsh on it. Let's see what the stock does today. ABB India is the other one, wherein there is weakness there, and JP Morgan's note kind of lays out what's happened to the numbers. So weak, JP Morgan says weak as margin pressures persist. There is a strong order inflow, but weak margins. And the order inflows, while they grew about 50% YOY, but were below the elevated expectations. So margins below estimates, order inflow below estimates, valuations not exactly compelling. And therefore, with all these reasons put together and no recovery in sight for the margin miss, I'm suspecting that ABB India could also have a bit of a corrective move today, so keep an eye out for that one. Now let me balance this out with one which came out with a really good set of numbers, maybe a contender competing with Divi's for the price movement of the day, though Divi's just the size that it has could well be the stock of the day, even if it actually rallies a lot lower than Ram Ratan Wires, if it does. But Ram Ratan Wires had a great set of numbers, guys. Revenues up 88%. At 1853 versus 982 crores. EBITDA margin expanded from 4.4 to 48%. For a converter, it's not a bad number. The net profit at 35 crores versus 15 crores for a stock that actually did not do well on Friday. So maybe there's a bit of an uptick here. There's essentially a ramp up of the copper tubes business and copper price pass through for Ram Ratan Wires. QOQ though has, remember, seen softer margins and higher finance costs, just that the cash flow and the profit number is looking so strong that will make up for this. The higher finance costs are probably because of the capacity expansion that they have done. So let's wait and watch. So very strong numbers, could do well, but somehow I agree that as a sector, maybe autos, but as a stock, Divi's could well turn out to be the sector and the stock of the day.
So we'll see soon enough, just about half an hour to go. In the meanwhile, just...
I love the smile that Alex has on his face.
I mean, I always find it interesting to try and pick the winners of the day, or maybe the big losers, right? We call them the accidents of the day. Let's see if we're right. Let's talk about some of the numbers that we were talking to you about, and this has to do with the RBI's measures to bring in foreign flows. Banks have raised as much as $40.81 billion under the RBI swap window. And of course, that includes the FCNRB, but it's not only restricted to that. That is as of the 31st of July. So in about a month, there's quite a bit that has been mopped up. $36.7 billion of that has been raised through the FCNRB deposits. Further $2.57 billion is through the OFCB, and $1.5 billion through the ECB route. that swap facility is opened on June 8th. But a bulk of the inflows have actually come through in the month of July once things stabilized with regard to the rates and the other factors that were playing out. FCNRB window, remember, will be open till the end of September. And as Neeraj pointed out to you earlier today, SBI in its commentary has said that it expects the flows in September also to be pretty robust. The OFCB ECB measures will be in place till the end of 2026, and so that is positive as well. The RBI announced those measures, of course, you know this, to increase the USD inflow and arrest the fall that you've seen in the rupee. All right, we have to slip into a very quick break. We'll talk about some of the stocks we've already discussed and a few more and get you this trading strategy ahead of trade today. Remember, it's set to be a strong opening with the implied pointing to an uptick, I believe, of 170, 180 points or thereabouts. Pull up that number before we, there, 176 points or thereabouts. Stay tuned. We'll be back before you know it.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year.
Back with India Market Open right here on NDTV Profit. And a clutch of notes coming out, and we'll address all of them during the course of the day. But let me get in our experts on the show this morning on air to try and assess what to do with the technicals and the fundamentals. Remember, the implied open should just come up on your screen for a second, simply because, like we said at the start of the show, that the deck is set for Indian markets to have some tailwinds today. Crude prices, FI flows, rupee strength, almost everything but for the Bloomberg inclusion is positive. So, on a day like this, Parag Thakkar, Kush Bora, gentlemen, thank you so much for joining in. I forgot to mention auto sales, and what a blockbuster July it has been. So, gentlemen, thank you so much for joining in today. Good morning to both of you. Usually I start with Kush about charts. You're starting off very high today, Parag bhai. You tend to book at higher levels. Could this time be different? Because FIs are now saying, hey, we've sold enough of India. Maybe we just want to take a sliver back.
And plus, results are also looking very good. And now seeing oil below 85 is a great pleasure. And so India 10-year will also fall. That will also help some, banks like PSU banks. SBI result is there on 7th. So I'm looking forward for that. RBI policy is on 5th. I think going is great. Setup is very good. Oil, I would say proxies for oil fall should do well. Pidilite is going to report results tomorrow. I think that is one big beneficiary of crude oil fall.
By the grace of God.
So paints and Pidilite kind of stocks and OMCs and airlines. So I think those will be the focus areas today.
But where will you book? That is, I think, that's what Neeraj is trying to ask. If you will, yeah.
No. So basically, see, we were in cash. We deployed in last 1 week whenever we got opportunity in various stocks, and I spoke about it also, right? Reliance and levers of the world or Pidilites of the world. So now we are sitting on 4.5%, 5% cash, and that we cannot do anything about now. Now we'll have to wait and see them. Hopefully, we'll keeping fingers crossed that market rise from here.
वो जब feeling आएगी तब पराग भाई खुद बोल देंगे कि आज मैं profit book करूँगा.
Exactly.
Yeah.
But let's find out on the technicals as well, right? Because the signs are that we're going to open positive.
Yeah.
And we're heading towards that 24,600 mark. The question is, when do we hit 25,000 again, or will money be taken off the table?
A bit of both. Why not a bit of both, right? I think that's the question that you were discussing just a while ago, right? कि हम ये तो कुछ बार बताएंगे. देखो आज ना profit book करने का दिन है.
देखो, see.
है. But let me also nuance that. आज partial profit book करने का दिन है.
Okay.
ठीक है. If you remember the whole of last week, we were talking about 24,500 as the level where Nifty can and in high probability reach. With the kind of opening that is suggested today, we will get there. I think the specific question that Hiral had, if I remember, is कि जो जुलाई का high है around 24,600 thereabouts, वो कब hit होगा? Most likely आज. But what I'm happy about is कि वो कब होगा उसकी बात कर रहे हैं. It's a when question and not an if question. So that's the heartening thing. That's the kind of change in approach that you're already seeing with the investors and the traders as well. So this is a positive sign. Now indicators have turned positive. 20 DM across. A lot of things are looking positive for the Nifty, even from a technical standpoint. Remember the most important number that I've been talking about: FII short covering or FII short position on the index. That's gone under 90, 89 right now. If it goes below 85, that's when I'll be more comfortable and this rally will have a more meaningful trend. But PCR at 1.36 and that's why it's a book partial profit. Everything is looking fabulous for the Nifty, even from the fundamental perspective, as you guys have already mentioned. Technically also things looking solid. I would not exit my Nifty positions. In fact, if anything, I will trail my stop losses to 24,200 right now. If we do get this 200 point bump up, maybe even to 24,400. So all in all, things looking positive for the Nifty. Today is not the day when you go out and go long on Nifty. You book partially, hold the rest. Bank Nifty is where you can still go long. 57,500, that number has not been tested, but we spoke about how Bank Nifty is a better long trade. So go long on Bank Nifty, bump up your stop loss to about 56,500 thereabouts. We've been speaking about that as a support zone.
Yeah, partly, I mean, like I mentioned, that if we've had some bit of data on the FNO side, which might point towards us hitting those extreme greed sides if we indeed have a rally today. It does look like that. So never know. There might be some capping of the upsides, just temporarily, if not permanently, if you will. Kush, so in a setup like this, what do you do with specific stock calls?
You go long, you go long, you go long. All three calls on the long side. There are pockets where you should book profits, and I'll mention those as well, by the way. But Monday, weekly pick. And I don't think Neeraj will be surprised at this. Dr. Lal Path Labs. The entire diagnostic space, Metropolis was a call that we, discussed last week, has been doing well, and he's rightly observed that this entire space has actually gained a lot of traction. Lal Path Labs stands out not only from a near-term perspective, by the way, guys, from a long-term perspective as well. Some very important resistance levels being taken out. So this could actually have a much bigger rally than my target, but we play for the targets right now. So 1985, 2090, these are your targets. 1825 is where you keep that stop loss. The other one is MM4 Jinx. Here too, we've had a good run over the last week, and 575, 605, these are your targets. 525 is where you keep that stop loss. Escorts Kubota. Now the reason I mentioned this is because we discussed this last week. Target 1 is hit. Today is the result, by the way. So book partially before the result. Hold the rest with about 3,000 as your stop loss. That was the initiation price. But you could still hold it for levels of 3,200 and 3,330. But mind you, results hai, to partially book karna banta hai. Now the two stocks, where you should book partially, if not fully. Auto numbers out. Mahindra & Mahindra did well. Our call just about 8 or 10 sessions ago has gone on to hit target 2 of 3450 as well. Then you saw some profit booking, but 3450 hit हुआ, तो यहाँ पे partial profit booking बिल्कुल बनता है. And last week's weekly pick, Krishna Foschem, about 10% target of 178, 179. That is hit. The stock still trades above that. Structure still strong. I would say book partially, but still continue to hold on. No. Krishna Foschem. 178, 179 thereabouts, closing price about 181. So yeah, you could still book partially and continue to hold the rest.
Okay, we'll get that stock. There you go. It's Krishna Foschem, currently trading at 183. But we were having a debate, Parag Bhai, this morning about which could potentially be the stock of the day based on earnings and fundamentals. And Divi's Laboratories was my contender.
There was no debate. I'm concurring there. I think
there's no debate. There's no debate.
No, but there could be stocks on the downside also, which fall dramatically and could therefore become the stock of the day. But having said that, what did you think of the numbers, specifically from the perspective of the fact that I think, obviously, Divi's does not rank high in your list, right? Because of valuations.
It's a great company, and it is one of the company which deserves high PE. Because it has long-term contracts, it makes 40% margins, and it has a very, very high entry barrier. So it is a company which deserves high multiple, that I don't deny.
And moving towards gross margins of 60%.
Yeah. So everything going great for Divi's.
So if you were to look at this, since you're saying that it's a strong company, etc., you won't buy it based on your valuation methodology.
Framework. Yeah.
But if somebody has a far enough time frame, is willing to wait. Is this a good company to buy?
Absolutely. 100%. No doubt about it.
You know, by the way, just for the record, the trailing PE of Divi's and the forward PE is a second factor, of course, that you can figure out. Both companies are showing great growth. Trailing PE of Divi's is way cheaper than trailing PE of Laurus.
Okay.
And in some sense, Laurus was always considered as Divi's as the big fish and Laurus slightly lower than that. I think they're changing now, of course, the decks, because Laurus incidentally has more scientists than Divi's right now. And Divi's is now on the hiring spree out there for that CDMO part of the business. But this commentary and this performance
currently
is very, very
72 times.
And in the last
Laurus
1 year,
is 90.
you have... but in the last 1 year, you have Laurus, which has outperformed the Divi's. So probably Divi's will want to catch up.
Probably got him. Will actually, could Divi's do that? Just before we go to Sumit, Kushbura on Divi's.
Book partial profits.
Profits.
Massively overheated on daily and the weekly setup. And by the way, the other name that you added, Laurus, similar structure. The only problem is what deep profit booking nahi aata hai. So even if it's 2, 3, 5% or thereabouts, you might still want to take some money off the table and then re-enter at lower levels. So strength apparent, but definitely overheated. Most likely you will get that. Book partial profits or at open on Divi's. Don't exit completely, and then you can add again the rest of the quantity.
Okay. Well, let's go across to Sumit Sarkar for trying and figuring out what is on the dealer's radar this morning. Sumit, good morning. Sumit?
Good morning, Neeraj. Firstly, it's PN Guardkill. Now, QIP has opened a couple of days back, and what dealers are indicating is that the demand is quite strong. The QIP has been fully subscribed. Multiple private equity and VCCs have subscribed to this QIP. To name a few, Tata AIG, Madhukela Ventures, Polycab's family offices, and a few Singapore-based offices have subscribed to this QIPs, what dealing rooms are indicating. For TIL, there are buy flows on the large HNI and desk, and few days back there was a large investor who checked into the counter. Madhukela family office bought shares here. Now what dealers are indicating is that there could be a corporate restructuring plan that is underway. A merger and a turnaround plan is in works for TIL, so keep an eye out for this counter in trade. For GE Vernova and Latent View, there were buy flows on the large HNI desk. Dealers were expecting strong Q1 numbers. For Alchem Labs, the buzz on the street is that the new CEO announcement is expected to come in anytime soon. This announcement could well come in with the earnings of the company. For Nazara Tech, dealers are indicating a management change very soon. The buzz is that the new CEO might come in Nazara, and this guy could be a global guy or a person who's currently holding shares in the company. And lastly, when it comes to SBI funds, there are buy flows on the PMS desk. Dealers indicate that the selling pressure from the funds are largely over for the moment, and hence if you look at the share price move on the Friday, the stock was down in trade but closed around 3% higher in trade.
So Amit, the other factor, and this is an interesting update, right? The cabinet approved that 84,000 crore Samudra Manthan scheme, and this is in line with the attempts to make India more self-sufficient energy-wise. Can you tell us about what this entails for the oil exploration and production companies?
Well, definitely it's a step in right direction that the government has taken. An outlay of 84,000 crore is something that they are deployed up to FY31. So this is not for 1 year, but up to FY31. And this aim is to enhance offshore oil and gas discovery and production in India. Now, how is the allocation that works out? 28,500 crore is kept for data acquisition. 43,200 crore is kept for drilling wells, where the government will provide for nearly 675 crore or 50% of the drilling cost, whichever is lower to the companies. And 10,000 crore is for laying common offshore infrastructure to facilitate commercialization of small discoveries as well. Now, the scheme has been in news for quite a few months, and finally it has been announced. And again, this is a step in right direction given the fact that India's hydrocarbon production has been declining continuously. So this could boost, or this could at least boost discoveries going forward. Now, and even in the past, if you look at, the government has taken multiple steps to increase the production of oil and gas in the country and to make this sector quite attractive. Firstly, they had opened up more than 99% of the no-go offshore acreage of exploration. They passed the ORDA Act to ensure consistent regulation. They also making the fact that there would be higher prices for gas going forward. And lastly, they have also changed the regime from profit to revenue sharing. And these all moves and the recent 84,000 crore deployment will definitely be sentimentally at least positive at this moment for ONGC and Oil India. But it would be interesting to see how much how much of this actually gets deployed and how much of benefit actually come in to ONGC and Oil India going forward.
All right. Thank you, Somit, for that. This is a very interesting piece, but let's get in. Prabal Sen, Vice President, Equity Research at ICICI Securities as well. Prabal, welcome to the show and a very good morning. My question to you is, we're talking about the Samudra Manthan scheme, 84,000 crores. That's the outlay up to FY31. Now, this scheme has been in the news for a few months. The question is, now that the approval has come in, what is the fine print actually telling you with regards to the flows that we will see in terms of, listed companies as well?
I think the fine print is something that we still have to figure out. We've only seen the PIB press release, which highlights the broad contours of the deal, which is pretty much what Somit was summarizing. The idea very clearly is to reduce the exploration risk for what are extremely high risk and high cost exploration activities. If you look at the average cost of drilling a deep water well, it can be anything from 1,200 to 1,500 crore rupees. So with the government coming in and saying, all right, I'm going to reduce your risk by at least 40 to 50%, depending on, what the final cost of the well is, because they've capped their share of contribution at about 650 crore, from what I understand. So obviously, somebody who was looking to invest about 1,300 crores, if he sees 650 crore actually getting reduced from it, his propensity, and at least that is the intent, that his propensity to basically go in and take this high risk option and do this drilling basically improves quite substantially. I think that is the major intent, and that's a major change from what previous exploration regimes and what exploration bids have been like. In addition, the kind of offshore infra that has been planned basically for small discoveries to be able to share the offshore infra, I think that is also fairly significant, because what obviously happens is that the economics then of commercializing relatively smaller discoveries on the in the offshore area, because deep water and ultra deep water, as I said, the drilling costs are fairly significant. So if you can at least monetize the infra more easily because of a common infra being shared between multiple players, I think that is something that is also a significant positive. Plus, in any case, the oil field regulation notification that had come last year, or rather a few months earlier, that has also improved some of the terms in terms of having pricing stability, not no changes in taxes over the revenue period, and so on and so forth. So if you combine everything, I think the government is making a concerted effort. How it results, whether it still ensures or leads to more multinationals or more global majors coming in and sharing and deploying their technology for deep water and ultra deep water, that's something that will be a key monitorable.
Interesting. So then, Prabal, can this, therefore, and good morning to you, this is Alex here. So can this be described as a step in the right direction, but something that is likely to require a significant gestation period before it bears fruit? And if you have a sense of how long you might have to wait to actually see some results from this?
Okay, so 3 questions. I think your first and third question is, does this have a long gestation period? Absolutely. You only have to look at the time that it has taken for the KG Basin assets by both Reliance and ONGC to actually come to fruition from the time exploration actually started. Deep water and ultra deep water projects, unless it's a single field and it's a relatively shallower field, if they are actually deep water assets, just drilling exploration wells, delineating the reservoir area, finalizing your reserves, it's a 5 to 7 year exercise. It's not something that's going to happen in a hurry. So in that sense, and whether it's a step in the right direction, absolutely. I think the government is extremely cognizant of the need, and obviously this current conflict probably has reawakened the need to sort of reduce dependence on imports. We import about 85% plus of our crude requirements. So even if we can make a dent in it to the extent of 10% over the next 5 to 7 years, that itself will be a significant boost both to our energy requirements as well as reducing our import bills as far as crude oil is concerned.
Yeah. Thanks so much for joining us, Prabal, and for your perspective. Always a pleasure speaking with you.
Thank you so much.
Parag bhai, not necessarily just the oil exploration companies, but the companies that contribute to the infrastructure, drills, etc., right?
Yes.
And the rigs.
Yes.
What are the opportunities and what are the few names that come to mind when you think about these?
So Jindal Drilling, Maharashtra Seamless, CMAC, these are the names which even on the Great Eastern Shipping side, great offshore side of their business, where they have rigs. So all those, direction is very clear, right? Whether it is electrification, whether it is biofuel, or whether it is more exploration of oil and gas. This Strait of Hormuz disruption has given a wake-up call, right? That we should explore more and more oil and gas. And so the government is moving in right direction. And so all these ancillaries, which are suppliers to exploration, like Maharashtra Seamless of the world, and I took the names. So all this will benefit in over a period of time.
So I'm sure that this is something that will be on the minds of a lot of people. And I'm not just talking about this government, but multiple governments have not invested in exploration, right? Why is that? And we don't know. We have this massive peninsula. We don't know whether we have oil and gas, right? It's costly. It's a costly affair. But we spend a lot of money on the exchequer with regard to the imports as well. So is there a technical reason why we don't?
No. So basically, we have seen many years ago, what we had always observed was that there was huge amount of capex being incurred by companies like ONGC without a significant increase in the proportionate increase in the production. I hope that will change now. Let's see. I hope that capex goes into right direction and really we increase our oil and gas production.
So the deck is set, but I think the markets may wait for the proof over a period of the next 12 to 18 months or maybe shorter before really taking a strong call. But the oil exploration, the picks and shovel companies could also be in for good music if indeed some of these orders turn out to be true in the initial half of this 4-year period. Okay, what is actually showing the proof is autos and strong numbers. And Puneet Johnson first to lay it out as to who's scored and who's not. Puneet, I think the who's not column is what? Empty?
Well, just one pick, and that's also we are nitpicking there, and that's VECV, because the growth for the other relative peers, is much higher compared to Ashok Leyland and Tata Motors. CV have really outperformed over 30% growth. VECV was a miss here, but let me start off with the key points that we saw, that most companies actually met or beat estimates, while we've seen Hyundai Motor Corp and the export growth actually being very, very strong in this particular quarter, and hence that is one of the biggest outperformers today. You saw a move already post results on Friday. Today might be one of those other ones that you have to watch out for. Thirdly, and very importantly, what you've seen is that the tractor momentum continues. So the first 4 months are very crucial. They've recorded very strong growth for both Mahindra as well as Escorts in this month, over 20%. So that's very positive. And also the EV sales momentum. For Mahindra & Mahindra, it's up 125% on a YY basis. For Tata Motors, up almost 114%, and these are now the top two players in the EV industry, commanding 60% market share. Finally, for Maruti was a very interesting trend. They have come in line, but the export growth has actually been flattish. So they've recorded the highest ever domestic sales in the month of July, and hence this is the layout. When you look at the numbers, still awaiting numbers for a few like Bajaj and TVS, but Hero and Eicher were very strong in this month. For the four-wheeler pack, you got all the numbers coming through. 20 to 59% growth is what we've seen, the highest being for Tata Motors. The third consecutive month for over a 55% growth that they've seen, and that momentum continues for the Sierra maker. Also importantly, what we spoke about in terms of the CV side of things, despite being a smaller player, VECV at 16%, while Tata Motors CV has come in at 37%, and we just had Ashok Leyland come through at 33% growth, and tractors we mentioned has been good as well. So overall, Hyundai was definitely the key outperformer. The miss was on VECV, while the rest have come in line with the higher growth estimates that we were working with this time around.
Okay. And watch out for these. And by the way, I know Kush mentioned that it might be a good idea to also look at taking some chips off the table. Puneet, thank you for that. Taking some chips off the table for Escorts, but never know with what M&M has shown in the results and what the monthly sales numbers are also looking like. Never know if Escorts commentary could be interesting. So just that caveat. But having said that, you know, I wouldn't say what has done well, what is not, Parag. What is the first amongst equals when you look at all the show and the splendid show that the auto companies have done? Absolutely. Where is there a good mix of good sales momentum and valuation comfort? Because you're a value investor.
Yeah. So CV is actually, I'm so happy that, you know, in this kind of environment of geopolitical uncertainty, CV sales are going up so much, you know, in spite of the diesel price hike also. And now that oil has fallen, now we'll not see diesel price hikes. So I would say that Ashok Leyland, Tata Motors doing so well, even tractors doing so well. When there was a prediction of a below normal monsoon, and actually monsoon is below normal. And I think Mr. Anish Shah has said that he is expecting 5% tractor volume growth for the year.
वो आराम से हो जाएगा ना?
हाँ, वो तो आराम से ही हो जाएगा. So basically it was expected to be much lesser. Second half was supposed to be very bad in the beginning. When the estimates were starting. So that is why I would say, we would like to hear what Escorts are saying, but I think two-wheelers were already doing well. There's no problem in two-wheelers. I think Maruti volumes were very good, but the results were bad because of the 300 bips margin compression. Yeah. But I would say that overall economy is doing very well. There is no doubt. Auto sales are good.
Let me ask you this, if Maruti Suzuki opens weaker, which it might well do, they've done that change in the supply
that is
agreement as well, which is they've moved from a quarterly settlement to a monthly settlement. And so when the input costs are going up, they will be the first to take a hit. But when the input costs are going down, they will be the first to benefit. If it opens lower, is it an opportunity to buy?
I would say yes. If it opens more than 2.5% down, then it might be a good buying opportunity, because structurally, after GST cut, the small cars have done very exceedingly well. Yeah. And so Maruti volumes are very good. It is just margins which are the problem.
And if I were to ask you to compare valuation-wise and potential-wise, now Maruti Suzuki has got 7 cars or 7 products that it will launch till FY30. But in terms of pipeline, Hyundai has a bigger pipeline, right? Yes. And valuation-wise, it is not as demanding as Maruti Suzuki. Correct. So if you compare these two, number 1 and number 2, which looks better?
I think both are going to be very good. Hyundai also has passed through all the problems. You know, there was fire in their plant. Now their new plant has started. Many products are coming up. I think both are looking equally good. And both have same kind of margin pressure, which is there, right? Because of input costs. But I think now that the major risk of petrol diesel prices going up significantly in India is now off the table, at least today. I think Maruti and Hyundai can be bought on any dips.
Okay, the market's kick-starting trade, and let's just mark some of the usual suspects of the day today. So, want to keep a keen eye out for, of course, what the markets will do, and would likely start off higher, maybe more than 0.5%. Divi's Lab should come up on your screen first, and let's see if there is a thumbs up that the market is giving to it. Yes, it is 5.5%. Bring up Laurus as well, and I wonder if the momentum continues there, because CDMO might per se be doing okay for itself. Then bring up Muthoot Finance, bring up ABB, both of these could actually have slightly corrective moves, so keep an eye out for them. 10%, that's a very strong, sharp downtick for Muthoot. It may not be 10%, but it may be strong, so keep an eye out for that. And bring up ABB, not really, despite the margin miss. Let's wait and watch if this changes for itself. Novama, good results and good brokerage note commentary on that one, so keep an eye out for that stock. Maybe it does okay. CleanMax Enviro, very strong set of numbers. Revenues up over 2x, profit pumps up, and CleanMax could actually do well, so keep an eye out for that one as well. Keep an eye out for Maruti and ITC too. CleanMax is up 6%. Maruti and ITC may not have such large moves, but keep an eye out there. And Z could be in focus, as could be Glenmark Pharma. I wonder if Z has some moves there or a big sharp downtick, and we'll talk about this. And then Glenmark Pharma. For now, 1% higher. Alex.
I'm just checking. You've rattled through quite a few, but I'm wondering if you checked ABB India, overall weak on account of margin pressure. There's also Persistent Systems, and we've got the management that we will speak to, or rather Neeraj will speak to later in the day, is up about 2% or so. You have Concord Biotech. PAT is up as much as 33%. Nilkamal, the top line growth was nothing to write home about, but they've benefited from, so there you go. They seem to be bearing the brunt of not a very good top line performance. And Urban Company, I'd be curious to find out what the reaction is, because it has beaten expectations on the top line front. Let's talk about some of these stocks with Kunal Rambia, who is the founder of The Street, joining us right now. Kunal, very good morning to you. And it looks like we're opening up pretty well. The question is, what are the key levels that you're monitoring specifically for the benchmark as well as for the Bank Nifty?
Morning, Alex. Thanks for having me on the show. So as far as Nifty is concerned, we have seen again 2.5 to 3 months of consolidation. And probably today that consolidation seems to be coming to an end. So 7th July high, which was 24,530, has to be taken out decisively on the closing basis. So I'm watching out for the breakout of 24,550 on the Nifty. If the Nifty manages to close about 24,550, I think this massive consolidation breakout is now due, and which is likely to take Nifty to 25,500 to 26,000 levels, which is significant really from the here. But as far as Bank Nifty is concerned, I think more or less sideways consolidation still continues. The range to watch out is 58,000 on the higher side and 56,500 on the lower side. Closing about 58,000 will probably show some breakout on that Bank Nifty also.
Okay. Kunal, good morning. Couple this up with your ideas for the morning.
Morning, Neeraj bhai. So the first counter is Bombay Stock Exchange, BSE. After correction from the peak, the counter, which was down by 22%, is now showing some reversal and the good momentum. So with the stop loss of 3,500, one can go long on it. The first target is 3850 and the second is 4,000. And the second counter is GAIL India. Now, again, this GAIL, after a massive correction, is showing first sign of breakout on the weekly chart. So with the stop loss of 170, we initiate a buy here, and the first target will be 200. Mind you, on both the counters, the targets can be really positional. So trailing stop loss will make sense rather than booking profits.
Okay. All right. Let's talk about Urban Company, because on the top line, it is a beat and pretty substantial uptick, 43% increase in the revenue. Let's talk about why this has come to pass. And in fact, it is the selection for the big brokerage call of the day. Morgan Stanley has turned bullish on the company. It's upgraded its previous underweight call to overweight. Let's find out what the target price is and what the rationale is. Mahima joining in. Mahima?
Right, Alex. So they've kind of double upgraded the counter to overweight from underweight earlier and hiked the target price to 165, which was 128 earlier. What they're saying is that structurally, expansion in its growth rates in India consumer, excluding the InstaHelp and international business, is very strong, and that's something that they are liking. They are, the overall confidence on profitability by the management across segments has improved, along with strong execution. They are assigning higher weight to execution, which is an internal factor, versus competition, which is an external factor, especially for the InstaHelp business. Profitability targets could be achieved sooner than the management guidance is something that they've stated, and elevated losses in InstaHelp could force consolidation sooner. Plus, they also believe that ROC to normalize at 20% on a steady state for Urban Company, and they're saying that the starting point of valuation has become reasonable following a large underperformance that we've seen in the counter. So this is the overall view of what they make of earnings, and also as to why they've gone ahead and double upgraded the counter.
Now 3.5% higher. Yes, tactical call as well on urban companies. So keep an eye out for this one. Could well have some wings behind it. Kush Bora, maybe not too much in terms of chart data or otherwise, but urban company, and if not urban company, any of the other platform plays, because Eternal, etc., all of them have had a bit of a rally.
Yeah, so Eternal continues to remain as, the top pick. Any decline towards, let's say, about 285, 290 should be taken as an opportunity to go long from a near-term perspective as well. But positionally, this is setting up nicely. Urban company is a very interesting, curious case. There is a triangle formation that is in place, and the range has gone very, very, very narrow. Resistance is at 135. Good to see that it's opening about 136 thereabouts, right? So if it actually closes above this, then a medium-term, pattern breakout is on the anvil, on the cards, and that could actually take the stock higher. So I will watch for a close above 135. If you have a position, continue to hold. Keep your stop losses around 128, 130. That's the support zone.
Okay, so that's with regards to urban company. IT has had a spectacular month if you have to look at the month of July itself. And you have a Bank of America global research which has come out of the note. And what they are saying is that the services is shifting narrative towards token optimization and AI ops as a new revenue lever. Now, the pricing pressure has seen persisting in the last 1 to 2 years as cheaper vibe coding tools see wider adoption. US midterms and a potential Anthropic listing has flagged as a key swing factor ahead. Their top buy ideas remain unchanged. They have Genpact, Coforge, LTTS as well. Anything, Parag Bhai, in terms of IT after that run-up that we've seen in the month of July?
So basically, IT helped me a lot in that run-up. I have sold. So okay. So because I got 15-20% return in a very short time frame. So now actually I'm equal or a little bit underweight IT. But so I would say that there is a lot of confusion around. So IT, I used it as a technical thing. But so from here on, we'll see how things play out. Again, the chip stocks have started moving up crazily. So I would like to wait and watch now.
Okay, so wait and watch when it comes to IT players. And I mean, today's session as well, no major moves that you're seeing right now, at least in terms of pre-open. But I think one stock that we need to watch out for is a Z Entertainment. Now, what has happened is they're going to issue around 24.95 crore warrants to promoters group at 126 rupees per warrant. The promoters will be investing around 3,143 odd crores in the company. And the markets are waiting for this. Were actually waiting for this since quite some time. But there is an overhang coming in over here. SEBI has debarred the company and the promoters from accessing the markets. And this is on the back of violations of provisions from the SEBI Act. In terms of debarment, you have Z, which is for 2 months. You have Puneet Goenka for 12 months and Subhash Chandra for 12 months as well. So I think that's the reason why you're seeing this 10% kind of a downtick as well. Kotak, however, has upgraded the stock to add from a reduced. They've actually hiked the target price to 130 from a 90. And what they are saying is that the company is actually setting the stage for value unlocking on the back of the warrant issues as well. Parag Bhai, any view on this?
So I don't own the stock, so but please take my view with a pinch of salt. It is a very confusing stock always. A promoter always wants to keep money, but something or the other keeps happening. And that's why even after promoters committing money, stock is down 11% right now. But I would say that the sheer market cap of the company looks very attractive. And I think value unlocking in Z5 and all those things can happen.
Yeah, I think everyone's betting big on the music business value unlocking as the medium term.
Those kind of things can easily happen in this.
Should I ask you on the charts, Kush? I saw your grin and I said I should.
Why? No, not a stock that I have preferred or recommended, even when it goes up. Not something that I would buy. Again, not a stock that I would invest in, and hence not a stock that I would trade in. If you do want levels, then yeah, 117, 118 has seen rejection, or the stock has seen rejection from those levels multiple times. Selling always comes with some news and then heightened volume action. So for me, this is not a stock that I would really be keen on trading at all.
What about Muthoot? And I want to ask this to Kunal as well, because that stock just bring it up 8% lower, very sharp downtick. So between Divi's being the winner of the day to Muthoot being an accident of the day, I think that prophecy is turning out to be true. So good stuff there. in terms of at least able to identify. The question only is how do you trade this one? Because gold finance stocks are per se strong stocks. Parag bhai, is this a question of now मैं भी gold finance करूंगा and therefore everybody doing it and therefore heightened competition?
You see presentation of every NBFC, L&T Finance, Piramal Finance, any NBFC,
Finance.
everybody, IFL तो was
बरसों
doing,
से, हाँ.
but now everybody wants to do gold finance. See, whenever a business does so well for 3, 4, 5 years now,
Margins
it
कम
attracts so many competitors that then the margins. So this time you see, right, Muthoot 300 bips margin contraction. So I think the best days of gold finance are behind.
Wow, that's a tall one. And
But Parag bhai, I must say that you never really liked gold finance.
Yeah, if you remember, on the day when Muthoot declared phenomenal results, that day also I told you, right, that tonnage has not gone up.
Yeah.
That means the same client is topping up the loan because gold price has moved up.
Value
so loan
is
to
up.
value increases. So actually, inherently, I have great respect for the company. They are the today there is a statement of Mr. Alexander Muthoot that what SBI is to banking is like Muthoot is to gold finance. So I think they have done a phenomenal job, but it's just that the business is so good that it is attracting a lot of competition now.
The point is, I wonder if Manappuram also goes off. And remember, in Manappuram's case, Bain has 18%. They want to hike more, presumably. But Manappuram too could suffer. Kunal, very quickly, Muthoot or Manappuram, how would you trade them?
Sir, I'll in fact wait for both the counters to come down even by 10 to 15% more to go positional on it. For time being, it's a sell on rise kind of formations on the chart.
Very quickly, because it looks like it's opening positive today. Would you take money off the table?
On Bajaj Finance?
Yeah.
For sure. I think that's turning out to be the trend for a lot of these names, and hence I think a profit booking on Nifty is not a bad idea, but a pause. Remember, this is not where the rally tops out in all likelihood. We will head towards 24,800, the 200 DMA, and then 25,000. So I remain very constructive on Nifty as well. But like I said, book partial profits, hold the rest. Any kind of declines and pullbacks should be taken as an opportunity to go further long.
Okay. Kunal, in terms of OMCs, any trade that you see right now, 30 seconds.
Or other oil sensitives?
Yeah.
Not really. BPCL is still looking good to me with the breakout at around 322. This is gap up opening. So with the stop loss of 310, one can go long, but this is the only counter which I'm trading right now.
Okay, what about Interglobe Aviation while we're at it? Second top gainer. Buy on dips.
Anytime you get
Targets?
a dip, buy. I mean, positionally, this could hit 6,000 and higher. Interglobe is a buy on dips for sure. Very strong structure.
The beauty, and I think Parag Thakkar also mentioned this, you get Indigo at a lower price only when crude prices are higher. It's such a strong franchise, is doing so well. No surprise there. Crude went to 90, Indigo did to 4,800, now back to 5,300. Beautiful trading play out there in Interglobe Aviation. But here's how the markets are starting off this Monday morning when the deck is set for some positives. I would keep a keen eye out on the rupee as well. We haven't quite spoken about it, we'll do that. 150 points. Okay, this is, I would say, a bit of a subdued start relative to what I was anticipating. Let's see if this picks up a little bit of steam. Banks are a bit soft because some of the bond holding will actually be correcting because Bloomberg is not including India in the bond index, and therefore the 10-year might also have a bit of an impact. But I wonder if what else is contributing. Autos could be a really strong index today. Keep an eye out for Nifty Auto. Also pull up Nifty IT and see what that is doing. Nifty Auto 0.81% higher and Nifty IT 0.7% higher. So what banks are not doing, some of the others are compensating. Now we move up slowly, 0.7% now for the indices. Let's get the heat map up on the screen. Mid caps and small caps are doing well. The breadth is looking solid. Look at that green on the screen. Not too many losers, that's the first thing. Some defensives are down. Sun Pharma, Cipla, Nestle, Titan, and ONGC is down because crude prices have fallen. What is gaining? Interglobe Aviation, no surprise there, 3.3% higher, really strong start. Bajaj Finance, something that Alex pointed out, 2% higher. ITC, the worst of the quarters we know was this. And now maybe the street likes it because I think some of the brokerages have said that don't judge the year by this quarter for ITC. The year might look materially different than what the quarter has looked. The street is giving a bit of a thumbs up to that, 2.37% higher. Shriram Finance, Infosys, Dr. Reddy's, TCS, Adani Enterprises, Tata Steel. that is the cohort. But effectively, everything is doing well. I think in terms of newsmakers, ITC stands out, Alex, and you have to give thumbs up to Indigo for just the resilience
100%.
that this player has this time around, even when crude prices are volatile.
And it's a pretty picture. It's being supported. Looks like, at least for now, you don't have to worry too much about downside pressure. Let's see if that holds through the session today. Let's take a look at the sectoral indices as well, just to see. It's going to be a green screen completely, or well, nearly completely. Media is down, and this is largely on account of Z. It's probably down quite a bit. We'll get to that in a bit. Consumer durables, pharma down about 0.1% or so. No big losers here, and that's something to take heart from. Metal is doing well, up about 1.3%. FMCG, PSU banks, IT, auto, you name it. All of those indices are trading positive. Quickly, let's pull up the mid cap and the small cap index just to see. The breadth looks incredible. So therefore, you will likely see that as well. Okay, 0.5% tempered gains for the mid cap index. Pull up the small cap index as well. 0.7%, more or less keeping pace with the benchmark Nifty 50. Let's jump straight into stocks now, and let's talk about earnings reactions front and center. Divi's Laboratories was expected to be a blockbuster set of numbers. It beat that, and it is a bit of a tempered reaction. So therefore, it was a strong contender for stock of the day. It hasn't really panned out. Just goes to show that you can't predict these things. Urban Company was a beat on the top line. It is reacting positively. 43% uptick, remember, in the top line. Blue Dart Express, Gujarat Ambuja Exports, turnaround quarters for both of these. Blue Dart is up as much as 7%. Keep an eye on this one. Corona Remedies, operational efficiencies have aided the numbers. Concord Biotech also posting PAT uptick of 33%, up in the green but not significant gains. Clean Max is a strong performance in all probability. Okay, it's up about 0.7% or 0.3%. Nilkamal, not a very good set of numbers with regard to the top line growth. The PAT number has improved because the EBITDA margins have improved. Muthoot could be the accident of the day. Let's pull that up and see where it's moving. Down nearly 10%. And possibly could face further selling in the rest of the session today. Watch out for this one. Margin contraction is something they've seen. Persistent Systems as well has seen margin contraction. Big miss, in fact, on margins. ABB India, overall weak. Here too, there's a little bit of pressure on the margins, but the stock is up about 2%. Other stocks, let's move beyond earnings and talk about some stocks here. Oil sensitives, Asian Paints, Berger Paints, up in the green, understandable because crude oil prices have come off. Indigo not doing too much. OMCs, BPCL, IOC, let's look at those if we possibly can and see where we're going. If not, let's move on to Adani Ports, or rather Adani Power, Tata Power, solar module players, and these are on account of the PM Surya Sarovar Yojana that has been announced. The stocks are up more or less at this point, but this is more to do with the market than anything else. Fertilizer stocks, M&M, Escorts, Kubota, the extension of the PM Kisan scheme. Remember, some of these tractor manufacturers have actually posted pretty decent set of numbers, and so okay, so these are the aviation companies that I was talking about earlier, Interglobe Aviation. But M&M, Escorts, Kubota, PM Kisan scheme uptick is there, and also the numbers are pretty good for these companies. ONGC, Deep Industries, CMEC, this is on account of the Samudra Manthan scheme. Deep Industries understandably is gaining as much as 4.5%. We spoke about the picks and shovels companies that could benefit from this update. Hyundai Steel Strip Wheels, and of course we'll talk about the rest of the auto pack, but these two in particular stand out on account of pretty strong set of numbers in the month of July. And Neela Space Ganesh Housing, this is because Ahmedabad has actually been confirmed as a host for the 2030 Commonwealth Games, and that is looked at as positive for the Gujarat-based real estate players. You have Z, the promoters are set to invest money through a warrants issue, but there are a few headwinds that it could be facing. And finally, Varun Beverages, there you go, so it's down about 8% or so. And finally, Varun Beverages, there is a note from the FSSAI to drop the energy drink tag. It's not having too much of a bearing. More than anything else, I think people have gotten used to their fixes, Hiral.
Probably, I mean, that's what everyone's looking at. But I think whole host of stocks that Alex has already mentioned. The only ones I would want to add is the Aarti Surfactants, which is reacting to numbers, and Clean Science. Both of these, I'm not sure if we spoke about them as well, but Aarti Surfactants locked in upper circuit Clean Science is another 6.5% up move coming in there. Latent View, which is down around 6.5% as well. And you have other names like Aditya Vision, which is down nearly 4 to 5% as we speak. But the way markets have opened as well, Kunal, let me take this question with you. Anything that comes to your radar where you're seeing that momentum, which could be an interesting call for today?
So again, I'm looking at my old recommendations, which are Chennai Petro and MRPL. See, Chennai Petro was in sideways consolidation since a couple of days, and again there was some kind of correction in the recovery. Today, this counter is up by around 4.5%. I think this momentum still again continues. So with the new stop loss of 1260, one can definitely buy this counter, and the targets can be 1400. And on the MRPL chart, again, the consolidation breakout, or say rather, I would say cup and handle breakout on the intraday chart looks pretty strong. So with the stop of 170, one can go long, and the targets can be 185 to 190 again.
Okay, so that's with regards to where MRPL goes. Kush, likewise, anything that's coming to your radar as well right now? Because, I mean, few of the, like ITC, for example, it's interesting. Likewise, at Dixon Tech as well. That stock is down around 2% right now. What are charts telling you?
Yeah, just a quick word on the indices, if I may. So far, whatever I've seen, I know it's been only 5-7 minutes to open, but so far, whatever I've seen reinforces the view that, you should book partially and, still continue to hold because the texture remains strong. Because look at the 24,500 call option and put option. There is a very strong straddle that is building up. Of course, tomorrow's weekly expiry will reset the PCR, which is gone from 1.36 before open to 1.39 right now. That's okay. But for now, seems like 24,500 will be the pivotal range, but as long as 24,300, 400 zone is held, previous day's closing zone is held, I think the uptrend could well continue. A lot of stocks are starting to see profit booking. Divi's, by the way, did open actually about 5% higher, about 8,500 was the opening price, and then it's seen some profit booking, and in fact a recovery as well from there. So could well still be the stock of the day. A lot of time to go. So yeah, now coming to Dixon, there is some profit booking. Immediate resistance at about 14,500. So it's more of a hold, not a fresh addition. ITC, I prefer momentum. It hasn't garnered yet any. Maybe once it takes out a few key resistance zones, about 300 or thereabouts, maybe we'll consider. Right now, if you're a long-term investor, you can take Parag Bhai's view and with all your due diligence, consider.
My ITC is my thumping the table.
Oh, there you go.
Thumping the table.
No, let the camera come to Parag.
Thumping the table.
Can we have Parag Thakkar on the camera?
No.
With the table.
Of course it's okay. Thumping the table by.
ITC is
thumping the table by. Yes.
Look at that, Parag.
But then Dheere thump is not working.
The worst is over. I think now from here on every quarter you will see improving margins because the 75% of their product portfolio they have taken the price hike by now. And this was just the first quarter. So I think at 5% dividend yield, 16, 17 PE, when in US Philip Morris is trading at 26 PE, I think it's a great bargain. A real example of a great franchise at a very, very reasonable price.
Point noted. By the way, a stock that hasn't done too much, so I'll, Kunal so Kunal and Kush will not like it on the charts, but that's fine. ITC, as Kush said, they will take Parag Thakkar's view, and I love that. By the way, the producers, great job on that footage out there, or that quirk that we've done out there. Great. Thank you so much, gentlemen, all of you for joining in today. Really appreciate your time this morning. Focus on Narayana Health. They've reported strong revenue growth. I think maybe margins were a bit lower than what was anticipated. But before we get the management in, let's get in Varsha, my colleague, for more details on the quarter. Varsha.
Well, yes, company did see softer margins because of the UK integration issues. Because UK, if you see the acquisition that they did, the EBITDA margin hovers around 8 to 9%. It will take time, for company to get into the overall EBITDA margin. Now, India business, if you see, remains healthy. Aggressive capacity expansion has been underway. They are building almost 7,600 plus bed network by FY30. Domestic revenue, if you see, grew almost 17% year on year. Even international business saw almost 58% growth. Onto the capacity expansion, the current operational capacity stands at around 5,775 beds, but they are targeting 7,600 beds by FY30. So huge capacity runway when it comes to Narayana.
Okay, Varsha, well, let's get in the management to try and understand what went behind the quarter, but what could be the outlook ahead. Sandhya J, who's the Group CFO of Narayana Health. We talk to her every quarter. We love having her on the show. Sandhya, great having you. Thanks so much for being here. Appreciate your time. This is Neeraj here. Good morning. Let's talk about the positive first, right? And nobody is doubting the ability of the healthcare firms or the hospital companies to show revenue growth. But what you've done this quarter is very strong. What led to this? Is it the UK acquisition which is the primary contributor, or are there other factors at play as well?
Good morning, Neeraj. Thank you for having me here. Overall, I think we've reported our highest ever revenue, even on an organic basis, keeping the UK effect out. Most of it has come on the back of a, if I can say, knockout performance from our India business. We've grown 16% year on year in the India franchise, with the caveat that there has been no bed addition. So the entire growth has come on the back of throughput and organic capacity utilization and higher order procedures. Cayman has also contributed because the new hospital has fully ramped up, and therefore we've had good performance coming both from Cayman hospitals as well as from the insurance segment in Cayman, which has almost tripled. It was a very low base last year, but this year is almost tripled. UK had been slightly weak, but it has been weak for the entire industry. One, because of the weather-related disruptions that the country has seen, and as well as some amount of fiscal reprioritization by the NHS. But we're reasonably okay there as far as we're concerned. So overall, I think we've delivered a revenue of 2,700 crores. While we await the numbers for the current quarter, I think Narayana was the second largest healthcare operator in terms of revenue for Q4 for India.
Congratulations.
Consolidated.
No, that's a landmark, Sandhya, and congratulations for that. And I think the street is also taking a note of that. But having said that, the bottom line, and you've explained certain aspects with regard to UK that were a little bit soft, right? So I think a lot of investors and the street at large would be focusing on when that PAT growth will catch up perhaps with the top line growth that you've showcased, and what are the factors that you see panning out in FY27?
Sure. Now, as far as India business is concerned, I think the margin has been very, very healthy. And we've almost, this has never happened that we've delivered near Q4 margin in Q1, because Q1 typically for healthcare is a seasonally weak quarter. So typically we see a margin dip from Q4 to Q1 across the industry. So I think the India business is quite well poised. As far as Cayman is concerned, again, the hospital segment has fully recovered. The insurance will take some time. Where we are having to catch up in terms of margin, one, of course, is UK. Now, UK, we are still in single-digit margins. We will be able to expand it to double digits in line with the UK industry average. It may not catch up to where, say, an India margin is, but we have a headspace there, and we'll have to work on it. And there is some work for us to do in both the insurance businesses in India and Cayman, where they're very early stage businesses, and therefore there is a level of cash burn that these businesses are experiencing. So in the medium term, I think both insurance and UK will catch up, and our PAT will improve.
Good morning. This is Hiral on this side. So my question to you then is, I mean, if you have to look at the way business has performed, taking the UK business into perspective, what is that roadmap going to look like to actually lift your UK margins and get them closer to what your India business is clocking right now?
So I don't think UK as a market operates at the type of margin profiles that developing markets like India operate. If you see the rest of the competition in UK, they operate in mid-teens. Now we are in high single digits, 8 to 10% is the EBITDA which we are clocking at the moment. So I think that's the kind of headspace that we will have to catch up on. There are two important factors that we are working on currently. NHS is the dominant payer for us, which is a very good, strong payer, but we are diversifying into private pay and insurance. So that is going to give us some headspace in terms of margin improvement because they come at a higher realization. And we're also working on the cost side, given that we have a very strong technology and platform which enables us to operate far more efficiently, as you can see from our performance in India and Cayman. So we're working on taking that technology and platform into the UK, and that is also going to give us headspace in terms of margin. It is a medium term kind of journey, so we'll have to work on it, and over a period of time we will be able to get there.
So what's the timeline that you're looking at to get the margins there? Or if you have to look at the next 12 to 18 months, where do you see that normalizing?
So over the next 12 to 18 months, we should definitely be able to see the trajectory of improvement.
Okay.
But for us to really reach the end state, we will need more time because the changes that we are talking about are structural in nature and they take a reasonable amount of time to fall in place.
Sandhya, the other aspect is the average revenue has gone up, and this is obviously a factor of the mix as well of what you're providing, right, as services. What is the trajectory that you anticipate? Do you think that there's a possibility to push this up even higher?
A large part of our ARPIP improvement is coming from throughput and better mix. For example, we are now doing the largest number of robotic cardiac surgeries in the country. And we are doing very high-end transplants. I think we've spoken about it earlier as well. So there is definitely a very important mix-related benefit that's coming. But also, if you see from Q4 to Q1, we've more or less, there is no change as far as the ARPIP is concerned, because we're also trying to see how we can stabilize the ARPIP at the current range and be able to drive greater throughput and volumes through the system. So I think it's we are hoping that we have to look at overall volumes, overall growth, and continuing to sustain the margins and not break it down into what's happening with the ARPIP or what's happening with the individual parameters.
Point actually, and so therefore let me come, and I know that we've spent quite a bit of this conversation, Sandhya, focusing on the margins, but I think that is the critical aspect, as you've just highlighted as well, right? So for your India EBITDA margins, which stand at around 25%, this is pretty much the highest that the sector is reporting. And so the question is, are you able to push that higher? Or is this the very peak of what you can achieve? Is there more in the way of efficiency levers that you can utilize?
So without making any forward-looking statements, there are two parts which we have to be cognizant of, because many times we tend to get carried away with just talking about EBITDA for hospitals, but hospitals have a huge investment that they need to make. And therefore, if you look at the PAT per se, hospitals operate between 11 to 15% PAT. We've operated at 13% for this quarter. So, which means that there has to be a steady improvement in EBITDA to create that PAT, to create that cash flow, to be able to invest. And the country needs capacity. So, I want to set that context, on the frame of talking about EBITDA. But just coming back to our own performance in terms of EBITDA improvement, there is scope to improve for sure. Because if you see, one of the reasons why we've seen this good margin improvement is because we're doing more and more volume with the same capacity, and we are not having any capacity addition coming up in the next 2 years. There is a hospital commissioning in Q2, but that's a very small hospital. Therefore, if we are able to push through more within the existing capacity, then the economies of scale do continue to kick in, and there is definitely that improvement in EBITDA that is expected. But we also want to invest that back into patient care. So I think we will keep striking that balance, on a operating basis. to see how much of it that we will need to, pass on to ensure that we are able to grow for the future, and how much we will give it back to the customers so that we are able to maintain our low-cost, affordable healthcare proposition as well.
That's with regards to margins. And how about expansion and capital allocation? Because from what I read and what I understand is significant expansion in the next 3 to 4 years. Your current capacity 5,775 beds, targeting 7,600 beds by FY30. How should investors actually look at the near-term impact when it comes to the return ratios, along with that long-term opportunity that they should be watching out for? And when do these investments start contributing meaningfully as well?
Sure. So there are two streams in which we are investing. The first stream, of course, is the capacity that you spoke about. We've announced 3,000 crores of capex, of which we've already spent about 1,000 crores, and the balance 2,000 crores will get spent over the next 2 to 3 years' time, which will increase our bed capacity. And the full effect of that we will only see after FY30, when all the capacity fully goes live. And therefore, the dilution that you are seeing in the return ratios is here to stay in the medium term till all these capacities catch up. The second part of the investments that we are making is in our integrated care business, and that you will be able to see a more short-term return impact. As for example, our clinic investments that we've made today, clinics are roughly clocking 30% of the OPD of what our hospitals are clocking in Bangalore. So therefore, clinics are able to create that additional point to service the customers, and therefore are able to create that volume and service offering to our customers. So that investment is starting to pay off. Insurance is very early stage, like I spoke about. It's a very young business at the moment, but again, you could see the significant revenue upside that we've seen in insurance, and some of this is going to start returning back. So in the medium term, I think we will start seeing the benefits of the work that we're doing in integrated care, and over a longer horizon, which is beyond 4 years, you will see the benefit of the capex investment.
Okay. Sandhya, very quick follow-up on the insurance, because something that I was curious about as well. This is now primarily for patients that are catered to by your network of hospitals, right? And second, what is the kind of number of policies that you currently have, and how fast is that growing?
Yes. So we have more than 100,000 people on our policies. We are doing both, which is we are also serving patients in our hospitals, and we are also serving patients who go to other hospitals as part of our group insurance plan. Though the patients who come to our hospital are able to receive a certain more integrated approach, because we have the data and we work on the health outcomes of the individuals, even when they are not seeking medical treatment with us. So therefore, there is a benefit for people to stay within the network. But overall, we are seeing very good traction, and we are able to offer much better care to people who are on our policy.
Sandhya, as always, absolute pleasure speaking with you. Thank you so much for taking the time. Wish you all the best for FY27.
Thank you for having me here.
All right, let's talk about Nalco, and it's come off the high point of the day, but it's trading with gains of about 1.4% or thereabouts. Posted a strong set of numbers, with its margins topping the 51% mark during the quarter. Hiral had a conversation with the management about the quarter gone by and the way forward. Listen in.
Nalco, as we know, has reported a record quarter this time around. The question is, what is FY27 going to look like? Brajendra Pratap Singh, Chairman cum Managing Director at Nalco, joins in. Mr. Singh, welcome to the show. Always a pleasure to speak to you. A record quarter is what has been delivered, so congratulations on that. The question is, how sustainable is it going to be in the coming quarters?
As far as the profits are concerned, this quarter, we have whatever we have targeted in the production and efficiencies that we have achieved in the quarter. We have achieved best ever bauxite production, best ever calcite and alumina production, quarterly best ever productions in whatever our targets in techno-economics. That also we have achieved almost to that level. And the price of aluminium, that is the metal prices, has supported us. That was the reason of the profit, record profit in the quarter. As far as the year is concerned, Here we are hoping whatever targets we have taken, we'll be achieving those targets. Even we will be starting our new refineries. Around 2 lakh tons of alumina production will be taking from the refinery. That will increase our revenues and profitability from the refineries. So this year also, whatever our target is, last year we have done, we are aiming around more than 40-45% of EBITDA margin will be achieving.
Okay, and in terms of production sales, would you really up your guidance as well for FY27?
As far as the production sales are concerned, what we have targeted is compared to last year, we are targeting more than around 5 to 10% more in metal production, around more than 10% in alumina production. Last year we did around 23 lakh tons of alumina production. This year we are targeting around 25 lakh tons of alumina production. Metal also, last year whatever we have done, we will be doing more than that, and we are going as per our targets.
Got it. One of the concerns that the street is watching out for is softness in terms of alumina prices globally. Now, if alumina prices correct meaningfully from current levels, what's the base case impact that you're already envisioning or taking into consideration for FY27 that could impact an Alco?
As far as alumina is concerned, if you see Q1, our average is revenue generation 70% is from metal and 30% in alumina. If you see Q1, it was around 78% from metal and 22% from alumina. So alumina does not affect much in our overall revenue generation, but still it affects. We were hoping like in Q1, the average alumina prices will be somewhere around 320, 330. But we got more than that, around 340, 350. July, if you see July alumina prices, we are getting around 370. We are hoping that alumina prices will be somewhere more than 350 in the remaining period of the year, because there are some issues with some refineries in China, some refineries in Russia also. Excess capacity of the aluminas are there, but as far as the smelters are concerned, Middle East smelters will start their production and the demand will be there. So alumina prices will be more than $350 or somewhere around $350, $360, which we are getting in this month.
Okay, so that's with regards to alumina. Now, what is the outlook if you have to talk about the aluminium prices for FY27? What are you baking in on that front?
Aluminium, if you see at present it is 3,200. What we are expecting is remaining part of the year, it will be somewhere in between 3,000 to 3,200, averaging around 3,100.
Okay.
That is the kind of forecast we are seeing.
Okay, so that's with regards to pricing. Now, if you have to look at the growth as well and the guidance that you've given, do you think the improvement is going to be price-led or volume-led in terms of profitability as well?
Both. You see, as far as compared to last year, we will be increasing our volumes of alumina around more than 2.5 lakh tons of alumina production. Metal production, almost we have reached to the peak of the production. We are targeting to increase our efficiencies, that is increasing our technos, improving our technos, that is caustic soda consumption, CP coke consumption, CT pitch consumption, so as to reduce our cost, which is in our hand. In our hand, it is to increase the volumes and reduce the cost. These are the two main focus areas, because how market is behaving, that is not in our hand. But still, whatever LME which we got in previous year, last year it was around 29. We are expecting averaging this year, it will be around 32 or 33 average, because Q1 somewhere around 36, 37 we got in the Q1. If the remaining part of the year we get 31, 32 also, it will be more than 32 averaging this year.
Okay. And what about the chemical segment? Because there is margin pressure coming in there. Revenue dip is around 4%. So is this structural, or do you think that it's just a one-off, one-quarter dip that you're saying? What's the outlook looking like there?
As far as chemical is concerned, war, it is for sure that the war will subside. And as the war subsides and the curtailment of production in Middle East was there, Middle East almost producing 50-60% of their rated capacity. The smelters are coming to their rated capacity, and by the end of this year, the smelters will increase their production and the demand of the alumina will increase. So the prices of alumina will go up as far as the remaining part of the year is concerned.
Okay. And my last question coming to you is, overall, if you have to look at expansion, capacity addition, etc., what should the street actually watch out for in terms of FY27 and the kind of capex that you're planning?
FY27, our topmost priority is starting our fifth stream refinery. We have already started phase-wise commissioning process. Process of few of the packages have started, and what we are targeting is by September end, all mechanical completion will be doing. From October onwards, we will be starting the commissioning process and production will start. This year, we are targeting around 2 to 2.5 lakh tons of alumina from our fifth stream. We will be also starting our Patangi mines, which is important for our fifth stream, which will be producing around 3 to 3.5 million ton at the full capacity. So this financial year capex we are targeting around 1500 to 1800, which we have targeted. But next year onwards, as our smelter expansion we are planning, DPR is in under progress. But the smelter expansion and CPP expansion, the actual capex will come from FY27, 28 and 28, 29 onwards.
Okay, let's pull up the intraday chart for Nalco. It did gain a tad bit while the management was speaking to NDTV Profit. It has subsequently lost a little bit of ground, but still trading with gains of about 1.9% or thereabouts. What are the markets doing? Up about 0.7% and holding above 24,500 for the benchmark Nifty 50. More or less at that high point of the day. The broader markets are looking sanguine as well. It's looking okay. It's looking good, in fact. You have the mid-cap index. It's up about 0.6%. The small-cap index up over 1%. The Nifty Bank also doing well. As I see it at the high point of the day, it's climbed quite a bit. Now 0.9% higher, 57,775 on the charts. We have to slip into a very quick break. We've got action on the other side, starting with a conversation on the auto pack. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand.
Welcome back to India Market Open on NDTV Profit. An interesting day of trade, because if you just quickly pull up Nifty 50 as well as Bank Nifty as well, we are sustaining with gains of around 0.6%, pretty much towards that 24,550 mark. Bank Nifty, in fact, outperforming as well with gains of around 0.8 to 0.9%. But ITC, you know, as Neeraj was also pointing out, it's made an interesting move. Now, yes, the quarter has been hit by a tax reset. There has been margin pressure and illicit trade concerns, and this is despite the relative resilience that we've seen in terms of volumes. However, the stock seeing gains of 3.5%. Mahima joins us to tell us more in terms of what's really happening with regards to the cigarette business as well. Mahima, over to you.
Right, so you know, Q1 for at least the cigarette companies is over. So you know, it's time to take a look at how things have fared, because this is the first quarter and first full quarter of where the new tax, the new excise hike comes into effect with. Overall, we've seen revenue decline much sharper as compared to where volumes go, and companies have recalibrated price hikes, and they've taken it in a staggered manner to make sure that the volumes do not take a significant hit. In terms of illicit trade, that still remains a bigger concern for the industry as a whole, and margin has seen compression across the sector, and this is on account of the tobacco leaf inflation that is something also we have seen. In terms of the three companies, ITC saw a volume downtick of around 5%, and the overall revenue saw a downtick of around 25%. For Godfrey Phillips, the volume saw a downtick of around 2%, so least for Godfrey Phillips, and the revenue downtick was around 19%. For VST, it was the highest because 14% volume dip is what we saw, and 15% downtick in terms of revenue. I think ITC realization per stick was down around 20%. For Godfrey Phillips, realization per stick was down by around 17%, and for VST, broadly this was stable, but still the volumes saw sharp downtick. In terms of ITC, the numbers as a whole, the margins got hit, but FMCG still continues to shine. But overall, cigarette EBIT was down to 35.1%. Staggered price hikes will curb down trading going forward is something that a lot of brokerages also believe. FMCG others has continued to outshine, revenue up 12%, EBIT up almost 21%, and paper boards is also where we've seen improvement this quarter. For Godfrey Phillips, I think volumes were resilient, but margins continue to be under pressure. EBITDA was overall down by around 46%, and other income now contributes around 40% plus of the EBITDA. This is something that will be interesting to watch out for as to how this pans. VST Industries volumes were down 14%, EBITDA down 35%, and revenue saw a downtick of around 15%. So all in all, what Q1 tells us is that tax reset has distorted the reported revenue. Cigarette volumes remained relatively resilient, but overall I think illicit cigarette continues to be pressure in terms of the legal players, and margin recovery will now depend on how pricing normalization happens, and of course curbing of this illicit trade. So this is the overall view of how things have fared for cigarette companies in Q1 FY27.
Right, thanks so much, Mahima, for that. ITC doing well in trade today. Pull up the intraday chart and then do one thing, actually pull up the 5-year chart, just so you know how far it is from the all-time highs, which stand at close to 523. So it's still about 44-45% away from that number, and quite a bit of ground to make up. Has it hit a trough? Well, some people believe that that is the case. In fact, Parag Bhai earlier today had a thumping the table buy on ITC. So watch out for that stock and trade. GAIL under pressure today, despite pretty decent Q1. Somit joining in to tell you why the street is not necessarily too happy with either the performance or the path ahead. Somit?
Despite the strong set of numbers that came in from GAIL in the first quarter of FY27, the stock is down nearly 4%. There are three reasons why the stock is down. Firstly, the peak margins are behind. Second one is the fact that management has maintained their guidance for FY27 when it comes to the marketing segment, despite the stellar beat that we saw in the first quarter. In fact, in the first quarter itself, the company had managed to garner nearly 60% of the FY27 guidance that the management had given. And the third reason is that the petrochemical and the LPG segment are expected to see a downtick in the second quarter as compared to the first quarter. Now, Q1 was benefited by one-offs, and this one-off was in the marketing segment because of the higher oil prices. The price at which they were selling gas was also on the higher side, and that is the reason there was a stellar beat and a stellar earning that came in for GAIL in the first quarter of FY27. But what will happen in the second quarter and for the remaining part of this financial year? Specifically for the second quarter, the company is seeing lower profits owing to the fall in oil prices. Hence, the gas prices which are linked to oil prices will also come down, thereby resulting into lower profitability for GAIL. The full year guidance was maintained, as I was saying, that 60% of the guidance was achieved in the first quarter, but despite that, the guidance was maintained for FY27, which means that from the second quarter, the profits will come down. In fact, they could fall on a YOY and a sequential basis as well. And because of these reasons, broadly, we are seeing a downtick coming in for GAIL in the trade today. In fact, there were 3 or 4 downgrades as well that were done by multiple brokerages, citing these concerns that came in post the conference call of GAIL on Friday.
Okay, so that stock is down nearly 4.5% as we speak. But moving on, we've been talking about the auto pack, which is in focus on the back of a strong set of numbers that have come in for the month of July. In fact, the trend has been pretty much healthy. And before we get Ashwin Patil, Head of Fundamental Research at LKP Securities, to join in, let's understand what the month of July has actually meant for the sector and what's that roadmap looking like. Puneet, who tracks the space pretty closely, joins in. Puneet, good morning. We've seen this year pretty on a fair bit on a positive side. April, May, June, I mean the first 4 months I would say. What is that roadmap then looking like according to you?
Well, thank you for that and good morning to you as well. We've seen good growth come through. Now, generally, Q1 is a slower month, but we've seen the GST rate cut demand momentum continue, and July was another month that was visible. So we spoke about, the earnings that came through in the morning as well, that most companies have come out with numbers that are largely in line. Do note that the estimates were penciling in almost 20 to 35% growth for almost all the companies, and barring VECV, where the growth is 16%, you've seen a good July month for all automakers. Exports as well as electric vehicle theme has been one of the bigger ones, and that's continued. Tractors also has been the other positive factor at this point of time, and 20 to 22% growth for both Mahindra and Escorts. And finally, in terms of EV momentum, as I mentioned, 114% growth for Tata Motors in this month, 125% for Mahindra and Mahindra. So that definitely is a key theme. And finally, for Maruti Suzuki, where they recorded their highest ever domestic sales growth, but numbers were just largely in line because the export momentum was flattish. So the theme clearly for the next couple of months will be on EVs, on exports as well, and you've seen that across the play. But you have to note that from starting from H2 of this year, you will have the base effect to come through. So you will have to pick the winners, but also the small car revival. That will be the other key factor to watch. And we actually, Partho Banerjee is the senior executive officer at Maruti Suzuki, spoke about this particular aspect of how the small car industry is reviving, but price hikes could have an impact on that demand. Listen to what he had to say.
Coming to the price, yeah, the problem is there because for the entry level segment customer, they look for the TCO, but we have found a way out to mitigate the crude oil prices fluctuations by offering the CNG models, which we are now having across our 16 models. And they are doing pretty well. We have got a huge back order of the CNG variants, and our supply chain team, production team is working 24/7 to see to it how we can meet the customer demand.
Right, Ashwin Patil, Head of Fundamental Research at LKP, with us on the show as well. Ashwin, great having you. Thanks for joining in.
Okay. Ashwin Patil, Head of Fundamental Research at LKP Securities, with us right now. Ashwin, thanks so much for taking the time. It seems like anytime you think of writing this pack off, they come back and they post numbers that you did not necessarily expect. So it's robust even in the month of July. Did you see that pretty much across the board? Because I think we were discussing it earlier today and saying that if you had to nitpick, perhaps the only one that you might want to nitpick the numbers on would be Volvo Eicher.
Well, they have surprised us also. But the thing is that in the month of July, the way the rains have come back, so the auto sales have also come back, I guess, because the deficiency which was expected to be, which was at the end of June, was in somewhere in 30s and 40s. It has come somewhere near lower teens, and there are certain states which have reported excellent kind of rainfall, like Maharashtra, Gujarat, etc. So the auto sales have also made a serious comeback. I mean, on a base of July, last year, definitely we were expecting some kind of strong growth, but the robust numbers have actually surprised us. But definitely, as I said earlier, that last year's July was on a low base, and the month of September, at the end of September, the GST was made applicable. So it was a low base in July. The numbers were not good. The lower end segment, both in the two-wheelers as well as passenger vehicles, were underperforming. And since the GST has come and the rains have been good, the demand side is looking really very strong at this point in time. And therefore, I think the companies have reported plus 20-30% kind of growth on a YOY basis. So, it has been a very good month, a robust month, I would say, for the overall auto pack.
Okay. Ashwin, good morning. Hiral on this side. Robust month in the month of July, as you're saying as well. But if you have to look at a trend versus a lower base and what it could look like going ahead, what are the numbers and estimates actually telling you? Do you think this is something that could continue as well?
See, the retail demand till now has been very robust, in somewhere in 20s for the two-wheelers and somewhere in 15-16% for the passenger vehicles according to the Vahan data. But going forward, I would say that there will be some sort of tapering of these numbers as the GST got implemented in September. So the second half will be slightly, tapered off, I would say. But, on the street, as I heard that, the demand is quite strong. So the volume of of demand fall, or the demand which was expected to fall earlier, we may not see that bigger kind of a fall in the second half as well. The demand will be quite strong. The companies are coming with certain launches, attractive launches, both in ICE as well as EVs, on both on the two-wheeler as well as the PV side. Also on the commercial vehicle side, we are seeing green shoots. Companies like Tata Motors, Ashok Leyland is yet to come up with the numbers, but Tata Motors commercial vehicles have actually reported really very good set of numbers. So the economy is also reviving and the demand is strong. So we are expecting a good festive season this year. So I would say that the volume or the magnitude of fall which we were expecting earlier because of the GST implementation and the El Nino impact, which is not yet seen, it may be seen in the in the later part of the calendar year. But till now, I would say, looking from this, by the end of July, I would say that, where we were expecting a big fall in the volumes going forward, we may not see that kind of a fall. But yes, some sort of softness we may see.
Okay. Ashwin, based on the fact that a clutch of passenger vehicle names have looked solid for a few months now, if you will, or at least the sales data looks solid, where is it that you find the confluence of both valuation being supportive and the numbers looking solid, in light of the fact that most people say that post-November the GST base effect will wear off, and therefore I don't know if some people say you can't extrapolate this. I don't know how you think of it, of course.
Well, for passenger vehicles, I would say the valuations are slightly higher at this point in time, where Maruti has been always trading at a premium as compared to others. For Mahindra and Mahindra, you need to apply the SOTP valuation. On the standalone basis, the company is not trading at a very high valuation, somewhere near 19-20 times, 21 times on FY28. But for Maruti, it is trading somewhere near 27-28 times on FY28. So there is always a differential between the two companies. Also, Tata Motors passenger vehicles is looking good at this point in time. So, the valuations are like, it's a big range as far as the passenger vehicles are concerned. But, at this point in time, the pressure on the commodities is actually, mounting on, and that may be seen in the margins as well. So earnings wise, we may not see a very strong FY27, but volumes wise, the demand is quite robust. But the companies may be taking price hikes, and some sort of operating leverage will be happening. The companies are expanding their capacities, new launches are coming up. So all these factors may, somewhat offset the price, the commodity headwinds that the sector is facing at this point in time. So, that may be seen on the bottom line. And accordingly, the valuations we need to see going forward. But at this point in time, I think, there is some sort of steam left still in the stock prices.
Okay, Ashwin, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time this morning.
Bye.
That's the view on autos. Now, let's start off by talking about what is it that is looking solid and what is not, because there are two or three things. One, that the earnings are looking solid, but two, the fact that the market is not reacting too negatively to even an oil price surge, which means that the call that Manav Chopra had given some time earlier to us about the trends looking good might be turning out to be true. And Manav, great having you yet again in the studios. Thank you so much for being with us. And it was a great calling, because at that point of time, not too many people anticipated that there is an upsurge. Now, we haven't had an upsurge as yet, Manav. But asar theek dikh raha hai.
Absolutely. In fact, if we see, we just go beyond the layers, what was happening beneath the markets, like, last few months, the markets actually has climbed a wall of worry. The right reflection for the markets, for me, it's not Nifty 50, it's always Nifty 500. And we've shown what the market usually talks about. That's a 97% of market cap. Okay, so we bottomed out in April. We formed a higher bottom again in the month of June. And recently, after a short-term correction, another higher bottom formation in the month of July. So the market is climbing a wall of worry. The trend is definitely bullish. The breadth is expanding. What the missing link is the momentum factor. When all these three emerge together is something what, everybody is very usual about it. They are comparing, it's not like a 2023, even though you are at all-time highs. The factor is that the market is slowly, steadily climbing higher. We've seen the breadth expand. A small example of what, say, there were 80% stocks below 50-day average in the month of April. And in no time, that went all the way above to 80%, which was turned bullish. And slowly the long-term breadth has started to improve. So I think despite of the knee-jerk reactions that the market has witnessed, we haven't seen any crackdown into the markets. The FI holding from 22% came all the way to 11%. There's no froth in the market in the large caps. You see your Nifty 50 equal weighted index and the normal weighted index. The equal weighted index retraced 80%, but the normal weighted was not even able to exceed 24,000. So it's a very clear indication that the leadership has shifted from the large caps more onto the broader markets. The broader market breadths are intact, and I haven't seen any time market crackdown when the broader market has been bullish or turning bullish. So that's one of the clear inter-market signals which kept going for us. And we maintain that, eventually we will get into a phase where the momentum factors will be positive for us.
Okay, so to add to that now, when you're talking about that movement that's shifted to the broader markets as well, then if someone has to look at levels on Nifty 50 as well, would you say that we will be able to break out of that zone of 24,300, 24,400, number one, or people should actually anticipate consolidation for some time and ignore that consolidation in terms of Nifty 50?
Well, the breakouts, like you said, everybody wants to hear, have we broken out or not? But eventually, I would just flip it other way. I would like to say, we are in a strong buy on dips. Okay? So any retracements you see, eventually, just few weeks back, a break of 23,800 just got bought into at 23,600, and then again, we are trying to breach 24,600. So Nifty breaking 24,600, it's just a job of 3 to 5 stocks. Not beyond, right? I mean, if you just look into the maths. So, yes, tactically or logically, you need that validations because of a lot of short squeeze. But if, like I said, if you're looking into the broader market scenarios, obviously Nifty has seen the breakout today that we are witnessing. But more important, you see what Next 50 is doing.
This is a breakout you're saying?
Yes, the Next 50 has already witnessed a breakout a couple of weeks back. And I think if a good portion of a large cap has already started to move higher, eventually it is just a number of few stocks which will eventually evaluate.
So the question then is, and you talked about the widening of the breadth, etc., right? And that we've been talking about it for some time, the duality of the market where the large caps are not performing. To a certain extent, the earnings has borne that out to say that the broader market earnings is stronger. So therefore, when do you see that pivot happening? Do you see it happening? And you said 3 to 5, but I would narrow it down to 2. But we won't talk about which ones. When do you see that pivot happening?
See, largely, I think a lot of names are anyways in a structural or trying to form higher bottoms. Okay, let me, certain names like an Axis Bank or an HDFC, they have been holding the stocks, the Reliance. But if I just go beyond, I think the focus will be where do we create alpha, which are the spaces would be, and whether the SMID rallies still continues or not. I think that has been the bigger, larger question.
That is the question.
So if we look at the small cap 100 index, if you see, it has actually seen a ratio breakout after 2008. In fact, a lot of people question that, the small caps have already rallied ahead. If you see a small cap 100 ratio versus Nifty 50, it has seen a breakout recently after so many years. I think that's a bigger change that one has to look into it, despite of it doing fabulously in last 4 years. I think there is a lot of alpha which was still there in the small cap spaces. And I don't see any reason why one should take a pivot back. I think that's the space one should be in.
Interesting.
Goes without saying. And there are a lot of sectors which are expanding that phase. So my focus will be SMID. And I will not be surprised when we meet next time, maybe after a reasonable amount of time, we should be.
No.
He's just making himself clear now.
No, but अरे आप आओ लोगों का confidence बढ़ाओ because people are still in a denial mode, right? वो people are hurt over the last 18 months. Confidence नहीं आ रहा है लोगों का rally है. So it's good to hear you. But sorry, you were making your point that you won't be surprised.
So I will not be surprised. Maybe another 10% happens in the next in one quarter or 2 quarters.
Where?
In the small cap
space.
indices, like the small cap index and the mid cap index, they both, as an index level, they'll be up 10%. I is my base case, but in the next 12 to 15 months is where I see a sustained bull market to be there. Within the small and the mid cap, an upside of 20%. So 10% the lower base case and 20% a fair base case.
Just very quickly, what pockets? Because this earnings season, if you look at it, one, their autos are doing very well.
Absolutely.
And two, pharma and chemicals have really shown some fundamental strength. Is there chart strength there?
So my preferred 3 spaces in this mid within the packs in the pecking order, auto anchors, I think fabulous. I mean, the trends are very good. The breadth of the trend is expanding. You know, you see the names, it's really expanding. So auto anchors, I think it's in a, not in a matured state, but still in a mid stage of a larger bull phase. So auto anchors within the small and the mid are the places where you should be in. I really like, and I think they should do fabulously, and they will outperform the auto as a sector as a whole. One of my spaces that I still like is tires, which have still not played out, but yes, they will come back. Healthcare, you know, you see a lot of diagnostic names after multiple quarters have started to break out. So healthcare, and the other is microfinancing is what I really like.
Interesting picks. And I think BFSI is something that you've already mentioned last month itself, that rotation is happening over there. So I think that's a space you should be watching out for. But thank you, Manav, so much for joining in. Always a pleasure. And please do keep coming. I think the more frequent you are, the more confidence that the markets will probably build as well. So thank you so much, and always a pleasure.
Thank you.
You know, I mean, all of these companies that Manav has actually been mentioning about as well, you know, you talk about the capex infra play, you talk about healthcare and SMIDs. Since then, you've seen that upcycle which has continued.
Yeah, absolutely. In fact, that's something to talk about with Kenneth Andrade, who's founder and CIO of Old Bridge Mutual Fund. Kenneth, as always, thank you so much for taking the time, and good morning to you, Alex, here. I'm wondering what your thesis is right now, because where we've seen a pretty substantial chunk of the earnings season come through, and external factors have been as volatile as they have been through 2026. But there seems to be a fair bit of resilience that Indian corporates have displayed. Do you think that that might flatter to deceive, though, where inventory gains in certain situations have helped out and second quarter may prove to be a little bit of a pitfall?
I mean, what this first quarter has actually demonstrated is that we've been able to manage the inflation that is there on the ground and convert it into profitability that is there. So cash flow situations are significantly better than what we stepped out with at the year end of 2026. I don't think that's going to materially change. I think for the balance part of the year, if we are right, if the first quarter is right, we will trend towards a higher earnings numbers out there. Okay, higher earning number out there, and I think that's where that's what will hold the market where it is. So from a standpoint where we are, I don't think Q2 will disappoint, neither Q3 and neither Q4. Now, the fundamentals to some part of this, is obviously a very weak currency, which is a very strong advantage for corporate India out there. And some part of that is reflecting in a reasonably strong earnings uptake. So I'll keep it at that. You've got a currency advantage that is there. You've got volumes coming from there. The inventory gains that you're seeing is also part of coming from some element of the currency advantage that we've got. And put it all together, I think we'll be low teens or mid-teens in terms of numbers as we go through this year. And that's a significant deviation from whatever we've seen in the past.
Interesting. Kenneth, I know that you prefer and you like companies where the capex build out has taken place, where operation leverage comes into play. There are a number of companies that seem to be heading towards another round of capacity building. If I look at the chemical space, if I look at certain other pockets, right? So is there and even in the healthcare space, hospitals are building out quite dramatically. Is there an opportunity maybe 1 year down the line where you would put some of these companies on your radar to say, once they've built out and the next capex round is done, these will become very attractive?
So a large part of that is also reflected in some of our portfolios. I think companies that have got their capex behind them, like you did mention, chemicals, automotive is the other, pharmaceuticals is the third, and the fourth, which has got an ongoing capex, which a large part of that capex is met from internal cash flows, is basically the commodities or the metals business. Now, none of these industries or businesses require significant amount of external capital to build out either their franchise or their capacities. And I think on the other side of the entire spectrum, the opportunity is reasonably large. When I say reasonably large, you ended up being the lowest cost producer of most of the products out there in this entire category. And you're finding new markets, you're building your franchises which are beyond the domestic environment. And also inflation in some of the products are playing into the profitability of some of these industries out there. Now, the industry that I mentioned out there, which is automotive, pharmaceuticals, chemicals and commodities, which is metal commodities. Most of these companies have their pricing based in dollar terms. So that's a huge advantage that they've got, and which is why I think the rest of the year should be quite easy for some of these names.
Kenneth, good morning. Hiral here. You know, my question then to you is, why don't you find IT attractive? Because valuations are turning pretty much reasonable and attractive, number one. Two, yes, there is confusion, but you have a lot of global brokerages which are now tilting towards a couple of names where there could be some bit of buying interest coming in there. Why would you say it's 100% avoid right now?
We don't have that in our portfolios. Doesn't necessarily mean that the business is not good. See, these are significantly large companies out there, and have the ability to navigate whatever is going on in the underlying. The only thing in going for some of these names is obviously valuation. Valuations are at a level that we have never seen before. But the other question that remains with this industry is that, look, we've been pricing them historically. So if you step back to about 2025 and before that, all of these companies used to trade between 20 and 25 times multiples. 20 to 25 times multiples was working out to approximately a 4 to 5% dividend yields. Okay, 4 to 5% dividend yields, because all their earnings used to translate into cash flows. Now, that may not be the norm going forward. So the norm going forward is that if these or large part of these services network companies have to continue to be where they are and grow, have now to start putting money to work. Okay. Now, when they start putting money to work, that means they don't become as free cash flow generating as before. So I think we're basically ideating a situation out here wherein a lot of these companies will start. Their valuation metrics have to considerably change, and I think that's where we are right now. I mean, we're probably in an environment where you're changing both from a business model perspective and from a capability perspective. And the second part of it is that the way cash flows will start transitioning, they will be more investment heavy. Okay, investment heavy. That means there's less amount of cash flow for the shareholder. So they may not go back, or our sense is they will not go back to their previous highs in terms of the multiples. So it's a good bounce. You get these structures that play out in every industry which is down so much, and I think that's a small transition that IT services companies are going through.
Kenneth, good morning, Neeraj here. So I've always heard you say that look at businesses wherein the world is the oyster and not necessarily only domestic if you get that opportunity. IT is not in that cohort right now because of the fundamental shift. But what about other themes? Let's say, for example, manufacturing or auto angs, and auto angs which are going beyond the traditional auto ancillary services into precision manufacturing, defense, aerospace, etc. The gross blocks, the ROCs, the gross margins, all of that looks very enticing, but the stocks have rallied, right? Can they do more? I mean, Sansera, Craftsman, Happy Forgings, SJS, etc. There's a large cohort out there. Do you like that space?
See, it does provide an opportunity, and if you build the entire value chain to these businesses, you've got the OEMs who are also on a very strong wicket. You got the ancillaries which are also doing reasonably good with now adjacencies getting created. But those adjacencies probably will not be larger than their base business. It will be larger than their base business in just probably a company or two or maybe three. But it can't overtake their base business that is out there. So they'll continue to remain cyclical and they'll continue to build adjacencies out there. But the overall volume context and the narrative in most of these in this entire industry is reasonably strong. Now, if you look at it from a price point, from the entire entire value chain perspective, right? The OEMs are taking between a 5% to 8% price hike. That should translate into reasonable amount of cash flows or profitability going down. Some part of that the ancillaries will also get. But the financiers also see almost an 8% growth in their book, 5 to 8% growth in their book coming because products on the ground are also getting expensive and they need to be funded. So the entire value chain is in a reasonably sweet spot. You can choose which one you want, which one is you prefer. You've got a complete leverage which is sitting with the financiers. The automotives are capacity built out, running almost 100% flat out in terms of capacities, and the ancillaries are building out adjacencies, but they are reasonably capex intensive, and their long-term profiles of ROCs and ROEs will be materially lower than probably the OEMs.
Okay. Okay. The other thing, Kenneth, is that healthcare is turning out to be quite a winner. And a clutch of these names, CDMO, otherwise, etc., are doing well. Diagnostics are doing well. How do you play this pocket now? Some bit of a rally has happened, not saying that therefore it is the end. I'm just trying to understand how do you think of a space that has already shown a bit of a rally?
I think so. So here it's shown a bit of a rally, and you'll also have to consider the fact that what is the total addressable market, and that market is actually expanding, or is it going to remain status quo? Our sense is in pockets, the opportunity in some of these names or some of these segments are much larger than you perceive it to be. And it's a virtuous cycle. I think you're going in for a patent peak over the next 10 years, and the amount of drugs coming out of that patent is almost $750 billion. Okay. So when something like this happens, and prices of those products collapse, someone's losing in this process, right? So the innovators in the West are losing, which is where there's a scramble for a new product pipeline. Which is why the smaller biotechs are getting bought out, and which is why a lot of work is coming to the Indian CDMOs. Apart from the fact that the Indian CDMOs also have a reasonably large visibility in the drugs that are going out of patent. So this is all pulled together. It's a long cycle. You probably just started that entire cycle. You're not at the bottom of it all, but you just probably started that cycle and try to capture some of these companies that have already put capex behind them. And capex, when I say capex behind them, they have capex for 2028, 29, and 30. So you're not too early, you're not too late, or that's what we think we are where we are. We're somewhere at the starting of the mid cycle in part of these entire names. Now, diagnostics hospitals is a very domestic play, and there still the valuations are pretty much stiff, but they've been executing pretty well.
So that's diagnostic. Kenneth, how are you looking at the ancillary data center play? I know we do not have a direct IT AI play that we're talking about, but a lot of them who are positive saying that there are opportunities emerging in the cap goods, in the power segment, which are plays with regards to data center as well. Any value that you're seeing there?
They're okay. I mean, what we tend to believe is that you will see a lot of volume growth coming up there, and there's going to be a reasonable amount of value capture that you can do with some of these names, some of these utilities, if I could call them that. But I don't think none of them will have any exceptional pricing power. So what you see is what you get. add gross block and just add new capacity and just extrapolate that number. That I mean, if you got 100 rupees invested and you're making 10 rupees of profit, the next 100 rupees will also give you another 10 rupees of profit. So basically on 200 rupees, you'll still make a 20 rupees. So addition to capacity is very critical out here, and you're on the you're on the treadmill trying to make sure that your capacity is in line with where demand is, and supply doesn't overshoot demand. If that happens, then I think a lot of things will collapse around it. I don't think we are far away from something like that to happen.
Got it. Okay. Kenneth, fabulous talking to you as always. We were all nodding our heads, trying to pick up the tea leaves as you laid out for us. But thank you so much for being with us today. Really appreciate your time.
Thank you. Thank you very much. Have a nice day.
Likewise. And well, it's a big market voice on a day when the market is not doing too badly. In fact, you have to say that it's actually doing pretty well. It's holding out for most part, you would argue. Let's see how it shapes up during the course of the day. But like we said at the start of the show, the tailwinds are in place on the macro side. But the rally having done so far, could we see some pullbacks in the second half of today or for the rest of the week? Time will tell. For now, let's celebrate while we can and let's be happy while we can.
Yeah,
it's a good show.
Good point.
And I think the next thing that we need to watch out for is the RBI policy, which is on Wednesday. So that will be crucial as well.
Yeah, in terms of commentary. But before you get to Wednesday, up next is Ask Profit. So you can ask all of your questions there. Stay tuned. Lots more coming up over the course of the day. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करना अलाउड है श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
You're watching Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Shreyanshi Singh. First up, let's take a look at the top headlines. Bitcoin above 63,000 levels on regulatory optimism. Tokenized funds, central bank pilot and record equity volume signal shift. Crypto ecosystem pushing for Senate vote for Clarity Act. And billionaire investor Ray Dalio says 1% of his portfolio is Bitcoin. And those were the top crypto headlines at this hour, but let's also delve into greater detail in terms of the price trends as well. Now, when you talk about Bitcoin, you're looking at it above those 63,000 levels, primarily driven by improved regulatory sentiment following recent SEC CFTC clarity as well coming in on classification of 16 major tokens as digital commodities, reducing that legal overhang when it comes to institutions. Now, even US-Iran talks have resumed, aiding some relief also to some of the riskier assets. And meanwhile, you do have BNY Mellon's new blockchain transfer agency, a multi-central bank real value tokenization pilot, and July's $11.3 billion tokenized equity trading spike, all also pointing to accelerating tokenization as well, and that's across custody and markets. Let's move on and talk about the overall industry as a whole. Now, you do have the crypto ecosystem that is pressing Senate leaders to schedule a digital asset market Clarity Act vote, and that's before the August 7 to 8 recess window, while negotiators raise issues over ethics language and propose developer liability standards. And lastly, when you talk about Bitcoin, it's earned another vote of confidence coming in from billionaire investor Ray Dalio as well, saying that around 1% of his portfolio is allocated to Bitcoin, which he describes as hard money that cannot be printed and can help preserve purchasing power. And that said and done, before we wrap, here's a quick check on changes to crypto prices over the last 24 hours. Now, you do have prices rising, and that's across tokens, as you can see reflected on your screen. So Bitcoin, Ethereum, XRP, Solana. Meanwhile, the support resistant levels are at 63,000 and 65,000, at least when you talk about Bitcoin. Time now to take a look at the crypto strategy for the day. Here's what to keep in mind for the day now. In terms of the market outlook, it's slightly cautiously optimistic that you're looking at. Clarity Act, that's one very important trigger for technicals. When you talk about the Bitcoin resistance levels, like I said, the range is between $63,000 to $65,000. And you're also looking at positive macro cues that may hold risk on sentiment. And as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry as a whole. The team is available to provide guidance and help users make informed decisions. And that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Hello and welcome to NDTV Profit. You're watching Ask Profit. I'm Mahima Vachhajani, and with me as always is Puneet Zaveri, and this is a show of course that gets all your stock related queries answered. Viewers who are just tuning in, you can either give us a call or send us your queries on the WhatsApp number that's flashing on your screen up there. While you do that, let's take a quick look as to how the markets are doing on a Friday. On Friday, we ended on a higher note, on a very resilient note, and today we're carrying forward that. 24,500 levels is what we're seeing on the Nifty 50, an uptick of 0.8% almost. At the day's high point. Let's try to pull up the heat map and see as to what are the counters that are doing well in trade today and contributing to those gains. You have ITC topping that chart, though the numbers were not good, but volumes have been resilient, and also there are brokerages that have gone ahead and hiked the target prices for this one. There's Shriram Finance, which is also doing fairly well. Interglobe Aviation up 2.5% as well. IT names back in action. You have Infosys, TCS doing fairly well. Tata Motors, Bajaj Finserv, yet another day of good gain coming in for this one. Eicher Motors, so auto names also continue to do well. But on the flip side, you have Sun Pharma, which is taking a knock of around 1.2%. Maruti Suzuki is also down by about 0.8%, and Bharti Airtel is also where we're seeing profit booking. But the Bank Nifty is also today back in action above the 57,700 levels, up by about 0.8%. So it'll be interesting to watch out for as to when and at what point does this cross the 58,000 levels, because that is the levels that crucially a lot of traders are watching out for. In terms of the broader end of spectrum, outperforming the benchmarks because the mid cap 150 is up almost 1% at the day's high point, and so is the small cap 250 up by about 1.2% at the day's high point. The BSE 500 quickly before we go on to our guest for our stock related query. There you go, a lot of stock action, news specific, earnings specific on your screen there. Something like a Blue Dart on the back of strong numbers, strong volumes, also up 6% odd. There's also AB Capital, Gujarat Alkalis, which are doing fairly well. But on the flip side, of course, you have Z Entertainment, Muthoot Finance. This was one of the known accident of the day and is down 9%. Narayana Hrudayalaya is the other one, down 5% as well. And you have GAIL, Latent View, Thermax also seeing the down, even persistent on that list as well, on the red side. But let's welcome in our guest for the day. We are joined by Gaurav Sharma, Vice President and Head of Research at Globe Capital, and Saurabh Jain, Equity Head Research at SMC Global Securities, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. I think we've got our first caller for the day. We'll start with a caller. Sanjay is calling us from Mysore. Sanjay, a very good morning to you. Go ahead, ask your question.
Hi, ma'am. Good morning, ma'am.
Go ahead, ask your question.
Ma'am, Tata Elxsi 100 quantity in correct level buying in 3,700. Short term in please technical analysis, ma'am. Seller road, ma'am.
Okay, got your question. I'll take this up with Gaurav then. Gaurav, what is the view that you'd like to give Sanjay for Tata Elxsi?
Hi, Mahima. Morning to Saurabh and the viewers as well. So, Tata Elxsi is showing some early signs of reversals. Currently trading at close to 3750 odd levels. The immediate hurdle that I see is somewhere close to 3840, 3850 odd zone. Once that is taken out, it has all potential to rise up towards 4100 levels in the immediate near term. So hold is what I am suggesting. Do maintain a stop below the 3550.
Got that view, Gaurav, and welcome to the show. But the next question coming in and has to be on the auto pack, continues to be in focus on the back of numbers as well as the auto sales for the month of July as well. Shankar, who's from Bengaluru, is holding the shares of Ashok Leyland at 156. Now, numbers actually came this morning for the company, have been a good performance, up 33% on a YY basis. He wants to know if the current price right now is good to sell or should he wait for a bit. Saurabh, good morning. What would you recommend Shankar to do? The numbers were good for Ashok Leyland. Should he continue to ride the wave?
Good morning, Puneet. Good morning, Gaurav. In my opinion, yes, the automobile players are doing good, and especially if you talk about the Ashok Leyland, the volume growth is certainly there. And if you look on the valuation side, the stock is trading at the lower end of the long-term valuation on the trailing earnings. My sense is it is good to hold for the long term.
All right, okay. The next one that we have is coming in from Praveen Torvi, who's writing us from Pune. He's got 4,000 shares of Utkarsh Small Finance Bank. Let's try to pull the stock up at an average price of 21 is what he's saying. And he wants to know the outlook from a 6 to 12 months perspective, whether to continue to hold, maybe average out or sell? Gaurav, what would you recommend him? Because he's bought it at elevated prices. The stock is currently trading at 14.
Maybe it's better to hold as of now because the stock is into a consolidation phase and it is consolidating at the lower band. So there are hopes that it will be able to come up with a breakout. The breakout point is somewhere close to 15.3, 15.5 odd zone, a little far from where it is trading currently, but it is better to hold as of now. Take a stop at 14.
Got that view, Gaurav. But the next question on Action Construction. This has seen some good revival from the March lows. Rajesh Maheshwari, who's from Singapore, is holding these shares at 1070. So close to the current market price. He's been holding on for a while. Wants to know if he should still continue to remain invested. Saurabh, quarter one results were good, were encouraging as well. Would you recommend him to hold this counter now?
See, it is a small company, relatively a small company, but has enjoyed a premium valuation on the bourses for the last many quarters. Since the construction equipment demand is likely to remain strong, I feel that the demand for the company's products and the operational matrices will remain strong. But yes, on the valuation side, I am not that comfortable. But from the long-term perspective, he can hold.
All right. Okay. The next question that we have, I think we've got a caller. Manikanta is calling us from Hyderabad. The very good morning to you, Manikanta. Go ahead, ask your question.
Yeah. Hi. Good morning. So I have Aditya Vision shares of 100 shares of Aditya Vision at the price of 620. I want to know the short-term view, how it's can I hold it for a long time or else short time I can hold it.
Okay, got your question. Just trying to understand, when you bought this, did you see the technicals or did you see the fundamentals of the company?
I have seen the Q1 results and I bought it. I see that it was performing well. So that's why I bought this.
Okay. I'll take this up with you, Gaurav, since the time horizon that he mentioned is not from a long-term perspective, because the earnings just came on Friday before market closing. But overall, with regards to where charts go, how do you see them, and do you think from a short-term perspective we can continue to hold?
Mahima, it has performed well in the past. In the recent couple of weeks, also it is going into consolidation. So consolidation at higher levels, this is a positive sign. A clear flag and pole pattern is visible. What are prima facie I can see from the numbers that the company posted, they were a good set of numbers. All in all, it is looking good. Any further decline towards say 600 580 zone can be used to add more position if he wants, and remaining he can hold with a stop at 540.
Got that view, Gaurav. But the next question, and viewers, you can also call us on a landline number that is flashing on the top of your screen for stock-related queries. Have a chat with our guest for the same. Next one's on Sun Pharma. Bala, who's from Coimbatore, has been following the company. The results came in last week, he's mentioning, and wants to know if it's a good time to start accumulating now. Saurabh, how did you view the results? We of course had that big acquisitions just a few months ago from the company. What's your view now?
See, it is now after this acquisition, the Sun Pharma will be a global major player, and we have seen in the past that the previous acquisition have been done well and by the company, and this time also the market is feeling that the integration will be good for the company, and the company will expand in the global territory like anything. With respect to the earnings were okay. And in my opinion, it is a kind of a portfolio stock, and we are bullish on the pharmaceutical pack too.
Okay, all right. The next one that we have is from Venkat Ramanan, who's writing us from Bengaluru, asking about either NTPC or Power Grid. Which one is a better bet from a slightly long-term perspective? So I'll stick with you for this one. What would you recommend him?
See, out of the two, I like NTPC. If you see the current the recent quarterly earnings, there was a margin expansion and the good amount of profit growth also. And if you see the data from the IIP data and all, you will find that the electricity demand is actually soaring, which will help these companies, utility companies, especially NTPC. So my take is NTPC would be good.
Got your view, Saurabh. But let's go across to Chennai now. Kunal is dialing in for a stock-related query. Kunal, very good morning. Welcome to the show. What's your query?
Good morning. So I would like to know if it's the right time to enter Walkhart Pharma, given that they have something coming up by the end of this year, early January as well. So is it the right time to enter? Thank you.
Thanks for your query, Kunal. What would you recommend here as well? Saurabh, because you mentioned about Sun Pharma, of course. Zenic, I think, is the drug that Kunal's speaking about. But what's your view now? Is it a good time to enter?
Yeah, I mean, it is the company has delivered above the market expectation in the past, and the good molecules coming up will give the future profitability, growth for the future profitability. My take is better to buy in a staggered manner.
All right. Okay. The next one that we have is coming in, and this is from Nandagopal, who's wanting a view on the logistics space from a slightly medium-term perspective, as which one is a better bet to kind of enter into right now between Aegis Logistics, Blue Dart, Delivery. Gaurav, anything on the charts that you are finding attractive from any of these names? And if yes, at what price levels and what should be the target price?
Mahima, delivery is looking good. After a reasonable retracement, it is trading closer to its 100-period exponential moving average support point. Again, a very fine performance in the past. Therefore, this decline can be utilized as a fresh buying opportunity for a medium-term perspective as well. We expect the stock to trade closer to 520-525 zone, and a breakout happens post that. It has potential to surpass 600 mark as well.
Got it. Also, Gaurav, on Pine Labs as well, if you can give a view. I know it's a very short-term chart since the company listed, so not too much historical evidence. Today, it's up 6% and climbing as we speak. Our viewer, Vedant, has actually bought these shares at 147. So, bought it. I think the stock was down, recovered back again. Should he exit now, or should he wait, probably bake in some gains and then take a call? What's your view?
Puneet, it is completely sideways. The performance in the past has not been encouraging at all. Sell on rise is what I'm suggesting. Since the current price and the buying price are saying so, it is a no risk kind of a zone. Take a stop at 142, and I think this particular move can extend towards 154, 156 zone. That is where he should consider exiting the stock.
Okay, the next one that we have is on a slightly small name. It's on MediAssist Healthcare. Peter from Tichy has bought it at the levels of 385. 20 shares is what he's been holding. He says that he's a long-term investor. Whether he can continue to hold this one or not. Saurabh, any view on this?
I think the stock is underperformed in the last few quarters, and the earnings were not that great. And I think it is good to avoid.
Got it. Well, let's go across to to our next caller now. Kaustubh is dialing in for a stock query. Kaustubh, very good morning. What's your query?
So, morning. I have 450 shares of Bajaj Finance.
Okay.
At average cost of 696. That is split and bonus adjusted. Okay. So I am having a long-term view, but should I book some partial profit or should I be invested in this stock? That is my query.
Firstly, Kaustubh, many congratulations. When did you buy this? How long have you been holding this counter?
I have been holding it from, around 2022 and onwards. I have been averaging.
Well, most certainly it has paid out. He's in gains of almost 2 lakh rupees here, Saurabh. Bumper quarter 1 results, right? What would you recommend Kaustubh to do? Is it a good time to book some profits, or should he continue to hold?
Many of the, we have been seeing good results from the banking and finance companies. The Bajaj Finance is no different, and consider the fact it is a conglomerate and has outperformed so far this year, gaining more than the bank index or maybe Nifty. I think it is a clear hold. In my opinion, I think the results show a similar picture, and in the future also, you will find when the festive season will approach, the company is actually expected to do well. So my sense is it is good to hold.
Got it. Well, the next question, it's coming in on Tarsons. And a relatively smaller name, Sundar, who's from Madurai, bought into these shares, but at 450 odd. So let's look at the 1 year and the 3 to 4 year chart. I think he listed back in 2022. So he's currently sitting on a loss. Wants to know if he should still continue to hold this counter or no. So stock's down 13%, but let's look at the longer term chart too if we can. And Saurabh's question being, because it's a player that's not done well. It's down 60% since the highs, from the highs. What would you recommend him to do? Should he just hold on for a bit, exit at any rise, or what's your strategy?
Won't be able to comment on this, not in coverage.
Gaurav, anything on the charts that you can help Sundar with?
Yeah, so Puneet, in the recent past, the stock has managed to recover reasonably well from its current lows of close to 160. It has almost doubled and that journey has the stock has managed to cover in just a couple of months. So very fine up move seen of late. But overall, the performance has been quite dismal. A further rise towards 360 is pretty much possible in the near term only. So sell, gradually reduce your position on rise is what I'll be suggesting. As of now, do take a stop at 280. Stock has potential to give some more up move.
Okay, all right. So that's the view coming in on Tarson's product. The next one that we have is on Divis Labs. Our viewer is asking whether this is the right time to enter. This is a query from Ankit, who's writing us from Chennai. Sort of overall, in terms of numbers, it was a beat in terms of, across metrics versus estimates. And overall, the management has also reiterated the double-digit growth in terms of guidance as well. What do you make of the earnings, and do you think one can enter right now?
The earnings by far were superior than the market expectation. There was a clear good amount of growth coming in the revenues, and the massive jump in the EBITDA margins is actually surprised the street. In my opinion, I think the stock has run up and is trading at fresh highs now. So my opinion is that better to wait for some corrections and then buy gradually.
Buy gradually. Got that view, Saurabh. But the next one's from, Priyanka Asher, who's from Mumbai, wants to know about PG Electroplast. She's bought these shares at 509, Saurabh, and wants a fundamental view on her 2,100 shares. The stock's actually seen a very big spike just in the last couple of minutes. But Saurabh, this one has seen a good run up actually in the last 1 month in anticipation of results, I'm presuming. But how are you looking at PG right now? Because last year was a tough one. What's your view on the stock now?
I think in the last 2 years, the stock has underperformed the broader market. And in fact, there is a lot of volatility in the commodities also, which may influence its results on the negative side. I think better to wait for the quarterly earnings. I'm not sure whether the quarterly earnings are out or not. And I feel that the current uptick is kind of a technical bounce. So my sense, it is good to avoid.
Just a follow-up on that, Gaurav, technically what is PG Electroplast indicating?
Looking impressive, Mahima, no doubt. Good amount of consolidation has already happened. It has retraced pretty well from its peak. I think these are possible signs of a reversal coming in. I'll prefer to buy the stock on the rise above 650, 650 levels.
All right, okay, so that's the view coming on PG Electroplast. But time for a rapid fire round. Gaurav and Saurabh, you both know the drill. Try to keep your answers as short as possible. The first one that we have is coming in on MCX, whether this is the right time to enter the counter or not. Gaurav, your view on the charts?
Better to wait for some more time. Buy on dips is what I'll suggest.
The other one's a smaller counter, PIX Transmission. Dilip, who's the regular viewer of the show from Kolkata, wants to know if it's a good time to enter. Saurabh, by any chance, do you cover this one?
Not in coverage.
Gaurav, on the charts, any view?
It is recovering from its support zone. Can consider, but maintain a stop at 1640 on closing basis.
Okay, the next one's on Paytm. Shrikant from Hyderabad has been holding 100 shares at an average price of 1376 since the IPO. Wants to know if he can continue to hold this one, wait, exit. Saurabh, what would you recommend him?
Hold it.
The next one coming on, and this one's on from Harsha from Vijayawada on Vodafone Idea, and it's a stock we've not discussed too much in the last few days, Gaurav. She's bought these shares at 10.75. What's your view?
Clear cut hold. I think it is doing well now. Good amount of recovery is expected.
Okay, the next one that we have is from Divya, who's writing us from Abu Dhabi, asking about J&K Bank. She's got around 125 shares at the levels of 177. She wants to know if this is the right time to average and what should be the short-term target price. Gaurav?
Absolutely average, looking good.
Yes Bank.
Target price can be.
Gaurav, please continue your point.
Yeah, the expected target price can be somewhere close to 180.
180, got it. Next one's on Yes Bank. Kishore is holding these shares at 24.7, Saurabh, asking if he should still continue to hold on for the long term.
You can hold.
Okay, the next one that we have is coming in on Coal India. Our viewer has bought 200 odd shares and wants to know whether to continue to hold or sell this one. Saurabh, what would your view be like, because the buying price is 407?
Hold.
The next one, and this one's coming from Vijay from Chennai. Wants to know about Radico Khaitan, a short-term view, Gaurav.
Just a second. Very positive. Hold the stock.
Okay, the next one's on Fortis Healthcare. Narayana from Andhra Pradesh has bought it at the levels of 966. Continue to hold from a medium-term perspective, Saurabh?
Hold.
Another one from Andhra Pradesh. Bharat has a query on Escorts Kubota. With the earnings come today, Saurabh, he's holding at 3086. What should he do?
Hold.
The next one that we have is coming in on Netweb Tech. 100 shares bought at the levels of 4950. Siva from Amravati wants to know the 3 months outlook on this one. Continue to hold. Book losses, Gaurav?
Hold and add.
Jaskirat Singh from Bengaluru, he's mentioning a unique way of asking a query on HDFC Bank. He buys 10 shares a month, Saurabh, and I think for the last 60 months he might be buying it at a similar price. But what's your view now? Should he continue to hold?
Do not buy more, rather add ICICI Bank.
Okay, the next one that we have is on Aeroflex. Sumana from Dubai wants to know what should be the immediate target for this one. She's bought 200 shares at the levels of 465. Gaurav?
Immediate target would be somewhere close to 510, 520 zone.
Also, Gaurav, on Netweb Tech as well, Siva was bought these shares at 4950. So certainly at elevated levels. Should he wait for that price to come back?
Absolutely. It is probably just a takeaway. The stock has done well. Consolidation has happened. It has retraced down as well. He can even consider averaging now.
Okay, Zeenath Kausar from Ranchi is asking about Eternal. She's got around 370 shares bought at the levels of 287 and wants to know whether she can continue to hold this one from a medium-term perspective or switch to something else. Saurabh?
Hold.
Alright, so that's the view with regards to where Eternal go. The stock up 1.5% today as well. But with that, completely out of time on this first edition of rapid fire round. Puneet is laughing at this. But Gaurav, thank you so much for taking out the time. We'll let you go at that. But it's time to slip into a very, very short break. But we'll be definitely taking more queries on the other side. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Hello and welcome back to NDTV Profit. You're watching Ask Profit, and if you haven't already done so, send in your query on the WhatsApp number. Also call us on the landline number, speak to us as well as our guest. And before you do that, we'll start just taking a very quick check of how the markets are doing, because we spoke about 24,600 being a crucial level in the near term that we are watching out for. We are at the high point of the day, but also the advance decline ratio is the other key fact, because the recovery in the broader market has somewhat been pale over the last week. Today though, it's a very strong session that we're seeing, almost 5-1 in favoring of the advances. And we of course spoke about the individual names, a lot of result reactions today. We'll focus in a little bit on Persistent as well. But let me welcome in Ajit Mishra now of Religare Broking joining in as well. Ajit, thanks so much for joining in. Very good morning to you. Let me first just go across to a quick caller from Tamil Nadu. Sujamani is joining in for a stock query. Very good morning. Thanks so much for joining in. What's your query? We seem to have lost the call. I don't know if he didn't like my voice, but on Turtlemint is the query that Sujamani had. Buying price of 152 odd. Is currently sitting on a loss. Wants to know what he should do with this counter. I don't know, Saurabh, it's a very recent counter, so not too much historical evidence, but anything that you can help Sujamani with, it's down from that 152 odd mark. What's your view now?
Not in coverage, Puneet.
And I think Ajit might be a little too difficult on the technicals as well. Just last week is when it listed, so probably Sujamani, do try dialing in the next time. I will recover my throat and come back as well. But the next query coming in, and it is on Persistent as well. Our viewer Manoj is holding shares at 4311. Wants to know if we can hold on to for another year. He's certainly in gains, Saurabh. But how did you view the recent results, and what's your view?
See, on the IT pack, we are not sure whether the earnings will be improving or not, especially for the big companies. Considering the Persistent fact, I think the earnings were, in fact, in line or somewhat better than the expectation, considering the fact that many of the peers have seen deterioration. So I think it is a kind of a profit taking. If you have a long-term horizon, then keep on holding. If you have a short-term horizon, then better do profits.
Okay, all right. So that's the view coming on Persistent Systems. The next one that we have is on Narayana Hrudayalaya. This is from Gopal. It says that he wants to kind of buy this counter for the next few months and wants to know if this is the right time to enter the counter or not. The stock has taken a knock, of course, on the back of numbers. But Ajit, would you recommend buying right now, considering the stock has fallen?
Good morning, Mahima. So, good morning, Puneet. So, what we are seeing at present is just a normal reaction, because it was the previous swing high close to around 2100 mark, which the stock tested before the numbers, and post numbers we are seeing marginal pullback towards the major averages. So close to around 1850, 1900 is a zone basically where we have multiple supports, moving averages on multiple time frames. So you can continue to accumulate on dips in this range of 1850 to 1900, and since the view is short term, 1700 on the closing basis should be a stop loss. In the next run, close about 2100 would trigger the next leg of momentum.
Got it. Got that view, Ajit, and welcome to the show. The next question coming in on Concord Biotech. Viewers bought these shares, and this is Sabita, at 1200 rupees per share. So it did travel to almost that 2000 mark, and then in 2024, and then has retreated, seeing a second leg of move here, Ajit. Wants to know about the short-term view. What's the view on the charts now?
So Puneet, now it looks favorable, considering that the stock has already witnessed a sharp correction from the record highs from 2600 to roughly around 1000 levels, and in the last couple of months we are seeing gradual recovery. Means of late also we have seen a base formation around the major moving averages on the daily chart in this range of 1250 to 1400 before this breakout. So price action, volumes plus the support of the moving averages, all this indicates that possibly we are set for a reversal in the trend after this corrective phase. So gradually it can inch toward 1400, 1700 zone first, and then towards 1900 plus area. So with stop at 1300, definitely she can stay put.
All right, okay, so that's the view coming on Concord Bio. The next one that we have gotten is on Apollo Microsystems. Pravina has bought it at the levels of 420. I think let's try to pull the stock up and see as to where it's trading at right now, 397, and wants to know whether she can continue to hold or exit. She's not mentioned the time frame, but Saurav, I'll come to you on this one. Apollo Microsystems, what's the view like?
I think if you look at the valuation, looks expensive, trading around 125 times to book value and 11 times to 125 times to trailing EPS and 10, 11 times to book value. And if you look at the earnings, the company is posting good amount of growth. I think if you are making some money, then better to take some money off the table.
Got that view. But the next question, and this one's from Satyan. He's holding on to Amara Raja at 1130 though. So he is currently sitting on a loss. He's mentioning that he's been holding this on for a while. Let's also look at Excite today because results came in just late last week, and see what that counter is doing now. It's up marginally at this point of time. He wants to know, Saurabh, if he should still continue to hold and what's the expectation now?
I think, especially looking at the valuation, I think it is trading at the lower end of the long-term valuation, both at the trailing EPS and on the book value side. I think largely if you look at the earnings from the Excite, they were good. I am not tracking the Amaraja battery. I'm not remembering what was the earnings. But yes, there is no point in selling right now. I think do not buy more, but at the same time keep on holding.
Okay, all right. The next, I think we've got a caller. Sudhakar is calling us from Hyderabad. Sudhakar, a very good morning to you. Go ahead, ask your question.
Yeah, very good morning. I have purchased 300 shares of Afcon at the rate of around 456 rupees.
Okay.
Now the price is around 278 rupees only. So what is your advice regarding I should hold it or sell it off? Okay.
What was the thinking behind buying this, Sudhakar? Was it the charts that you saw? Did you see the fundamentals of the company?
No, I just applied for the public issue and I got allotment at that rate. Not
okay.
bought in the secondary market.
Okay, got it. Okay. So you're holding it since the IPO. I'll go to Saurav then. What is the view here? Because he's sitting on a loss of around 54,000 rupees.
I think wait for if the June quarter earnings have come. I don't know if they haven't come, then wait for the June quarter earnings and see what the management is saying. On the valuation side, it looks at the lower end of the valuation. The stock is trading, and in my opinion, I think after seeing the earnings, then take a call.
Got your view, Saurabh. Definitely, earnings have been weaker for this counter, but continue to monitor as Saurabh mentioned. But the next one coming in, and this one's on Varun Beverages actually. Minks from Delhi has been holding on to these shares for the last 2 years. So currently sitting on a loss. He's average down is what he's also mentioned. But he's asking what action should he take now? Should he continue to hold or sell out, Saurabh?
I think, in my opinion, these 6 months are usually good for the companies like Varun Beverages, but last quarterly earnings was not up to the street expectation. That is why I think some profit taking has come. I think wait for the September quarter, and maybe you see the stock moving up again before the festive season begins.
Okay, all right. The next one that we have is on Irida. Chitra from Chennai has been holding 200 shares at the levels of 118. Wants to know whether to continue to hold or sell. Probably it's results day today for this one. Ajit, would you recommend her to continue to hold, seeing the charts, because she's already holding, although it's generally not advisable to trade on the day of earnings. But since she's already holding, what are the charts indicating?
So Mahima, the good part is that she bought it at the lower end, means majority of the investors are stuck at the very higher levels, and the stock is already up from our buying price. As you rightly mentioned, that speculating on the day of results is usually not recommended, but still, since she's holding the long position, 119 should be her trailing stop loss, because the overall trend has not reversed yet. We are just seeing a rebound. And for this rebound to further carry, we need a close above 126 mark and then towards 132. So short-term buying can still be maintained with 119 as a stop loss, and above 126 she can book complete profit around 130 levels.
Got your view, Ajit. But let's go across to New Delhi now. Ahmad has a stock-related query for us. Ahmad, very good morning. What's your query?
Good morning to everyone. Actually, I am holding 200 shares of Guardium IVF and healthcare stock. So, and this average price around 130 rupees. Okay. But this stock is being put under periodic call options. It has been put under this twice in about a month. So, what is the risk involved for a long-term investor? Or long-term investor is not affected by this periodic call option.
Okay, got your question, Ahmad. Saurabh, I don't know about the specific query or what it's put into, but a fundamental opinion if you have on Guardium IVF at this point of time.
This is a niche hospital, specially designed, especially for the IVF, for the parents looking for who are struggling with their child. I mean, with the childbirth. Especially, we are optimistic on the hospital, but certainly it is a new listing. Can't say how the future is expected to plan out. I would rather recommend him to switch his money from Guardian to maybe a company like Rainbow Child, which is much better an option, or maybe Apollo Hospital.
All right, okay. The next one that we have is coming in on Muthoot Finance. Rakesh Gupta from New Delhi is holding 100 shares, bought at the levels of 2808. Considering the numbers, of course, today it's seen a downtick of around 8.8, almost 9% as we speak. But he wants to know whether he can continue to hold this one or sell at the current market price. So I'll stick with you for this one. What do you make of the earnings, and what would you recommend our viewer?
See, today's reaction is certainly not for the growth that the company is putting in, but it is largely because of the market is sensing some kind of a competition coming in, because net interest margin of the in this quarter for Muthoot Finance has cooled off significantly, which was not expected by the market. So that is the result because of which the stock has tanked down. I think going forward, markets may adjust the valuations of Muthoot Finance accordingly with the dip in the net interest margin, and it may happen in the ensuing quarters also. So some kind of a consolidation is expected rather than the perpendicular rise which stock has seen historically. So if you want, you can book profit from the table.
Got it. The next one's on UPL. Mihir, who's from Mumbai, is holding the shares at 610. Wants to know a 6-month view of this counter. But Ajit, from the start of the year, this has been underperforming. Would you recommend him to hold for the next 6 months? What's your view?
So Puneet, yes, means from 800 to 550, 560 levels. So it was sharp decline, and it's been almost like 3-4 months now that we are seeing volatile swings continuing in the stock. The good part is that after retesting its previous swing lows, we are again seeing the stock witnessing recovery, and we are currently hovering around the 100 EMA mark. So let's say once we cross this hurdle of around 622, 623, probably it might attempt retest of the long-term averages around 640 area. So it's a hold with 590 as a trailing stop loss, and around 640 you should review his position again.
Got it. Let's quickly pull up how Persistent System is doing as well. Now, there was that Forex impact on the other expenses, and hence you saw that stock react on that, because if you put that impact through, the EBIT margin has come in at 13.5%. You also had, a lot of, views going into the results. You had a very good results coming in from Coforge, and hence the pressure definitely on Persistent to deliver to 4.2% constant currency growth is what the company has delivered. But it's also important to get, some perspective of the management as well, and, how the company has performed, what is, of course, the AI revenue part as well. And that would be some of the key aspects from the conversations. My colleague, Neeraj Shah, who of course had an insightful conversation with Sandeep Kalra, Executive Director, as well as the CEO of the company. Let's listen into a bite of what he had to say about the results, as well as what he's currently seeing on the ground. Let's listen.
Well, IT needs solid results from select companies and Persistent hasn't disappointed. Beat estimates, revenue grew about 4.1% constant currency quarter on quarter. I think the estimates were about 3.1%. The TCV is very strong as well, up about 120% YOY. And the ACV looking fairly solid too. Sandeep Kalra joins in right now to talk about, how the start of FY27 has been and how the year ahead could shape up to be like as well. Sandeep, great having you and good talking to you in quick succession, considering we also spoke after your acquisition. But let's start off with how you think the quarter went by, one on the deal wins and two on the nature of the conversations with clients right now.
Yeah. So first of all, Neeraj, thank you for having me. From a quarter perspective, as you rightly said, we delivered well on the revenue growth. We had a fairly good quarter from a order booking perspective. The client, discussions are healthy. Some of the deals are taking a little bit more time, but we had a fairly good conversion and the pipeline is pretty strong. From a large deal perspective, as you rightly mentioned, we had a large deal of $650 million TCV perspective, 125 million plus on an annual contract value perspective. We had seen a little ramp up of that in the last quarter. Full ramp up will happen between this quarter and the next. Most of it happening within this quarter itself, since it involves supporting multiple products, including even, taking over people. From that perspective, it should have a fairly decent impact on this quarter and for the full year as well. So that bodes well for our full year growth, to your point.
Got it. Okay, Sandeep, can I ask a follow-up on that before we move on to the other aspects? So on deal wins one per se, for this particular deal, the large one that you've done in, or for deal wins in general, what is the breakup between what is, if you can do that kind of a breakup between what is AI-led versus what is still traditional services per se, part one of the question. And because it's a large one at that, does it impact your client concentration metrics that you speak so strongly about and how much you want to diversify?
Yeah. So I'll go the reverse gear first. Does it impact the client concentration metrics? It does. But having said that, at one point in time, if you look at it, a lot of our analysts and even people like investors, big investors, wanted us to have more than $100 million accounts. So from that perspective, as we have grown up, and today we are at a $1.7 billion plus run rate, 1.8 plus. In the next few quarters, as we had said, aspirationally we want to be a $2 billion company from a run rate perspective, quarterly run rate into 4. We'll achieve that pretty soon in the next 1 to 2 quarters. And so from that perspective, even if the revenue goes up, the percentage client concentration will also moderate over a period of time. So we're not worried about it. It is, in our mind, a fairly healthy growth. It also proves the point that if we can work with some of the largest technology companies in the world and sign deals of this extent, we can fairly well work with Fortune 500 companies, whether they're product companies or enterprises. So it bodes well. Not worried about the client concentration. It will moderate over a period of time.
Got it. Okay, now, very strong revenue growth as well. This is what, Sandeep, if I'm not wrong, please correct me if I am, but what, the 25th straight consecutive quarter of growth quarter, right? And I think individual verticals, healthcare, life sciences, etc., all of that did so well. What is the client sentiment right now in terms of spend, in terms of dialogue, and in terms of paying the buck that you may seek as a company while you are trying to do, while every company, whether products or services, is trying to get this AI layer in their offerings?
Yeah. So multiple things in there. So if you look at it overall from a revenue growth perspective, not just this was the 25th sequential quarter of revenue growth, with a large deal, hopefully, it bodes well for the next quarter and quarters as well. So from that perspective, the team has executed impeccably well, and I couldn't be more proud of the team. Now, in terms of client conversations, there are obviously different, buckets of discussions. On one side, people are trying to do cost optimization, and the AI part is also a lever towards the cost optimization. So even the large deal that we have won, it is basically where we are taking over product from multiple different SaaS products, optimizing the product engineering side of it, whether it is feature enhancements, whether it's sustaining engineering, support, part of the product, or even, the cloud operations. So AI is enabling us both sides. On one side, cost optimization. On the other side, even revenue enhancement, new business models, outcome-based, and so on and so forth. So AI is a lever in both of these. And in our mind, AI will get, into every part of the things that we do. And we are building platforms to be able to showcase. Some people will take those platforms. Sometimes we will do it on frontier models, different technologies. but discussions are pretty good on both sides, both cost optimization using AI and using AI, newer business models, newer revenue growth engines.
Well, that was Sandeep Kalra, of course, of Persistent Systems, and we'll play out a chunk of that conversation again. That was his conversation and his view on the large deals as well as how the company looks at it. And let's get back to your stock-related queries now, and we'll just start the rapid-fire round in post this question. This one's coming in on from Germany. Avinash wants to know about Gen Resource Recycling. He's bought these shares at around 323 odd. Wants to know if he should continue to hold his 500 shares. Saurabh, what would you recommend? Any view on the stock?
I think that on the operational matrices, the company has done well in the past, and the company is doing some kind of a niche work. So, in my opinion, yes, you can hold it.
That's the view coming on Giant Resource. The next one that we have is coming in from our viewer who's, I think, writing us from UAE, asking about Morpin Labs. He or she has bought it in September 2024, 1,000 shares at the levels of 94.5. Says can wait for only 6 more months. Target price on this one, Ajit, what would you recommend?
So Mahima, the stock has rebounded swiftly, but again, we are seeing that a breather around 65-70 zone, the previous swing high. So once, let's say, we surpass this area, then probably 75 plus area is something that the stock might test. So as of now, it's a hold with the immediate base at 53 as a stop loss.
Correct. The next one's on Biocon, and Ajit, let me stick with you on this one. Wilson from Mumbai bought these shares at 429. Wants to know about the counter, if he should still continue to hold his 1200 odd shares. After a really long time, Ajit, we've seen that sustenance of move above 400. Is this the one that continues?
So probably yes, Puneet, because if see pharma being one of the top performing sector alongside with the healthcare basket of late, and Biocon, though it has not participated the way we are seeing some of the other counters have done well. So maybe as a second ranker, we'll continue to see this gradual up move continuing. 410 now being the base area. With that as a stop loss, you can definitely stay put. In the next leg, 445, 455 is something the stock might test.
Okay, all right. So that's you coming on back on. Well, it's time for a rapid fire round. Ajit and Saurabh, try to keep your answers as short as possible. The first one that we have is on Thomas Cook. Arvind Manjeshwar has got 100 shares at the levels of 158. From 1 to 2 year perspective, continue to hold, Saurabh?
Hold.
The next one coming through, this one. Okay, let me take another question on SMS Pharma. Short-term view is what Venu wants from Hyderabad. Ajit?
Book profit.
Okay, the next one is on BSE Limited. Our viewer says if this is a good time to invest into this counter from a really long-term perspective. He's quoted 10 years. Saurabh, what would you recommend?
Looks expensive to me. Wait for the lower levels.
Gopal Krishna is holding on to Kaplan Point. He wants to know if he can sell out at this point of time. Ajit has done well in the last year. Should he do that?
Book partial and maintain a trailing stop as 2400 mark.
Okay, the next one is on Oracle Financial Services. 1 to 2 year horizon. Is this a good time to enter the counter, Saurabh?
You can buy in gradual manner.
Next one's on Torrent Pharma. Saurabh, our viewer wants to know if it's a good time to enter for the long term now.
Yes, you can buy.
Mahathir Suzuki, good time to enter from a medium to long term perspective. Ashish from Bengaluru wants to know. Saurabh?
Buy in a staggered manner.
Heritage Foods bought at 537 by Purnima, so at elevated levels here. Ajit wants to know about her strategy, if she should still continue to hold.
Yeah, so seems like consolidation. Around 400, review the position. In the interim, maintain stop at 310.
ICTC is the other one. Sriram from Hyderabad bought 25 shares at an average price of 825. Continue to hold, average, sell the stock. Ajit on the charts.
Technical rebound likely around 550. Review the position. In the interim, 490 stop.
Also, Ajit on Northern Arc as well, because Rakesh is holding these shares at 316. Stocks trading at 292 now. What's your view?
So can see a breather after this corrective phase. Maintain a stop at 280 and around 310, 320. Reduce position.
The next one is on L&T. Vignesh from Bengaluru is holding 30 shares, bought at the levels of 3,800. Add more at the current levels. Saurabh, your view?
Yes, you can add. Keep on holding for long term.
Pawan Kumar bought Tata Power 4 years ago at 200 rupees. Saurabh, he wants to know if he can hold for the next 5 to 10 years. Should he do so?
Yes, you can hold and can buy companies like NTPC or NLC India.
Okay, Kane's Tech is the other one from a medium-term perspective. 2 to 3 years is what our viewer has mentioned. Continue to hold this one. Bought an average price of 3456. What would you recommend, Saurabh?
Book some profit and keep on hold.
Manish holds on to Shiva Cement at 45 odd rupees. He wants to know a long-term view. Saurabh, should he just switch to a bigger player? JSW Cement owns it, of course, but what's your view on the stock?
Better to switch to bigger player like JSW or maybe Ultratech.
Okay, the next one is on Crisil. Siva from Amravati has bought it at the levels of 4250, 3 months perspective. What would you suggest, Jeet? It had given a good breakout, but now getting into that consolidated zone.
So yes, possible up move above 4550 expected. So with stop at 4200, stay put.
The next one coming through, this from Bhaskaran. He wants a fresh investment into a nationalized bank. Saurabh, what would be your recommendation?
You can go with the Indian Bank, Canara Bank or Bank Baroda.
Okay, Thangamai is the other one. Jayakrishnan from Kerala has bought it at the levels of 7230 and wants to know from, I don't think this buying price is correct, but from a 6 months perspective, Ajit, what would you recommend him? Can he average at the current levels is what he's asking. No, probably this buying price. So he's bought it at the highest point and wants to know if he can go ahead and average this one.
So I guess it's continuing its sharp decline and pretty close around 4400 mark is something that might take a breather. So avoid any fresh adding, hold with 4400 as a stop and use recovery towards 5500 to review the position.
Also on M&M Financial as well, Ajit, if you can give a view. Our viewer Ashwini has bought at 375. Stock's done well recently. Should he continue to hold?
Book partial profit and trade stop loss at 384 for remaining trade.
Pine Labs is the other one. Radhakrishnan from Bengaluru wants to know the 6 months outlook for this one. Right time to enter, Ajit?
Overall trend is still down. We are just seeing a rebound. So with stop at 135, one can look for a rebound trade towards 165, 170.
Got it. The next and the last question for today is from Sanjay from Bengaluru. Wants to know between Suzlon Energy or Inox Wind, what's a better pick to enter, Saurabh?
Suzlon Energy is better pick.
Got it. Well, that was the last question of the show as well as the rapid fire. Ajit as well as Saurabh, thanks so much for helping us solve 72 queries that we have in the last 1 hour. Appreciate your time as well as your inputs. But viewers, out of time on this edition of the show. Thanks so much for watching. Stay tuned. A lot more queries on the other side at 2 p.m. So we'll see you there.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Kia ora from New Zealand and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey. This is a very interesting show where we get you the hottest companies, and at times we also get you some interesting multi-baggers as well. But today also there is a very interesting stock talk about. It's an Ahmedabad-based NBFC company, and recently they have come out with a good announcement as well. We'll get that as well. Second hint is the stock is up 41% from 2024 lows. And also one more hint I would like to give you, the Q1 numbers were largely stable, and that 16,000 crore AUM mark has been crossed. So that's of course a big milestone for the company. And interestingly, Nippon has 8% stake in the company, and we know these schemes have good exposure in small caps. Today in KYC, we will be talking about Mass Financial Services. This is the company on the screen which we can get. This is the company we are talking about. But why are we calling this right now? What's the relevance right now? Is the NBFC cycle going to go up? Because it has tested the patience of investors. So the first question we definitely need to ask, is there agency order win coming in from Unique Identification Authority, UDI? That is the first question we will be asking. But company recently came out with its numbers also. So we'll get the AUM and the operational guidance. Is there any variation at play? They have exposure in Gujarat also. And you remember, is the underwriting model, how does this actually work? Will it get impacted? Why I'm talking about Gujarat is because floods were there recently. That's why there's a risk. Macro risk is definitely there, and energy prices in those portfolios, has that been hit or not? Because they have exposure in the SME space. And is the cycle turning? And if yes, are there any green shoots, or we need to wait it out? That's the big question to be asked from the company. And also the NIM and credit guidance, how they're able to maintain it despite such a volatile market. So we need to understand what is the company's overall mentality in this. Also, the near-term pressure on the conversions, that's what the brokerages have raised. We'll try to get that clarity in as well. And lastly, apart from these questions, there is any expectation of a credit rating upgrade. If that happens, the cost of borrowing comes down for the company, and Street is expecting this should happen. But let's understand and break, or peel by peel, let's understand what are the nitty-gritties for Mass Financial Services here. First of all, it's an Ahmedabad-based NBFC. It was established in the year 1995. Another important point, they offer micro enterprises, SME, two-wheeler, CV, salaried and housing loan segment as well. Of course, the coverage is pretty big. They have 283 branches across 13 states. Well covered, but it's expanding from a regional player to a pan-India player. This is of course Nippon India Mutual Fund having 8% stake in the company and roughly 15% stake from the domestic mutual funds. The Q1 numbers, let's do a revision. This had come in last week. Healthy AUM growth and resilient asset quality was there despite tough macros, and that is the strength of a company in these times, how they underwrite, and we'll try to understand that from the management as well. 80% loans are on-book AUM. Now you must be wondering, what does on-book AUM mean? On-book AUM is nothing but overall portfolio is taken under the balance sheet of the company itself, and that is Mass Financial Services here. But what you should know, this is very much important. A lot of viewers write to me that, Sharad, please decode all these words, and remember, it's very easy. Gross NPA,
lower the better. That's the asset quality. And NNPA is the same thing. That becomes the net NPA and net interest income. This is also pretty much interesting. This is higher the better when you are analyzing an NBFC company or when you see the P&L. ROA, ROE, these are of course the return on equity and return on assets. These are basic numbers which the company gives out in the press release. You should have a look at that to understand how things are moving. Also, apart from this, NIMs, net interest margins, that's what we have done earlier. So just a revision of that. But let's move on. After this revision, now you know what to track. But what are the recent announcements? And that is where the street is looking at. They have received an approval from Unique Identification Authority of India. You call it short form UIDAI. Now why this is there? This is coming in from Protein eGov. And if you look at it, this is for authentication and KYC user agency. So likely neutral to positive announcement coming in recently for Mass Financial Services. But let's move ahead and understand more. How does the loan book breakup look like? MSME, that is 80%, India's backbone, MSME, 80% of that loan is coming here. That means in case an inflation or a macro event happens, this gets the hurt most. Maybe that's the reason why we haven't seen the stock moves going very high and in a big consolidation range over the last, we could say 4 to 5 years. The distribution, the direct retail is still 67% happening and the balance 33% is coming in from your retail asset channel. So this is very much important to understand the distribution. But what may work for the company, because stock hasn't moved so much. The valuations are attractive right now. That's the first reason. Point out the second one, they are de-risking across geographies, products and distribution channels, and it's being seen in the numbers. A very robust number in a challenging environment, and I must congratulate that to the management. Third important reason, let's have a look, and that is the credit upgrade that's likely to come, what channel checks or industry is estimating. So the cost of funds might come down as well. Apart from this, also the sectoral tailwinds are expected to kick in because NBFCs have been out of flavor in the Dalal Street for the last 2 to 3 years. Maybe that pressure is bottoming out as well. But what may not work, near-term pressure on the conversions. That was a case raised by the broking houses. Gujarat floods impact, is it there or not? In the con call, the company had mentioned that the impact is not there much. But we need to understand, what happens in the second quarter, and the macro headwinds, they are still there, especially with the loan portfolio, जिसको लोन देते हैं, जो energy risk में ज़्यादा impact आता है. So this is the entire picture for Mass Financial Services. But let's understand more in the KYC ratings which we give. And whenever we get an NBFC company, I tweak the overall ratings, because in order to do that, we need operational parameters, asset quality, return ratios. This is much better to look at. Largely balance sheet is well maintained because they have to follow RBI. So it's no point doing that because it's a stable number. Also the usual shareholding street cred which you already know, and the valuations, I'll try to understand why I'm trying to say that it's at the cheapest levels right now. But will it be cheap because of the pressure in the industry? That's the question I'll answer for you. Also, let's look at the income statement. We always see the net interest income, which I pointed out, and net profit. Just look at the yearly picture and how things have gone up. It's almost, most of them have gone up by 1.5 to 2 times most of the parameters. So it has been doing a good journey all throughout as India's credit story also pans out. And this is very much important because that's the SME segment. And strong growth coming in, of course, on a year-on-year basis also. A lot of parameters in the income statement you track year-on-year basis, but things like asset quality, NIMs, you should check sequentially also. I'll get back to that, but you need to hold on with me. So net income statement is a strong positive right now. Also, let's move on and understand the second important factor, that is the operational parameters, cost of funds, net interest margin, cost to income, how things have panned out. I've taken the long-term perspective, of course the Q1 numbers are also out. It's almost more or less the same. But largely it has been pretty good. See it from a longer time of view. If you're a long-term investor, then it will be much more sense it will make for you for KYC. And net operationally also it is showing a good strength. Loan book also going up very nicely from 8,900 odd crore rupees, almost touching that 15,000 crore mark. I had mentioned you the 16,000 crore number. Remember, that is the combined consolidated numbers which I'm talking about. So net, this is the loan book also showing a good strength from the operational parameters. But let's talk about the asset quality, how things are moving. It's very much important to understand how things pan out. Largely asset quality should come down, but it has more or less been at the same levels. Talk about gross NPAs, talk about net NPAs. It has not, gone really bad, seeing what the condition is looking like. So that is where the conservatism of the management comes into play. Let's pull out the net NPA also to show you how things have been there, and they have maintained it. So that's a good sign actually. So I'm keeping it a neutral rating right now, because if the cycle turns, then the company starts benefiting. But yes, that will take time, and that is why you need patience in the stock markets. Let's move on from operational parameters and understand the return ratios, ROAs and ROEs. Nothing much has changed, to be honest. It's been very stable. So I'm going to give this a neutral rating and move on. Apart from return ratios is the shareholding pattern. Let's see what things have moved. Promoters' stake is still there at 67%. FIs on the lower side 3%, but DIs, look at that. A lot of mutual funds are taking good positions here. And largely FIs have increased their position, and a very minor fall coming in for DIs. Rest, everything is quite similar on the screen. So I'm going to give this a neutral rating as well. But let's talk about street cred, and this is one of the most important parameter to track. And for Mass Financial Services, if you're a long-term investor, technically money has not been made. It's just 21% of returns coming in here. That means a long period of consolidation the stock has been. Now, will that change or not? That is the big question to be asked, and wait for that, because I'm going to get you the valuations just after this, so then you can make your decisions. But from June lows, it's up 11%, it's decent. From 2024 lows, it's up 45%. So for the medium term basis, the company has made money, but for the long term, definitely they haven't made money. It's just 21% return. So yes, patience has been tested in this counter. To balance things out, it's a neutral rating from my side when it comes to street cred. But listen, the valuations are very attractive. Look at that, it's below the 2 price to book ratio. If I talk about the 12 months trailing price to book ratio, so that means there's a good valuation catch up to be done. 3.8 times was the valuation at its peak in the last 5 years, and the average also, it's down roughly 30-35%. It's at 2.6 times. So it's, of course, valuation wise, it's extremely cheap right now, and that is why I'm going to give this a strong thumbs up when it comes to the valuations for Mass Financial Services. Let's talk about outlook. A lot of stress is coming in, but the management is somehow maintaining their guidance for FY27. The target is 20 to 25% AUM growth. They are sticking by it. Second reason, housing finance, a 35% CAGR growth over the medium term they are expecting. So all these are guidances. Take it with a pinch of salt, because these are a long-term or medium-term guidance. NIM guidance, despite what's happening, they are targeting a conversion of 8 to 8.5%. So that's a big statement from the company. They do not expect any material asset quality impact from floods in Gujarat. This is an important statement in the con call. So net, it's a strong thumbs up when it comes to the total outlook. So we spoke about all the 8 KYC ratings, but let's understand, and give you a revision of why I've given the rates and what's the overall KYC rating for Mass Financial Services. Income statement and operational parameters have been really strong. Take everything on the long-term basis. Asset quality, pretty decent. The return ratios have been quite flattish here. On the other hand, shareholding, street cred, for medium-term money has been made, but for long-term, the patience has been tested. Looking at the valuations, very attractive right now, because the stock is under a massive period of consolidation. And if you follow technical charts and fundamental, you'll understand what I'm trying to say, and the outlook as well. So overall, on the higher side of the average, we give 6 out of 8 for Mass Financial Services in KYC. But our conversation continues, and we'll have Dhwanil Gandhi. It's a very interesting second generation face, executive director of the company, and also some important details about him. He has more than 10 years of experience in the company. Of course, he started the SME lending. He's developing that, and important approvals in the insurance was under him. ISB Hyderabad, Kellogg, LSCA, and NSU. He's the alumni of these important institutions. So the conversation continues with Dhwanil, but just after a break. Oh, well, Dhwanil is already with us, so it's always a pleasure to have you. Dhwanil, good afternoon. It's Sharad here. First of all, UIDA approval which has come in. This is an agency approval from Protein. What does this mean for the company?
Hi, Sharad. Hi, thank you for having me. Good morning. So yes, late last week, we got the UIDA approval for doing sub KOA, AOA licensing. So that helps us a little bit on the operational side. Earlier, we were using third-party agency services for certain authentication services. Now we can do that ourselves because we hold the license ourselves. So operationally, it helps us a little bit. We went through a very rigorous UIDAI audit, and finally the approval has come in. And our IT team will be working in integrating that approval in various processes of ours. So that's the update on the latest license that we've seen from UIDAI.
Right, Dhwanil, recently the company came out with its quarterly numbers also, and despite what we are seeing, the pressure in the market, largely we see that you have come out of it, unscratched. But I want to understand some numbers from you, the guidances which were there in the con call, AUM and the operational parameters. What are the key guidances for FY27, the growth numbers, if you could share with us?
If you notice, the number has been inching up since last 2 to 3 quarters in terms of the AUM growth, both on quarterly basis and Y-on-Y basis. So this quarter we clocked around 21.5% in terms of AUM growth. And going forward, we are confident that we could be anywhere between 21 to 23% in terms of AUM growth for this financial year. The target is to be on the upper band of our general guidance of 20-25%. But looking at the overall macro situation, we will be little watchful. But with festival season coming in, Q2, Q3, Q4 are generally stronger. So we are hoping that 22 to 23% AUM growth. And if we get an opportunity to accelerate in the later quarters, maybe closer to 24-25% is something that we are targeting for this financial year.
Fair enough. Let's understand, or if you could just help us out with decoding this underwriting model of yours. You can go in detail. We want to actually understand that because you have done a very phenomenal job in last 2 to 3 quarters. There was so much stress coming in this space from SME, and largely nobody was talking about it. And that's the key reason why I have got your company to understand what is your underwriting model, how does it work, what's the process. If you could explain us in detail.
Right. So if you go back around say 4 to 6 quarters ago, I think in and around when the US tariffs and all came in, we were slightly circumspect on the overall market situation in certain geographies and certain sectors since then. So I think what has helped us on the underwriting model is having our ears very close to the ground, a very long vintage of 31 years, which has helped us fine tune this model continuously, and the risk team that we have, which is continuously working on the smallest of parameters, because over here what happens is that you have to work on a lot of small policy parameters continuously, look at early warning signals, keep on tweaking those, and do the needful in terms of the business growth as well. So I think we were little watchful on certain segments like textile, FMCG, certain trading businesses, and we had gone a little slow on that. Even if you look at the growth, we had slowed down the UM growth to around 17-18% for a few quarters as well. So we are never shy of taking the foot off the pedal if we feel that the asset quality or the kind of proposals that are coming in are not that great. So I think a combination of our early warning signals, policy tweaking, compromising growth a little bit for asset quality and profitability, a combination of all of these things have helped us to keep the asset quality in check.
Yes, that's true about that, because it has not, gone that bad compared to what you're operating at. But I want to understand a little bit more about the details, about your customers, especially who are getting the shock from the oil prices, or maybe the Gujarat floods. That impact might be seen in the second quarter. I wanted to understand, how this stress is there, and if there is a stress, is it significant?
So when this Iran-US war happened, and there was a little bit of stress on the overall supply of energy, gas, and petrol and all. we had slowed down certain segments of businesses like petrol pumps, restaurants, or business or manufacturing businesses which used energy of any form in terms of their input. So that is something that we had taken the call in Q4 and and the first half of Q1, and that has helped us, keep the asset quality currently in check. Honestly, asset quality impact starts kicking, or you start seeing that 2-3 quarters down the line, because you do fresh lending, which and the asset quality doesn't necessarily start going bad, or you don't start seeing stress immediately. But there are other signs like early bouncing and all of those things which you can observe. But to err on the side of caution, we had already slowed down on certain segments because of this energy volatility. And on the flood side, I think we are still assessing the situation. South Gujarat is certain parts of South Gujarat are more adversely hit, but our team is assessing the situation right now. But we feel that the impact may not be that bad, and I think our customers will come out unscathed out of this as well. There could be temporary blip in terms of their working capital cycle and inventory, which they will have to refill again. So maybe 1 or 2 months here or there, their business can go a little bit of haywire. But other than that, we feel that they will confidently bounce back.
All right, so a little bit of blip, and that's, of course, we cannot help that. But I want to understand, because you gave a hint that NBFC cycle might be turning. Of course, it won't turn this quarter, but maybe in 2-3 quarters. So timelines and what are the green shoots? We have spoken a lot about the pressure, but I'm sure there are green shoots also in your industry. There's smart money moving into a lot of NBFCs, which we have seen in Dalal Street. But what are the green shoots? What's the other side? Next 2 to 3 quarters we can see.
So I think in terms of green shoots, number one will be hopefully what we are seeing recently since last 2-3 days. If this crisis dies down, and if inflation and all those things get under control, and if RBI is keeping the rate steady, I think that can help in kickstarting another growth cycle. Overall, market has been good. The demand has also been very steady. So we feel that if everything stays like this, and if things don't deteriorate further, I think with festivals and all coming in also, which is important in retail lending, retail finance, I think next 2 to 3 quarters can be good in terms of the growth and the customer demand. And another green shoot is obviously the overall market size. So the market size is huge. There's a lot of under penetration in terms of the credit. So I think all those things can also come in. And also the ECLGS scheme which is going on currently. So we are also trying to figure out, talk with our customers in terms of the requirement for working capital and the additional facility that we can provide to them in terms of the ECLGS which government has granted. I think all of these things will help in the coming 2-3 years.
Right, so 2-3 important factors coming in, and Dwanil, you're right, as an industry spokesperson, and also what the analysts are talking, it's matching and definitely something to watch out for. Even I picked out this point in our analysis. But the NIM and credit guidance, how does that work out going ahead? Because you have maintained that guidance, that 8 to 8.5%. So going ahead, do you think this will sustain, or any kind of a pressure you can expect in Q2?
No, we feel that it will sustain at current level. We feel that the cost of borrowing has kind of bottomed out for now. We will be anywhere between 9.25 to 9.35% in terms of the cost of borrowing. Yields are largely stable. If you look at our yields for this quarter also, there was a 10 bips increase in the yields. So considering yields and the cost of borrowing staying stable, even the credit cost being range bound and stable at anywhere between 1.5 to 1.7, we feel that NIM guidance of 8 to 8.5% is what we are looking at, is achievable.
Okay, these numbers are achievable despite little bit of blips here and there, and 2 to 3 or 4 quarters of up move if green shoots persist. But near-term pressure on conversions, brokerages have raised that concern for your company. Do you think that's happening, or that's bottoming out, or you have mitigated that?
near-term concerns, honestly, is only this crisis. Other than that, we feel that Q2, already we are past 1 month, so Q2 is going to be steady and strong. We don't see any near-term, other than any near-term pressure. We don't see any pressure on the early warning signals we are seeing on the portfolio quality as well. So we are watchful of the same, but we are not seeing any near-term pressure on portfolio quality or growth as of now.
Dhanil, as per my calculations, I analyzed the way you have underwriting, your asset quality is maintained, and seeing the current macro situation, does this warrant a potential credit rating upgrade? Because it seems like something might be around the corner. What do you think?
No, we are pursuing the rating agencies. So 2 years ago was when we got upgraded to AA minus, and now with the size also increasing, standalone 15,000 plus crores, consolidated 16,000 plus crores in terms of AUM, and the way that we are growing and the way the balance sheet strength is in terms of capital adequacy, very strong at 23% plus, promoter holding at 67% plus. Very unseen in our industry. So I think there are a lot of factors, a lot of food for thought for the rating agencies, and we are pursuing them very actively. That when the next rating upgrade can come in. I think once the size also crosses a certain threshold, we feel that the comfort will come in. And once we give performance like we have given for last 125 quarters, once we give another 2, 3, 4 quarters of very consistent performance, we are very confident that the rating upgrade should come in, and that should help us in raising liability very competitively as well. So we can tap new avenues and also get this cost of borrowing sub 9%. It will be our first target with the rating upgrade that comes in.
Yes, that's why for the viewers, this was mentioned, is when you do the rating upgrade, the cost of fund or borrowing comes down, and this is like a raw material for an NBFC. Interesting. But I want to ask one more question. You are also second generation youth. I'm sure AI is very much important as well. So wanted to understand, how are you using AI in your company, or is there a use case right now here?
Yes, definitely. So there are multiple use cases going on across the organization. Majorly where we are seeing the use of AI is cutting down on turnaround time in the way that we serve to our customers, and we are using artificial intelligence in various back-end operational processes and credit underwriting processes. So there is still human intervention in terms of credit underwriting, because the nature of our customer is informal. It can't be 100% a straight through green channel process. But one thing that we highlighted also was that our employee count went down in this quarter, and that is because of last 3, 4 quarters work in terms of technological upgradations and use of AI in some of our processes and dashboard managements that we have been doing, and that has led to some rationalization in the employee benefit expense as well. So we are constantly working on various models across the organization, and I think it will keep on increasing quarter on quarter as more adoption comes.
Right, Dhanil, thank you very much for taking out your time and giving the entire picture for the company, your underwriting model, and interestingly, a hope for a credit rating upgrade soon. It's always a pleasure to have you with us, and best of luck for the future. So that's the management of Mass Financial Services. The stock hasn't done much in the last 5 years, but now will it do or not? That's the main question, and interesting story we had from the management today. So for all these, stay tuned to NDTV Profit and keep watching KYC.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export.
Benchmarks hover close to day's high with the Nifty 50 sustaining above 24,500 and the Sensex gaining over 650 points today. Falling oil prices and optimism around US-Iran talks aid the market sentiment today. Oil prices fell sharply after US President Donald Trump said that the fresh talks with Iran would begin this week, raising hopes of easing geopolitical tensions and reducing the risk of supply disruptions. Muthoot Finance under sharp selling pressure today after its June quarter results. A sequential drop in profit and revenue disappointed the investors, triggering a strong negative reaction in the stock. Urban Company shares surged after its June quarter results as positive brokerage commentary and confidence in the company's long-term growth strategy overshadowed a wider quarterly loss. Zee Entertainment shares came under pressure after SEBI barred the company from the securities market for 2 months and imposed a 1-year market ban on Subhash Chandra and Puneet Goenka in the Hyderabad land pledge case. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar. Let's take a quick look at the market at this particular time in midday. And when we talk about Nifty 50, well, it's inching towards 24,600 levels. What a huge recovery that we have seen, and a very sustained one at that. When we look at the benchmark indices, a large part of it has to do with the oil prices. Remember that the crude oil prices have been the biggest dampener whole year for us because of the geopolitical tension, and any bit of positive development coming in on de-escalation of the war, softening the crude oil prices, is really the impact that is really showing in the markets today. Let's see what's really contributing to the overall momentum, and it's a widespread contribution when we look at the Indian markets today, with the mid caps as well as the benchmarks being in tow when it comes to the gaining momentum and buying seen in the market. When we talk about the contribution, well, even IT is doing well, and Infosys is the biggest gainer in trade today, along with some of the big banks. And remember, banks are the quasi-investment play into the economy of the country, and therefore the crude oil prices softening are giving a direct benefit to some of our big banking names which contribute to Nifty 50, like State Bank of India, HDFC Bank also, both put together are really adding about 40 odd points to Nifty 50, which is currently gaining about 200 points. Now when we talk about the sectors at play, well, it's all across buying scene on the sectors as well. Only media, because of Zee Entertainment seeing a big downer. So that's the only one, but it's a very small portion of the market. And the banks, PSU banks, IT, FMCG, as well as financial services on the whole, and high beta metal stocks, they are the ones really pushing up the market. When we take a look at the overall momentum as well, let's also take a look at the internals when it comes to the mid-cap universe. So looking at that, on days like this, even though the markets are good, it is the punishment to the poor earnings that the market has really segregated, and therefore Muthoot Finance is on top of my list with almost 9% drop. Let's also take a look at Sun Pharma, which reported its numbers on Friday. There are a few brokerage reports which have positive call on this particular company. It's 1.5% down currently, but a lot more needs to be seen when we talk about the numbers going forward, also the guidance coming in from the company, and when we talk about the margin play. So Sun Pharma is the one that we are really looking at, and Jayashree Satagopan, who is the CFO of Sun Pharmaceutical Industries, joins in. Jayashree, always a pleasure to get chatting with you on NDTV Profit. First, let's begin with the key highlights and the factors which really impacted the first quarter in your view.
Our first quarter results have been demonstrating a steady performance, which has been primarily led by a strong and consistent performance by our India business, and also a consistent performance by our innovative medicines business, which is driven both in US and across our global markets. So that's been a pretty good performance during the first quarter.
Right, Jayashree, when we look at your EBITDA margins and, at 28.7% versus 21.5%, looking at the margin picture, what is it that you're really guiding for Q2? Are these numbers sustainable in the present quarter as well?
I think when you look at the gross margins, they've been comparable, actually slightly up on a year-on-year basis. On the net margin, primarily you would see that there has been an increase in our effective tax rate. Some of the incentives that we used to get and the lower tax regime that we were enjoying in India is now getting exhausted. And given that we are a global company and we have taxes in multiple other jurisdictions where the rates vary, our ETR has gone up to 27.8% during the quarter. And we expect this trend to continue until we get into Organon's complete merger acquisition. Therefore, one should factor in a slightly elevated ETR, which is the reason you would see that the net profits have been slightly lower.
Right, Jayashree, you mentioned Organon acquisition, and recently that was announced. What's the progress? And now what is the visibility on which quarter the Organon investment can really start showing results on your performance?
Look, the work for Organon integration planning has been going in full steam. The regulatory approvals in the respective geographies have all been filed. And as of July 23rd, Organon shareholders have also given the approval for the transaction. So in my view, I think we are going on the right path. And as we guided earlier, we should look for the regulatory approvals all to come in by the fourth quarter of this financial year for the transaction to get completed.
That's right. In the quarter gone by, Jayashree, one spot of bother for your performance is the US generic play. It has seen a decline of 9.7%. What are the factors impacting it, and is that going to improve in this particular quarter?
The US business, if you look at overall, there are two components to it. We have our innovative medicines business, which has been showing a steady increase in terms of revenue and its performance. The two new products that have been launched, namely Lexelvi and Unloxit, has received positive, encouraging response from the prescribers. The formulary traction has been good. Patients' response has been encouraging. So the innovative medicines business continues to grow stronger. However, on the generics, we did see a decline during the quarter. Part of it is also attributed to lenalidomide, which was there in the first quarter of last year. And as you all know, that this molecule has now come down in terms of its pricing. Therefore, that's the impact that we are seeing in the current quarter. Going forward, as we all know, the US generics business continues to have challenges in terms of pricing pressure. We don't see any great change out there. However, the focus for Sun is going to be to continue to grow our innovative medicines business and also look at strengthening the portfolio in generics business.
Right. So that was about the US generics business and, of course, pricing pressure you mentioned. But specialty segment is your growth engine. It has really been contributing 22% of the sales. What is the outlook on the growth and what is the momentum going forward?
No, in the last quarter, I think the overall growth has been in the range of 12 to 13% for innovative medicines business. And good thing is both the revenues in US and the global markets have been showing good traction. For instance, Illumia has been commercialized in several global geographies, including emerging markets, and we are seeing a very good traction out there. And the focus for Sun obviously is to see how we continue the momentum and also build on Unloxit and Lexilvi's sales in the US.
Right. So specialty, a growth engine and seeing more growth there. But the overall Q2, key factors of growth as you see, and give us a guidance on this particular quarterly performance on an overall basis, Jayashree.
We are not giving quarter-wise revenue guidelines, but what you could perhaps look at is the overall guideline that we have given for the year, which is in the high single digit. I think that's something we should definitely be looking at for the year.
Right. Jayashree, looking at the different geographies, you mentioned about the US generic pricing pressure. Emerging market is healthy at 4.2% YOY growth. What is the geographical expansion as well as which geographies are going to show growth in this quarter and the rest of the financial year?
Look, our focus has been equally on all the 4 geographies that we have today our teams categorized. India obviously has been growing pretty well. Over the last couple of years, we have seen a sustained growth of about 14%. This quarter, we have grown at 16%, which is higher than the market growth. That is the focus for India and will continue to remain sharply focused there. I have already covered on US the priorities and the strategies for us to work in the US market. When it comes to emerging markets and rest of the world, in the last quarter, we did see some of these war-related issues as well as a global scenario, which is a bit way down on the business. But we think over a period in time, this should also normalize, stabilize, and we should start seeing growth in these markets.
Right. There are other aspects also and more global in nature, Jayashree. So US tariff is being talked about somewhere in the horizon. But what about the immediate concerns about supply chain, transportation costs going up? Any important aspects which erode into your margin, if you can give us a guidance, and any constraint due to the war on your business?
I wouldn't think that there has been any supply chain related constraints, so I wouldn't be worried about it. However, as the markets tend to normalize in the coming quarters, one should also look at the approvals that we have got for the new product semaglutide, both in South Africa as well as in Brazil. These could be opportunities that we could possibly capitalize. In South Africa, it's our own launch, whereas in Brazil, we will be outlicensing this to our partners. And we think this could be a good opportunity for emerging markets in this year.
Right. Also, Africa is what you mentioned in terms of geographies. But Jayashree, GLP-1 opportunity is big for Indian pharma. Semaglutide manufacturing concerns were seen a few days back in the industry. How would you allay any such concerns when it comes to Sun Pharma's pitch in taking opportunity in GLP-1?
So look, we do have a strong quality management system, and both the APIs and formulation for semaglutide is manufactured by Sun. And we do have tie-ups with our global agencies and suppliers who give us the devices. So at this point in time, I do not foresee any issues that could come up in terms of supply chain disruptions or quality related. So we will have to continue to focus on the strong quality management and compliance systems to ensure that we are able to service the market without any interruptions.
All right, slight improvement in the stock of Sun Pharma, but still over 1% down. Jayashree, always a pleasure to get chatting with you. All the best for the present quarter. All right, let's move on to another important set of numbers, a stellar Q1 for PNGS Reva, as the company really saw a second consecutive quarter of delivering over 100% revenue growth. And we have with us Amit Modak, the whole-time director as well as CEO of PNGS Reva Diamond Jewelry, joining us now. Amit, always a pleasure to welcome you on NDTV Profit. Good set of numbers. Now, my first question to you would be, 2 straight quarters of 100% revenue growth. Now you have, increased the expectations of the market and the stakeholders. First, tell me, is the same momentum going to continue in the present quarter?
Yes, we will definitely try, but nothing like business or the market work on the equations. So we will definitely try to maintain the momentum. And there is a really good shift towards the studded jewelry from the plain gold jewelry, as it is our government also want to have lesser consumption of the gold while having a luxury in the jewelry. So this studded jewelry serve that purpose, because studded jewelry contains lesser gold as compared to the plain gold jewelry for the same size of the ornament. And that might be inclining the customers to prefer to the studded jewelry or the real diamond or the natural diamond jewelry.
That's right. So, Amit, this is an important factor that you mentioned. Of course, lightweight jewelry in gold, as the prices have increased. That's an important bit for this entire sector, which is gaining momentum. When we talk about your numbers, you did say emphatically that 100% revenue growth is possible. What are the factors? We are already 1 month down in this particular quarter. What are the factors which could lead to the growth? What are the key growth drivers? And also adding, will the EBITDA margin momentum really continue as you expand further in your sales?
See, EBO expansion will definitely put some pressure on the EBITDA, because there will be higher that particular location marketing expenses, then fixed cost will be there to those EBOs. And at initial stage, those EBOs will be trying to become a BEP level capable. And that takes at least 12 to 15 months time to become capable. During that period, whatever cost we will incur, that may put some pressure on the EBITDA, because our employees cost, fixed cost, or the rental fixed cost, this will go up, but there will be lesser contribution as compared to this current normal business. And so 150 to 200 basis point pressure might be there on the EBITDA as well as PAT margins.
Right. Can you specify the number and the guidance, Amit, in terms of what are the kind of EBITDA margins that you'll be comfortable maintaining for this financial year?
We can maintain very easily around 25%, but as I said, it will pressurize 150 to 200 basis point. On that basis, it will be somewhere around 27%. I always think about with the conservative thing. That's why I'm saying it may go max to max down at the 25%.
Right. When we talk about your expansion plan for the entire year, what would you like to end this particular financial year with? You already said 25 to 27% range of EBITDA margin you can really maintain. What is the expansion plan in terms of the revenue, since you have already shown 2 quarters of substantial growth?
So again, I'm repeating, equation doesn't work in the market, neither in the performance nor in the
no, give us the practical, feasible targets that you have for the year.
Practical growth rate can be between as an industry as such, right now industry is showing around 30 to 40% growth in the established market or the settled market. We are going to add EBOs. So EBO addition will definitely contribute to the top line, but it will not in the first current 12 to 15 months time, because in this current 12 to 15 months time, there will be expansion of the EBOs, which will start contribute sizably after 12 months time, because first 8 to 12 months, it will take initial period, gestation period kind of the thing to establish the business and to meaningfully contribute to the top line. So on the whole, as such, if we want to consider what could be the contribution at the top line level, it can be on the average basis somewhere 60 to 75% we can expect.
All right, so that's the guidance you're doing. But Amit, looking at your sector, it is seasonal in nature as well, and we are right in the beginning of a long this time festive period. So give us a sense on the demand, the festive season, as well as what are you expecting on the ground over there?
First quarter there was Akshaya Tritiya, which we clocked as compared to previous year almost 2.75 times. So that was giving us confidence, and subsequently there was a monsoon sale, discount sale, and that also contributed substantially to the top line. This second quarter is comparatively lull, because there is a Ganesh Utsav, then Shravan Mas is there, so Raksha Bandhan is there. But during that period, affordable or the lower ticket size jewelry more gets sold. Main season will come in the Q3 and Q4, where little bit higher ticket size ornaments get sold, mainly in the Q3. Again, Q4, it's a lightweight or the lighter size or the smaller size ticket size, because New Year or the Valentine Day, those are the festival which are getting celebrated as an event, not as a festival, but as an event. So main festival is a Q3 festival, which is a Navratri, Dasra, Diwali. And subsequent to that, a lighter festival at the fag end of the year, that is a year end, and the New Year's welcoming, that is the first week of the January. It is always there, but shopping happens generally in the last week of December. So Q1 has done very well. Q2 will do in the line, but not as Q1 or something. But Q3, Q4 will definitely clock very well. And as a whole year, we can expect the top line to be in the range of 60 to 75% plus.
All right, 60 to 75% plus top line growth. But Amit, just a quick word on your store expansions. Even though you are in 25 cities, you're expanding more stores, but it's concentrated to 3 states. What's your plan there?
See, basically making money is the business. And so from wherever I am getting more and more money, I concentrate that area first and simultaneously other areas, because other areas are taking away the profits or the amount of the earnings for their expansion or the making them viable. So North India is the area where we are expecting to expand, and total 15 EBOs we have planned. Out of that, 2 already established, 1 was established prior to the IPO. So 3 EBOs are there. 2 to 3 EBOs will be coming by end of September or first week of October, that is before festival.
Right.
So it will get catch with the festival.
Right.
And another 4 to 5 EBOs will come in the November, December and Q1 of the FY20.
Sure. Amit Modak, always a pleasure to chat with you. All the best with all your efforts on the company. The stock of the company is just about 40 odd points away from its 52-week high levels. Good performance there. Moving on, Venkatesh Balasubramaniam, who's the MD and Head of Research at JM Financial Institutional Securities, joins in now. Venkatesh, always a pleasure to welcome you on NDTV Profit. My first question, of course, the momentum in the market is totally these days based on the crude realities. What is your short-term to medium-term view on the market momentum? And as we, after monsoon, get into the festive season, what's the outlook in-house?
See, I think the turn has come over the weekend. I think Trump, along with their Middle East allies, have taken a call that they will not be doing any fresh strikes. And what that has done is that has caused crude oil prices to come off in a very sharp fashion. I think that is why the market is on the positive side. The only problem with this is that with everything that Trump decides, it can change within a day or within a week. So
I was asking Venkatesh that the Trump flip-flop is something we have been dealing with when it came to the tariff also whole of last year. Now this year it has been the war situation. So keeping that aside, with earnings, with the monsoon-led impact, the demand on the ground and moving towards the festive season now, how do you sum up the overall market view?
See, overall, I would say that look at it this way. For the current year, I think Nifty, everybody is expecting 15 to 16% kind of EPS growth. That is unlikely to pan out. I think what we believe is possible is maybe around 8 to 9% kind of EPS growth for the full year, which basically means that the market is trading at around financial year 27, it's trading at around 21 times or 22 times FY27, which is slightly on the expensive side because the historical average is close to 17 to 18 times. Now, it is not like the market is extremely cheap. And it is not like growth is extremely robust that the market is going to run away. Our own house call is, I don't think the market is going anywhere. I think it remains at this 24 to 25,000 kind of levels for the Nifty for the next 6 to 9 months is our view. If things start improving next year, at that point in time, maybe we get more constructive. We don't think there's significant downside to the market. We don't think there is significant upside also. The market remains range bound at this level.
All right, range bound at this level, richly valued already at these levels is what your call is. Venkatesh, very quickly, the themes and sectors at play which really make value for a medium to long-term, investments at the current level and at the current stage, according to you.
Okay, so the sectors that we are overweight are basically NBFCs. I think so far the quarterly results also proving that. I think NBFC results profits are up almost 25 to 30%. So we are very positive on NBFCs. We remain positive on some of the consumer names. We are also positive on internet as a theme. This is something which we like. We like the industrials, infrastructure and defense pack. We also like pharma and healthcare, despite the fact that there is the looming clouds of tariffs in the US. But what we are playing in pharma and healthcare is actually not generic pharma. What we are playing is basically the hospitals like Apollo, Fortis. We also like somebody like Dr. Lal's Path Labs. We also like Divi's. So we are staying away from generic pharma, but we like everything other than generic pharma, like hospitals and diagnostics.
All right, healthcare is something you're interested in, minus the pharma space only. Venkatesh Balasubramaniam, it was a pleasure getting all your expert take on the markets. We could chat sometime later, out of time completely, on this edition of Markets at 12. Thank you so much for joining us, and keep it with NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
पी मार्क द मस्टर्ड स्पेशलिस्ट सिंस 1933। बरसों से सरसों।
कुछ तो बात है इस दिल में। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
द मस्टर्ड स्पेशलिस्ट सिंस 1933। बरसों से सरसों।
कुछ तो बात है इस दिल में।
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? 6 तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand.
Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Suzlon studio. With me, Hiral Datia and Sharat Dubey, who's standing at the Profit Market Pit with all the action in the market today. Sharat, you know, we've been talking about what's happening in the markets with the kind of scale that we've been able to achieve today as well. The question is of sustainability, and a lot of market experts are of the opinion right now that there is going to be a lot of action when you talk about the broader markets, that's the mid space, and potentially some bit of consolidation that could be coming in terms of the benchmarks as well. And you have that momentum which is picking up on the financial side.
Well, that's right, Hiral, and of course, remember on Wednesday, RBI MPC meet comes in. If it's the status quo, we can see the interest rate sensitive stocks doing well, and market is factoring in a lot of positive factors. We are near the day's high level, Nifty up almost 200 points, and let's get the Nifty Banks chart up. The story remains the same. A good technical start coming for both the benchmark indices going ahead. But Hiral, the good news is we're talking about the small cap and mid caps. Value buying is back here after a long time. Let's just get in those key factors also of how things are moving and what you should be actually going ahead with. Of course, look at that small cap, that's up almost 1.5%. The technical momentum is strong and the breadth is also strong, the advanced decline ratios which I'm talking about. But let's look at the key resistance levels also, where Hiral there might be a consolidation or a question might come in. For Nifty it's 24,700 to 24,900, that's the range I've given. Nifty Bank, let's pull up the resistance range for that as well, and to show you that comes in at 58,000 to 59,000. But let's look at the other key triggers also. This is what I'm talking about, value buying coming in SMIDs, and of course the earning reaction is there. We are in the middle of the earnings, and largely we are seeing the earnings are in line too strong. Buying is back in the IT and PSU banking space after the, you could say, profit booking which we saw last week, a little bit of it, but then the technical strength is there. Only Z is dragging the entire Nifty Media Index. That's why I've got this. Of course, some concerns coming on the promoters and company getting debarred by SEBI. Rupee has strengthened, that's the trend. Yields are cooling off, crude has fallen on the global cues, and the RBI MPC meet kickstarts today. So we'll be of course tracking the interest rate sensitive stocks much more, and of course the earnings as well. And speaking of earnings, we have DLF, Escorts, Kubota and UPL, and we'll be tracking them and their reactions and their con calls as well. So this is how the market is panning out right now. But yes, there is a good value buying in SMIDs and the benchmark indices.
Okay, so good value buying is what Sharad is actually alluding to right now as we speak. But up next, actually, let's look at the rapid fire as well. And to discuss more in terms of the stocks, we have Nilesh Jain, who's joining in. Nilesh, let's start off with The Bajaj twins, strong first quarter that has been reported. Both the stocks are in fact the top gainers as well in terms of Nifty 50. What are charts indicating for you? Because right now markets are at the day's highs. But let's just talk about the Bajaj twins.
Very good afternoon to you, Hiral. Well, both the Bajaj twins are looking strong on the chart, and Bajaj Finance specifically, this counter today after a fresh up move looks like it is heading towards 1170, 1190 on the upside. And with a stop loss below 1100, yes, it can be considered going long. And apart from that, if you see Bajaj Finserv, another fresh breakout in this particular counter as well. So this particular stock is also looking strong for 2150, 2180 kind of level on the upside. So keeping a stop loss below 2000, Bajaj Finserv is also a buy.
Okay. Jindal Worldwide, they're considering a fundraising. The volume's also pretty high. That stock is up almost 9.5%.
Yes, a very strong move that we have seen recently in this particular stock as well. So looks strong for 44, 45 kind of levels on the upside, but not advisable to take a fresh entry since we have already seen a spurt of close to 10%. Buy and decline should be the strategy, keeping a stop loss below 38. Looks strong on the chart for 44 to 45.
Okay, so 40 to 45 is what you're looking at. What about ITC? You have Nomura and Jefferies, which has upgraded ITC. Overall, the earnings have been slightly weak, but 2.5% up move coming in there. Are charts indicating further momentum on an ITC?
Well, pretty slow mover, and recently we did saw some bit of base formation happening. A kind of a triple bottom is also shaping up. We need a decisive breakout about 295 to call it as a short-term bottom formation, and then probably we can expect a move towards 310 to 320 as well. So risk and reward looks favorable. Keeping that in mind, one can go long, keeping a stop loss below 280. We can expect a pullback towards 295 to 300.
Okay, what about Ashok Leyland? I know the auto pack has been buzzing, but July sales have been very robust for this counter. 4.5-5% up move. Further momentum there?
Absolutely, a very strong breakout in Ashok Leyland from a triangle pattern, and a follow-up move towards 180 to 185 one can expect in the near term. So keeping a stop loss near about today's low, that's 169, one can go long in this particular stock as well.
Ratnavir Pine Labs, strong volumes on these two counters. Nilesh, what would you do?
Yeah, you mentioned, right?
Ratnavir and Pine Labs.
Right. So Pine Lab, this particular counter is giving a strong rebound from the lower level. So we can expect a move towards 160 to 165. But not advisable to take a fresh entry after 8% spurt. Keeping a stop loss below 140, it can be bought on declines. Now coming to Ratnavir, a very strong chart pattern in Ratnavir. We can see a good bottom formation, a rounding bottom is forming in this particular stock. Today is already a 14%, but yes, there is still room on the upside towards 215 to 220. So keeping a stop loss below 195, one can go long on declines. The broader structure looks strong.
Last, Ugro Capital, highest ever monthly disbursements is what Ugro has seen. Nilesh, on the charts as well, because financials have been picking up right now, would you advise to buy a Ugro Capital or would you say book profits?
It was up to 106. From that level, it has witnessed some bit of profit taking. So ideally, one should wait for a move towards 105 to 110. That can be a good range where one can look for booking profit. The setup looks strong after today's price and volume breakout. If it closes above 99, that will be a positive close for this particular counter. Keeping a stop loss below 94, one can go long for a pullback move towards 104 to 106.
Right, so that's the view coming in for the rapid fire round. But moving on, now let's talk about the earnings. We are joined in by the management of Sri Lotus Developers, and of course the numbers we are looking at, of course a decent set of numbers coming in the pre-collections, and the numbers looking pretty awesome. Just wanted to get you in here, Pandit sir. Hi, it's always a pleasure to have you with us. How's the overall collections looking like right now going ahead?
First of all, thank you for having me on your show. Yes, you can see our numbers. Numbers are very encouraging. Recently, we launched our collection, which was luxury coastline collection, and we have got a tremendous response on that. You can see our pre-sales has year on year, almost 560%. It has gone up. Collection also has gone up by 115% year on year, and revenue also has gone up upwards of 100%. EBITDA also has gone up 63%, and net profit also has gone up by 77%. So, getting good momentum, good numbers.
Anand, good afternoon. This is Hiral on this side. Now, with the performance that we've seen in terms of the first quarter of FY27, does this actually give you the confidence in terms of that 55 to 60% growth in both revenue and profitability that you've guided for in FY27? Or do you think you'll be able to even surpass that kind of a number? Because profits have surged 77% this time around. Revenues also pretty strong, more than, kind of doubled. So that seems to be slightly in line, but profitability is going to be the key then.
We are very, very confident. Since we are supposed to launch at 4 another projects, and even right now we have got good fillers for those projects, and we are very, very confident that whatever guidance we have given for annual will be definitely meeting, if I don't say surpassing, but at least we'll be meeting those guidance easily.
Okay. And what is going to drive the growth, Anand? Is it going to be new product launches, execution of current projects that are already in the pipeline, or faster revenue recognition when it comes to ongoing developments?
So all three, I would say. It's a combination of all three.
Okay.
We have already ongoing about 8 projects, getting very good response on that. 4 projects will be launching those 4 projects. Those also we are getting very good fillers from the market, and also revenue recognition. So I think this sales momentum is extremely good in all these projects because those are all strategically located projects, and our execution capability is extremely well. We generally complete all our projects around plus or minus 3 years, 3.5 years. So I'm sure all the combination of these 3 will get us good numbers.
And Anand sir, a lot of launches recently has come in from your company across the coast. I know we had seen across, be it from Malabar Hills till Juhu. Wanted to understand, are you looking anything at the interiors or any redevelopment projects as well as other developers in Mumbai metropolitan region?
In fact, we have majority, all projects are redevelopment only. And that is why you can see that we are a debt-free, completely debt-free, technically debt-free company. And all these projects are either joint development projects, except barring one project, which is our Greenfield project, but otherwise all projects are redevelopment or JDA projects. And all these projects are right now, majority projects we are taking with our theory called B and G theory, blue and green theory, where from those projects we can see blue means ocean or water and green means garden. So that yields better per square feet revenue for us.
And Anand sir, a lot of other, you could say non-MMR players are also coming to this Mumbai region. Is there a competition heating up, or do you think this market is there for all, the pie is big?
I think both, I would say. The market is so big. So everyone has got their own pie. That's one. Second, I understand that real estate business is a very, very localized business because you need to understand the requirement of local people, local your channel partners, kind of design, kind of sales strategy, kind of approvals, all these things and ground reality. So it takes time for any company to understand local situation. So yes, there would be some competition, but I think they are more, all these companies which has come from, I would say, out of Mumbai, they are more in a premium segment. No one has launched anything which is ultra luxury.
Fair enough. Interesting point. And of course, debatable also which is luxury, which is not. Mumbai is a very expensive place. But thanks a lot, Anand sir, for taking out your time, giving your views on the company and the industry as a whole. Nilesh, let's do a quick chart check on Sri Lotus Developers. Stock is in the positive, not major reaction because of the earnings, but nevertheless, is there any trade to be made, or do you think this is a consolidation candidate?
Sharath, we have already seen a very strong run-up recently in the July month. So far, it has risen almost 35%. And today, we are witnessing some bit of profit taking from the highs. So not advisable to chase the momentum. There could be possibility that we may see some bit of consolidation before we see another leg on the upside. So avoid taking any fresh entry at current level. Just in case if you get any dip towards 190, 185, that can be a good entry point.
Sri Lotus, interesting one to watch out for. Quick view in terms of ABB, Nilesh?
ABB, a very good breakout. We are witnessing today a strong trend reversal, I would say, with a good volume attraction. So quite possible we may see a follow-up move towards 7,700 to 7,800 on the upside. So keeping a stop loss below 7,300 can be bought on dips.
Be bought on dips as well. That's the view coming in. But let's get in the management as well to talk to us about what's happening with the quarter and what's the outlook going ahead. Sanjeev Sharma, MD and Country Head, and TK Sridhar, CFO, ABB, joining in. Welcome to the show, gentlemen. Always a pleasure to speak to you. Sridhar, let me start with you. First quarter characterized by strong revenue growth, robust order inflows, and a healthy backlog. But investors are closely watching the margin trends and execution of the large order book as well. What cues are you picking up then in terms of FY27 from this first quarter gone by?
I think today we see, as you was rightly mentioning, so we have a strong order inflows. We have a good revenue growth backed up by the strong order book what we have. And this was all possible because of our presence in the 23 market segments via our 16 business divisions as what we are present. So I think going forward, the growth is going to be definitely be exciting for us when we're looking at what is happening in the emerging sectors like data centers, electronics and renewables, and energy transition and the energy efficiency topics as what we are dealing with. So I think this is something which we will try to keep catering to going forward. And if you look at it, so our 90% of the business comes from India, and which are divided into three verticals, which is emerging sectors, the core sectors, and also the infra and transportation. So I think that all these segments will play out in a way that is able to help us to get to this double-digit growth quarter on quarter. So this is what we see at this point of time. So, and when we go down to the margins, I think margins is something which is a play of what we produce and how we are able to manage the value chain impacts and how we pass it on to the customers as well. So I think this is going to be a bit cyclical because these factors are something which are not in our control. So I think the only option is to help to keep mitigating these topics as we go forward, and we remain resilient to cater to our customers in a more predictable and a smooth manner.
Okay, so that's what we could be watching out for. But what are the reasons for the margin pressure? And do you think it's going to be easy a task, or is it even going to be possible for ABB India's historical margin profile to come through in FY27 at any given point in time?
So I think I will not be able to do any forecasting at this point of time. I think the major impact came to us from the known topics of commodity exposures, what we have, because they have been sort of strengthening and hardening over a period of time as we see. And of course, the forex volatilities, because we remain a net importer at this point of time, and therefore we have to wade through these topics as we go. So I think our job today is to make sure that we're able to keep the momentum, keep our order books intact, and pass through this particular phase. So I think for the next 2 to 3 quarters is what I see. It will be more volume-led growth rather than a margin-led growth. And this is something which we will keep watching as the events develop.
Okay, so that's with regards to where ABB goes. Now, Sanjeev, you've highlighted that there is strong traction from data centers in the past as well. How large is this opportunity becoming for ABB India? And can data centers actually emerge as a meaningful contributor to growth, say, over the next 2 to 3 years?
We have been talking to you for a very long period of time. I think we started talking about data centers 2017 onwards, and we saw this opportunity early, and we positioned ourselves, and we are taking fruits of it as the market scales up. So we have created quite a large capacity in the market. We have supported our customers to create large capacity, and we have a very good goodwill with our customers for the future capacity. So to your question, we see a very strong pipeline ahead of us. I think it's only at the early stages of data center build in terms of capacity India will require, both for the basic data center infrastructure and also the AI play that will also be captured in the data center space. So we have already placed our capacities, we have increased those, and also our capabilities to cater to the demand that is available now, and also for the future demand.
Okay, so that's with regards to where the data center outlook goes. But what is that order backlog looking like, which is executionable, and what is that timeline when you talk about executions?
Specifically for data center, I think it's a fast cycle project. So we cater to them, from order to delivery. They are quite demanding in terms of how soon the delivery should be made. So that's pretty quick. But for the larger portfolio, Sridhar, you may like to comment.
So I think we have a strong order book of $11.5 billion. I add 5 billion rupees, 7,500 crores roughly. But I think this 40% of that is expected to be converted in the next 2 quarters to come, and we are confident that it will happen. And the balance is something which will get over in the next afterwards, the next 4 to 6 quarters. So technically speaking, this order backlog will get executed over the next 8 quarters.
Okay, so that's the order backlog execution. What about the next, say, 5 years? What would drive growth? Electrification, automation, railways, energy transition, or data centers?
I think the top will be electrification, because everything is going electrification, and our core of our portfolio with electrification division is of course electrification, electrical products and systems. Even in our motion, everything is electrification, but towards energy efficiency. And in automation also, when we do automate the large industrial plants, bulk of it is electrification and automation layering on top of it. So it is electrification as a theme, combining with energy efficiency and the automating for higher productivity.
Okay. If you have to look at the businesses that will actually see higher contribution then from what you're just mentioning, Sridhar, what will see a larger play out? Which segments will drive growth where the contribution will then increase?
I think what Sanjeev was alluding to in his earlier conversation, I think data centers and renewables will be those key sectors which will definitely, has a faster potential to grow, right? So, and that's comes from the theme of electrification being then most important criteria for us. So I think those are 2 sectors which we are closely watching for, followed by electronics as another area which will actually fuel the growth going forward.
And the other segment that we see, which are also finding good traction, is commercial buildings and grid modernization. I think that's where we are seeing quite a strong growth. In terms of numbers, it's as strong as or even stronger than data centers. And then together with renewables, battery energy storage systems, I think that's another area which is developing alongside renewables. And to add to it, residential buildings, they're slightly muted, but they are still a high contribution to our orders. And railway and metro is a kind of a steady business for us going forward.
Okay. And, what are the key variables, according to you, that one should be watching out for then over the next 12 to 18 months, taking into consideration that margins are becoming very crucial right now?
We have gone through many cycles like this. I think one was post-COVID. And I think if you go back to our interviews around that time, we had similar discussions as well. So what happens is that as a company, our value system is to commit to the customers and deliver what we have committed. But that's what we focus on. So in the short run, what happens is whatever cost is captured and whatever variable comes, as per the contracts, we take it and we deliver to our commitments. But we are operating in very mature segments and also with very mature customers. So as the input cost increases and that variability settles down, there is a normalization of the prices in the market and the cost gets passed on. I think that's what will happen this time as well. As we saw post-COVID, when the supply chains were disturbed, you don't have a finger on what is the level to pass on to the market because the volatility is very high. But then when the volatility subsides, the normalization of the price takes place in the marketplace. So we see that happening this time around as well. It's just a matter of time.
Just a matter of time. We'll wait and watch. But thank you, Sridhar. Thank you, Sanjeev, so much for joining in. It's always a pleasure to speak to both of you as well. The stock has come off slightly from the day's highest levels as we speak. But moving on to an exclusive source-based story. My colleague Shrimi is picking up that the finance minister is likely to move tax and other amendment bills in the Lok Sabha. Shrimi joins us with all the details on the phone line. Shrimi, good afternoon. What are you picking up from your sources right now? Because this is going to be interesting, and this is a bill that will actually replace the income tax amendment ordinance as well.
Yeah, that's right, Hiral. Actually, you could expect a lot of other amendments as well, because one is, of course, the taxation and taxation bill, which we have seen in the form of ordinance, which was promulgated earlier this year. Now, the ordinance had provided exemption from tax for foreign investor on interest income, capital gains arising from the GSEC. Now, that was announced as a part of ordinance, and now they are moving it to, shift it or to make it a bill in the ongoing monsoon session. So that's one part of it. The second important part, which is very crucial from some of the stocks as well, here, is payment and settlement system. Now, do remember there are a lot of talks and chatter around levy of merchant discount, fees on a lot of these payment companies, and they have been doing a lot of lobby around it. So we could expect some proposals, some changes in Payment and Settlement System Act, where to strengthen the digital payment ecosystem. We don't know the exact details, but what we are gathering at this point, that certain charges on center notified digital payment mode potentially could get released to user and payment participant is the indication we are getting at this point. In fact, you could see some major changes in the electronics manufacturing, the contract manufacturing as well. Now, remember, the budget 2026 in February has made a provision for contract manufacturing, giving relief to foreign investor who wants to, supply capital goods, etc., to Indian companies, Indian manufacturer, and that's given the tax exemption to 5 years, which is 2030-31. Now, this bill, which, the finance minister will move, could extend beyond the 5 years and could go up to 10 years is the indication we are getting. So, again, big boost for foreign investors. In fact, we are also learning that there could be some tax relaxation for leased data centers, and we know that how government has been focusing on the data centers. So that could also be the part of the other amendments which finance minister is moving, and you could perhaps see a lot of changes in terms of boosting foreign investors as well as to deal with the ongoing West Asia crisis is the indication we are getting, and the bill will be moved either today or tomorrow, is what we are learning.
Okay, that's interesting to pick up, because tax incentives for FIs, data centers, a whole host of stocks that could be in focus as well. But this is an interesting development story, Shrimi. We will come back to you as well and get further updates. But completely out of time, ladies and gentlemen. It's time for a quick break, and thank you from Sharad, the team that put the show together, and myself. Lots more lined up on the other side from the NDTV Profit Suzlon studio. We'll be right back. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand and NDTV Profit is
Benchmarks hover near days high with the Nifty 50 sustaining above 24,550 and the Sensex gaining over 600 points as well. Falling oil prices and optimism around US-Iran talks aid market sentiment. Oil prices meanwhile fell sharply after US President Trump says fresh talks with Iran would begin this week, raising hopes of easing geopolitical tensions and reducing the risk of supply disruptions. Muthoot Finance under sharp selling pressure after its June quarter results. A sequential drop in profit and revenue disappoints investors, triggering a strong negative reaction in the counter. Meanwhile, Urban Company shares surged after its June quarter results as positive brokerage commentary and confidence in the company's long-term growth strategy overshadows a wider quarterly loss. Zee Entertainment shares came under pressure after SEBI barred the company from the securities market for 2 months and imposed a 1-year market ban on Subhash Chandra and Puneet Goenka in the Hyderabad land pledge case. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that's going to get you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets, and it's actually healthy gains coming in, whether you talk about Nifty 50 or Sensex. So looking at close to a 200-point uptick when you talk about Nifty 50, well above those 24,500 levels as well. When you talk about Sensex, 600-odd point gain coming in there as well. And when you talk about the small cap or mid cap indices, slight bit of outperformance that you're seeing coming in for some of those indices, as you can see on your screens as well. So good shape coming in for broader markets as well. But when you talk about the sectoral picture, it's very, very sharply tilted in the favor of green right now. And it's actually IT that's leading the gains, as you can see on your screens. PSU banks in great shape also, FMCG, metals, financial services, India Defence, rural and auto and bank. All of those sectors in great shape right now. And media is the only sectoral laggard, so that should tell you about the kind of market picture that we have at hand right now. When you talk about some of the stocks that are gaining from within the Nifty 50, it's actually something like an Interglobe Aviation's up about 4% Shriram Finance, some of your IT counters also, some healthy gains coming in there, 3% uptick for something like an Infosys, TCS also in great shape right now, and Axis Bank, as well as some of your other financial counters, the likes of SBI, SBI Life, also holding on to some bit of gains as well. When you talk about the list of top losers from within the Nifty 50, is actually a Sun Pharma under pressure after its results. US generics seems to have been a little bit of a disappointment, and that's something that you're looking at. In terms of the outlook, the management does pencil in some recovery, so let's see whether the stock also recovers. You do have something like a Bharti Airtel, Apollo Hospital, ONGC, Tech Mahindra and Maruti Suzuki. Some of those counters also on a little bit of a back foot right now. What's doing quite well for itself from within the broader complex is something like an Urban Company with that 13% odd gain also coming in on the back of its numbers, after its numbers as well, something like a Blue Dart, also in good shape. So some of your earnings reactions really reflecting through. But let's also get chatting in terms of Brent as well and get you the outlook coming in for oil prices. In fact, Vandana Bharti, head of commodity research, SMC Group, joins us on the show right now. Vandana, very good afternoon. Can't say the same about oil prices right now, and there's actually a lot to talk about, be it metals, because some of your metals, you do have some of those milestones really coming through for something like a zinc, iron ore, and gold for that matter, a little bit of a tepid movement that you've seen. But first, let's talk about oil prices. Seems to be that the geopolitical risk premium is easing off right now, given the peace optimism.
Hi, Shanshi. I was just looking at the chart of heating oil, and it is showing a concern in the market because the NYMEX crude, it is moving down, and I've just done the comparison between the two. NYMEX crude from the top, it is down by more than 36%, but when we consider the heating oil, which is of the commercial use and showing the real indication of the market, it is only down by 13% or 14%, say 14%. So yes, the concern is still there in the market despite the 38-39% fall in the prices, and that's why the other asset classes, they are not reacting in the same way oil prices is moving down, be it Nifty, be it gold or silver. So yes, the real concern is the diesel prices, heating oil prices, distillate prices. We can say that the refined products prices are not well down by as compared to the crude oil prices.
No, absolutely, and Vandana, point taken there, those are definitely concerns. But, in terms of the market, we're taking a little bit of a breather given that crude seems to be easing off right now, right? So what are the kind of levels that you're looking at, both on the bottom of the barrel, the downside as well, and given if there is an escalation of sorts, or any sort of commentary, important one coming in from the US president, what are you penciling in on the upside and the downside when it comes to prices?
Yeah, the next downside for NYMEX crude, it is definitely it is of $72 to $74 kind of level. But yes, the upside is now it is on the lower side, and it is $82 to $84 again. And if we talk about in terms of MCX prices, it should be in the range of 7,100 to 8,400. So the range will be wide, and the fresh P stock, it has shown some kind of positive movements in the prices, and that's why we have seen fall in dollar index and a little bit of fresh buying in metals complex as well.
No, absolutely, and we'll just talk about that in just a bit, right, Vandana? But before that, just very quickly, a word on OPEC Plus in terms of the supply increases. Do you think that they're weighing on the outlook a tad bit as well?
Yeah, at the same time, the statement of OPEC, it is giving some kind of pressure on the crude oil prices, and because of that, collectively, the fresh P stock, OPEC supply increase and all, that all are putting pressure on the crude oil prices, and that's why prices are moving up. And meanwhile, we have got some good data, PMI data, better PMI data. Despite that, we haven't seen any kind of rise in the crude oil prices. So definitely, that is giving a pressure.
Absolutely, and let's talk about what's sparkling in an otherwise, tepid commodities complex as well. You do have gold prices that are well above those $4,100 levels as well, Vandana. What do you think about the kind of factors that you're really watching out for? Of course, a weaker dollar seems to be helping here, but what else are you looking at? And more importantly, what kind of levels are you then thinking gold is going to be able to sustain?
Some of the triggers are very positive. We have seen a very good OTC buying in second half of 2026, and it saved the fall in ETF outflows. And like major banks, hedge funds, they are backed into this counter, and because of that, we haven't seen that despite many bearish pressure or technical formation, gold somehow saved the level of $4,000 till now, and silver, it has saved the level of $55 till now. So we are expecting a upside move in gold prices, and again 3950 and 4000 kind of level is a very good support for this commodity. But yes, at the same time, bond yield, it is higher, and it is working as a higher interest rate this time. So because of that, even the upside is kept near the level of $4,300, and same in silver, it should be of $64 kind of level resistance in silver. So yes, both of the market, they are saving the downside, but yes, gradually they are moving upside.
No, absolutely, Vandana, and we've seen the prices also do that bit of talking and demonstrate just the trend that you've pointed out as well. So right now, do you think that fresh buys people should be staying away from, given that there seems to be a little bit of a perk up in demand for gold?
Yeah, in fact, even we have seen a positive buying, a very marginal positive buying in ETF, and because of that, the traditional buying season has started. So from a bit jewelry ETF or OTC buying, some buying has emerged, and it is we can say that onset of this physical demand and ETF demand. This will carry out the rally in gold prices.
No, absolutely, and let's see how that really pans out, right? It's quite interesting, the kind of setup that gold's got right now, even in the domestic market and the global one at that. But speaking of global, Vandana, let's talk iron ore right now. The price has hit about a 1-year price low. You're looking at Singapore futures sliding below that $95 level as well. What are you looking at by the way of prices and factors, of course?
If we consider iron ore, we just look towards China, because it is a major consumer of this iron ore, around 50%. And the chart is really scary if we consider the SGF iron ore futures. The thing is that the real estate sector of China, it is giving a very gloomy picture for this iron ore. And we can say that there are huge pile of inventory in China, and the steel production, it is really down. The demand of steel is really down in China, and 95% of the consumption, it is going in the sector. So the steel sector is moving down, and it has very low demand in China. And real estate sector, it is not out of the woods still. In fact, some green shoots we have seen, but yes, there should be some kind of lower recovery in iron prices.
Absolutely, Vandana, and we'll pencil that in as well. A couple of things here: China demand as well as the steel market that you're looking at very closely. Lastly, just before we let you go, a quick word coming in on zinc as well. You've seen some strength really come in. Prices very close to those 4-year levels as well in terms of the highs. What are you looking at by the way of factors, prices, anything to talk about when it comes to zinc?
It is the supply disruption from Glencore. It is more than 21%, and there could be an annual deficit of around 19,000 tons in 2026. And after this crisis, the demand of zinc is on higher side because of the renewable energy demand, and because of that, we are witnessing a level of that we have seen in 2022. Now we are expecting a 400-410 kind of level on MCX.
Absolutely, and thank you so much, Vandana, for taking out time and joining us this afternoon. So not only is there a supply disruption, not only is that a concern, and prices close to a 4-year high when you talk about zinc, it could very well continue, and that's the word coming in there. When it comes to gold, fresh buys are something that you should hold off on right now, given the kind of setup, and those were some of the things that we've talked about. But let's move on and talk about CleanMax Enviro's first quarter numbers as well, powered by that strong execution really reflecting through, and a sharp jump when it comes to the renewable capacity. Now the company has more than doubled the revenue, returned to profit, staying confident on its FY28 earnings target as well. We caught up with the management of the company in terms of the road ahead and the growing AI and data center opportunity. Let's go across and listen into a slice of that conversation.
But let's get into the details about it. Sir, you highlighted Meta's 900 megawatt commitment. How much of this 2.5 gigawatt execution is underway right now, especially as a hyperscaler versus the traditional CNI customers?
Thank you so much. Yes, we had an excellent set of numbers. Our EBITDA grew by 74%. On a quarter-on-quarter comparison basis, and both our business segments, which is renewable energy power sales as well as RE services, both expanded their margins. And overall, yes, we do have, we added 500 megawatt of new capacity in this last quarter. We have also about 2,600 megawatt of what you could say pipeline contracted capacity, which is under execution. Overall, 42% of our total capacity, both previously executed as well as pipeline, is for data and AI clients, right? So 42% out of any number is data and AI clients. Rest 58% is traditional CNI clients.
Fair enough. And almost you have 2.5 gigawatt of contracted capacity under execution. Now, beyond this pipeline, what visibilities we can see for additions for FY 28-29?
So we are guiding this year. We will add a minimum of 1500 megawatts. So we have enough pipeline already contracted for the next 18 or so months of growth. But in our business, every quarter we build as well as we sell. So in the last quarter, we built 500 megawatt. We also sold about 350 megawatt of new capacity. So that will be an ongoing thing. For the last 2 years, our contracted under execution capacity has been around 2,500 megawatt or more.
Right. And sir, what is the current curtailment level coming in for Rajasthan and CTU projects versus June? And by when do you think they can normalize going ahead?
The benefit for us is that about 85% of our EBITDA is STU connected projects, which do not have curtailment. Yes, Rajasthan, we have one project which is about 13-14% of our annual EBITDA, which commissioned in March of this year. And there we are seeing curtailment of up to 70%. And we think this curtailment is likely to continue for the entire financial year.
Right. And how much of EBITDA was actually lost in this quarter due to this curtailment which was there? And what could be recovered once the transmission issues are solved? You have stated that this entire year there might be an overhang.
Yeah, that is true. But the benefit is the overhang only affects about 13% of our capacity. So, there's about a 7-8% lowering of the EBITDA. It could have been higher by 7-8% without the curtailment.
Right. So, but if this persists, the FY28 guidance still achievable, or you'd like to change that?
Yeah, in fact, for FY28, we are giving a new guidance that we will achieve an EBITDA of at least 3,000 crores. So if you think about it, last year EBITDA was 1,300 crores, 1,280 was the precise number. And we are giving a new guidance that next year, which is FY28, we will have a minimum EBITDA of about 3,000 crores. So it's a substantial step up.
Okay, so it's an upgrade. Realization was almost 4 rupees 6 paise per unit. Expectation was 4 rupees 13 paise. Are you seeing tariff pressure in the newer contracts given the increasing competition coming in the CNI renewables?
So the fact is that our realizations today are about 4 rupees. And 2,500 capacity contracted under execution, also the realization is about 4 rupees. So we are not seeing any pressure on, if you will, the margins or the prices.
Fair enough. But you have already commissioned 500 megawatts in the first quarter. Given the strong start, why not upgrade the 1.5 gigawatt commission guidance as well?
We just want to wait a couple of quarters rather than upgrading a guidance because, projects are always very dynamic. So we'd rather always beat the guidance rather than, have to answer with why you did not meet your guidance. So therefore, we are being a bit conservative.
Alright, then there you go. So that's the word coming in from CleanMax, being a bit conservative on their guidance, at least as of now, but they're very much on track to at least achieve the ones that they've outlined in terms of the targets. But speaking of targets, let's also move on and talk about M&M's tractor business that continues to see strong momentum also coming in. So July sales grow over 20%, supported by healthy rural demand and improving on-ground activity. You do have the management saying that the first 4 months are crucial for the industry as a whole, even as rainfall patterns and reservoir levels remain key factors to really watch out for. Let's also get you the full conversation we had earlier with Vijay Nakra, President Farm Equipment Sector M&M, talking on demand trends, monsoon impact, and of course the outlook for the rest of the year as well. Let's go across and listen in.
On the strong momentum we are seeing in the tractors, how are the trends looking like on the ground right now?
Thank you so much for having me on the show. The sentiment on the ground is very positive at the moment, and I think a couple of reasons for that. One, we've seen significant revival in the monsoon in the last couple of weeks. The long period average deficit has come down substantially to about 14%. The land under sowing for the Kharif season has significantly improved in the last 2 weeks. The sowing has been slightly delayed because the monsoons were delayed, but clearly we can see that now compared to last year, the deficit is about only 4%. And paddy, which is the highest sown crop in this season, is only 2% lower than last year in terms of acreage of land sown. And sugarcane, for example, is higher than last year. The support from the government, the timely support in terms of their spends in rural has gone up 16% over last year. So I think a lot of this has played together to create a positive sentiment on the ground. And the numbers that you see are an outcome of that positive sentiment and the requirement for tractors with higher mechanization across the country in the first season of this financial year.
Right. And sir, how is the impact of the lower monsoon? You know, which regions have been impacted?
I think there's been significant recovery, like I said, during the last couple of weeks, but there are still some pockets, largely the sort of central part of the country, some parts of Maharashtra, the Marathwada region, some portions of MP, some part of Telangana, the eastern central part of Karnataka. I think these are some states where there is some deficit, and then there is also deficit in some other states in the north, but many of those states aren't so much rain dependent, and hence as a result of that we've seen a lot of recovery, including states like Bihar and Jharkhand where the monsoons reached a little late.
Right. And what's the growth guidance like for the whole year itself?
We stay with our figure which we had put out earlier in the year of mid-single digit growth, about 5% for the full year. And we've seen a very strong first quarter or first season up to July. However, quarter two, just for everyone's benefit, last year, the festive season, which is, just before the sowing of the Rabi season, is the largest time of the year for sales of tractor after the first season. This year, there is a shift in the festive season to the month of October, which means quarter three. So quarter two will not have any benefit of the festive season. Quarter three and quarter four, compared to last year, we will see a base effect coming in from last year because the GST reduced last year end of September, and quarter three and quarter four of last year had seen significant growth because of the reduction in GST and the benefit for the farmers. So that base effect will kick in quarter three and quarter four. So overall, we believe for the year, the industry will still remain at mid-single digit, about 5%.
Fair enough. And in which segments do you think, especially in the horsepower segment, the higher horsepower segment, do you think there is a momentum here? Because Q1, there was a little bit of impact on the labor shortages.
Yeah. So, the mechanization across the country has been increasing significantly. And yes, one of the reasons is labor shortage, but also the use of heavier implements in the farm has been going up. So as a result of that, and the third reason is that with the reduction in GST, the affordability for higher horsepower tractors has gone up. And tractor is an asset which is an asset class in rural India where people invest in. And as a result of all of this, the horsepower requirement has gone up. Affordability for higher horsepower has gone up. As a result of that, we now see that higher horsepower tractors are almost 68 to 70% of the industry. As far as we are concerned, at the start of the year, firstly, we've been leaders in the 40 to 50 horsepower segment. Number one. Number two, we've said that at the start of the year, we'll have 7 new launches during the year. 4 out of those 7 were in the 40 to 50 horsepower segment, and we've already launched those models at the start of the first season. So I think the trend of mechanization will continue to go up. The demand for higher horsepower tractors is here to stay. Having reached 70%, I don't think that that percentage would tilt significantly higher. It could be in the range of 70-75%, and we are well poised to play in that segment.
Right. Mechanization is a very important trend which we have picked up. But the last question, Vijay, I have for you is how should we look at the exports? That's also growing very strong. And how do you see that certain regions doing much better than the other regions? I just wanted to get an entire picture of that.
Yeah, the global market is pretty volatile at the moment, and some of the large markets globally are seeing a lot of headwinds. And let me talk about a few of them where we are present and we play a significant role in those markets. So if I talk about North America, 18 quarters of degrowth in that market, actually 17 out of 18, only one quarter in 2024 had seen some growth, and that too, that was only 1.5%. So it's an extremely challenging market at the moment over there in terms of headwinds, but we've been in the top 3 players there, and we continue to be the number 3 player in North America in the less than 20% horsepower segment, which is the largest category in the market over there. You talk about Brazil, about 11% degrowth YTD, even in a market like Brazil. But there again, we've gained a significant market share of about 2.3%. Turkey, which is another very, very large market, has seen a 50% degrowth YTD, and we've gained 1.5% market share. So some of these large markets continue to see headwinds, and we believe some markets may have bottomed out and will start seeing some progress, but some markets may still have some time before they will turn around. And if I talk about the rest of the world, besides these 3, from a demand and a market point of view, Africa continues to be very strong, and South Asia is strong, and we continue to do very well and grow in these markets.
All right, then there you go. So that's the word coming in terms of M&M Farm equipment as well. But that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करने अलाउड है? चैनल तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
You know, a whole host of IPOs which are actually hitting the Lal Street lately, and one such that we're talking about is Leap India, a very interesting company where it is a company which is operating in a relatively under-penetrated, I would say, asset pooling kind of a business model as well. And to discuss about more, we have the MD and the CFO who's joining in our studios. We have Mr. Sunu Matthew, who's the founder and managing director, and Mr. Rajesham Ale, Chief Financial Officer at Leap India, joining in. Welcome to the show, gentlemen. Always a pleasure to speak to you. First up, Mr. Matthew, I want to ask you, help us understand more in terms of Leap India. What does the company do? And what are you hitting the Lal Street with in terms of the IPO details?
Okay. So, Hiral, first of all, thank you for calling me and Rajesham to explain Leap India to you. Now, Leap is an acronym to Leading Enterprise in Asset Pooling. So, this asset is not cash, neither we are a logistics company, we don't do transportation, we don't do warehousing. Whenever anything reaches to you, any product, bulb, blade, biscuit, battery, it moves around 4 pillars of supply chain: supplier, manufacturer, 3PL and retailer. So, there are various assets which are used in that, and the fulcrum is this kind of a pallet. So, this is the miniature of a pallet. The size of the pallet is uniform, which is 1200 by 1000 mm, which is called a rectangular pallet. So we give it to different players at different point in time, and they pay us the daily rental. So we say, please focus on your core business rather than managing the operational things. That is our job. So since we are connecting all 4 pillars of supply chain, they can absolutely work on an OPEX model rather than a CAPEX model. It is not as simple that we have taken it and give it on a rental model. It is completely logistics engineering. Like we have 50 odd people who does the designing. Say suppose something has to be moved in automotive. Say suppose a crankshaft has to move from Chakan to Chennai. First we will take that, design it, then we will create a mold. From there we will create the insert, then the trials will happen, then the OEM has to say that it has reached without any kind of a damage. Then we will go and do the commercial negotiation with the C1 location. So the gestation period of breaking into a contract is like one month to 1.5 years.
Wow.
So, and then we take the IPR for all of these. For example, if we give this a pallet, say I give my pallets to somebody who is making a preform in Baroda. So we give it to them, they put the gaylord of preforms on that. They may take it to a cola factory in Gujarat. They will put hot air into that. They will make it a bottle. They will put their cola in that. They will take it to a third party logistics. From there, it can go to any retail. It could be Reliance or it could be Amazon, Flipkarts of the world. The moment this pallet is free in any of the locations, we pick it back. It comes back. So if we are not there, everybody will buy their own pallet, they will break it and throw it. And if I'm drinking this water and the cycle time of making this water is say 5 days, we are wasting 5 5,000 rupees into the land.
So basically, this is more of an annuity business that
This
we
is
can
an
talk
annuity,
about,
yeah,
right?
absolutely.
Okay, tell us about the funds that you're using in terms of that you're raising.
Okay.
What portion of it will be an OFS? How much will be a fresh issue? And how are you going to use it?
So the total size is 2,480. 4,480 is for the primary, which will come into the company. And we have currently 900 crores worth of debt. So we will be using 70% of this in order to repay the debt. And rest is an OFS for KKR. KKR has been a brilliant partner to us. Because of them, we have been able to acquire 2 companies. And once they do this deal, it's a very long fund, 12 to 14-year fund. So I have roped in them also as a promoter. So they will be further logged in with me for next 3 years.
Okay.
So it's a long fund. They will be very patient. They will be a patient investor for next 5 to 7 years. One more thing I would like to make a point here, that I am buying at the same value at which I have offered it to the public.
Well, this was Leap India talking about their upcoming IPO. But moving on, Sasken Tech is one such stock which is in focus on the back of Q1 FY27 numbers. Overall, if you see, company has seen 24% growth year on year when it comes to their revenue, and the margins are EBITDA margins stand at around 9% versus 5%. But to speak more about the quarter gone by, we are joined by Mr. Rajiv Modi, who is CMD and CEO at Sasken Tech. Well, Mr. Modi, welcome at NDTV Profit. Pleasure to have you. I wanted to understand, 24% year-on-year growth you have seen with 9% of EBITDA margin. Number one, what were the levers when it comes to, the Q1 that you have seen, and also how FY27 is looking like? What about margins? Where can EBITDA margins go? And overall, what is the revenue growth that you are expecting for 27?
First of all, thank you very much for having us on your show. It's a pleasure to be, and it's a pleasure to report to you our earnings for quarter one. We have seen, like you said, 24% growth year on year and about 1.6% growth quarter on quarter. We have improved our EBIT margins, EBITDA margins year on year. And as you know, we have 2 different streams that constitutes our revenues. One is the software services segment, as the other one is the product solutions. We would like you to look at our product solutions business more on a yearly basis rather than on a quarterly basis, because the nature of that business is such. While software services has shown 4.6% quarter-on-quarter growth as well as 24.3% year-on-year growth. We have improved our margins significantly from quarter 4 to quarter 1, from 28.2 to 30.6. Some of the drivers are primarily the focus on now driving margins as we are scaling our business. So one, of course, is the utilization, which is about 85%. Second is the scale effect coming in, particularly in improving the margins between GM1 and GM2. So I think that is helping us in ensuring that we improve the margins. And third is, I think, the clear focus on our 60 by 4 by 3 strategy that we have created, where we are seeing growths across all segments of our business as we are progressing through our journey. So I think overall, a very satisfactory quarter. We have seen good orders booked during the quarter. I think $36 million worth of services, business orders, new orders we have booked, as well as I think there is another 10-11 million worth of our product solutions orders we have booked. So we are seeing good momentum in our journey, and like I said, focus is driving efficiencies, driving growth, and improving margins from here.
So margins, if you can look at, it's been around the 7% band for the last couple of quarters. Is there further room for expansion? If yes, by how much percent, or from where can we see the exit margin rate for FY27?
So like I said, our business is comprising of 2 things. One is product solutions and software services. We do see continuous improvement in our software services margins from here on. as well as on a yearly basis, we'll see improvement also in our product solutions business. So overall, I think while we don't give guidance, we definitely are confident of delivering better margins overall from a business perspective of what we have delivered in Q1 for the full year basis.
But I believe earlier you had mentioned that you are confident of sustaining double-digit revenue growth over the next couple of 2 to 3 years. So that guidance continues to remain?
I mean, while we don't formally guide, but right now there is good momentum, and we do see FY21, FY27 is a reasonably turning out a good year, and we expect our growth momentum to continue as we are progressing in our journey.
And sir, just wanted to check with you, which of the geographies is contributing the most to the growth, firstly?
I think we are seeing growth coming in from the US, from GCCs in India, from Europe. I think all these vectors are adding to our growth trajectory as we are going through the expansion during the year.
Right, and sir, you are also, positioning yourself when it comes to semiconductor business as well. How much of current revenue comes from semiconductor related work, and what share, do you want this business to contribute over the next maybe, 3 years?
Yeah, I think we have seen good momentum in semiconductors business. We don't, I think, and in Q1 we have seen certain impacts in semiconductor business, primarily because there were certain delays associated with the shipments that we are required to do, which I think we're going to catch up in Q2 onwards. Overall, semiconductors is strategic to us, like we have said in our credo of chip to cognition. Both semiconductors, boards, the devices, all form part of our objective and growth vectors. It will be hard for me to kind of say, but we are quite bullish on our semiconductor offerings, and we do expect the momentum of growth to continue in semiconductors, and definitely significant revenues we are ascribing to that in the next 3 to 4 years.
Right. I also want to understand about order books. What's the current order book looking like, and what are the execution timelines?
Basically, the thing that we report is primarily the orders that we booked in that particular quarter, and that's what we have disclosed to the market. We do not disclose what's the order backlog as yet. When we are ready for that, we will announce that to the market and make it visible to all the investors.
And when it comes to AI, if you could give us some understanding of how much part of your revenue is now directly linked to AI?
All the revenues that we derive largely is with the use of AI in all our customer engagement. So when we are referring to the growths, it is with the use of AI that we are referring the growths, and we do expect AI to be integral part of everything that we do. And we are proud to say the entire organization is AI enabled, and they use AI tools both in serving our customers as well as in internal efficiency, driving those effectively to ensure that we take advantage of AI.
You're saying that 100% of the revenue that you're generating right now is being done whether directly or indirectly with some use of AI, or can you just tell me more about it?
About 77% of our revenues that we ascribe is with the use of AI tools, and we see more and more use of AI tools in all our engagements with our customers.
Sir, also the recently acquisition which you did of BorgQs, if I'm not wrong, Box. Okay. I just wanted to understand, the integration, how it has been, the total synergies which has emerged when it comes to, customers or revenue or cross-selling opportunities. If you could also give us some highlights on that.
So I think we acquired a Box in April of 2025, and we consolidated almost for the full year for FY 25-26. Of course, this year will be the technically consolidation of full year, but The last year was you can also say for all practical purposes. The integration is going extremely well. As a matter of fact, we have seen significant wins that we have co-created together, both on software services as well as on product design solutions. We'll see results around particularly product design solutions in the coming year as well as in the years ahead. Software services, we are immediately seeing the benefits. We have a hyperscaler as one of our large customers, and we are scaling effectively. With one of the large semiconductor players, we have seen significant impacts. With devices, the rugged computer market also, we are seeing good cross-selling happening. So overall, the integration has happened much more quicker than what I would have earlier anticipated. And the synergies are really getting delivered as we speak.
A very quick answer. Any more acquisition lined up in FY27?
Well, we are always in a lookout in terms of wherever we have an opportunity, particularly if there is something which kind of meets the which fills in the gaps and where we are able to serve our customers. We are on the lookout. While we don't have anything in the horizon, we definitely would be looking out on possibilities of inorganic.
Right, sir. Right. Well, thank you, sir. Thank you for joining us and giving us the way forward for Sask and Tech. Well, that was the management quite optimistic. Moving on to M&M after July auto sales results. Very strong set of numbers coming in for not only for the first quarter, but also the July sales number remained quite strong for M&M that we are looking at. Let's listen into the management, what they have to say on the outlook going forward.
We're now in conversation with the management of Mahindra & Mahindra post-reporting yet another month of 20% growth in terms of sales. But to talk more about what he's currently seeing on the ground, what's happening with the EV landscape as well, now being joined by Mr. Nalinikant Golagunta. He's the CEO of the automotive division. Mr. Golagunta, thank you so much for joining me today. My first question, being that you've seen another 20% growth, you've guided for a mid to high teens for the whole year. So at a higher end in this particular month, let me just ask you first on your electric vehicle portfolio that has seen, as per Vahan data, also a very strong growth, over 125% growth. You've crossed 7,000 sales mark for the second consecutive month. Has that also led to a higher growth as you've seen because of the fuel price hikes amongst others, that a lot of people who were on the fence are now taking their decisions? Have you seen that trend in the last couple of months, and has that continued in July as well?
Yeah, firstly, thank you for having me on NDTV Profit. Like you said, EVs have been a clear highlight for us, not just in Q1, but in July as well. The way I would characterize it, I think the demand has been very strong. It's hard to disaggregate the major drivers into each one factor, but the reality is the whole segment is in category creation mode. We've talked about it earlier. Anytime a new product comes in, that adds volume, not just for the OEM, but for the industry as well. Very little cannibalization is happening. So, as you know, we had a major launch. Our 7-seater EV 9S came in Jan, and we started retailing just about early February or so. So with that, we increased our capacity as well. We went from 5 to 8,000. So we are now averaging consistently above the 7,000 mark. XEV 9S is now the largest selling EV brand across the country. We talked about it in our Q1 results as well. So very strong portfolio strength across all the three brands, but definitely 9S is the one which is giving a bulk of the growth at this point in time.
That's my second question, Mr. Golagunta, because you had the B6 as well as the 9E also come through earlier. And it's been in the fray for the last 17 to 18 odd months. So just in terms of when you mentioned that you have a capacity of 8,000 for the EV portfolio, is it fair to assume that roughly around 4 to 4,500 will be for the 9S, and that continues to be a model that is showing very strong order book, very strong traction at this point of time?
Yeah, so the clear advantage we have is all of these three products are based on the same in-globe platform with different top hats. So I have a fair bit of fungibility between the products, and depending on what the customer choices are, we can go one way or the other. But you're right, we can easily go up to 4,500 on 9S, or potentially even to 5,000 if needed, as we get into festive as well. So that'll be a critical piece of the overall 7,000, 8,000 numbers we are hoping over the next quarter.
I do want to ask you about capacity though, because the ICE capacity will see another leg of growth by September of 2026, but the EVs will only get that increase going into, I think, the second half, and you want to reach from 8 to 12,000 by the end of the year. How should we look at that additional 4,000 that will come through? Is that going to be more back-ended post October that we might see that come through, or is it largely going to be visible in Q4 of this year?
Yeah, so like I said, most of our capacity gets operationalized as we get new products in. And we have two major launches early in the calendar year, next calendar year. One of them is a new EV brand that we're bringing in as well. So it'll be tied to that. And this 8,000 will go to 12,000. That 4,000 extra capacity is tied to that launch that we're planning for.
Also, Mr. Golagunta, for this month, of course, you've shown a 20% growth. For the YTD, the first 4 months, you are at 16% growth, but you will start to see that base effect come through in the second half. So how should we look at the growth? Is there more pressure in that sense to achieve those targets, especially in the next 2 months? And where will that delta essentially come from? Will EV be the answer to get to that 20% growth for the year?
Yeah, so like you said, we are targeting mid to high teens growth overall for the SUV portfolio this year. There's a couple of things, tailwinds, I would say. One is we are at historically low dealer stocks across the portfolio. The demand continues to be robust and we head into festive season. So that's going to help as well. Second one is the capacity additions that we've been talking about. One tranche of that will come at the end of Q2, right in time for festive as well, right? So we are hoping both of this put together, with the sentiment being quite strong across the industry, should help us hit our numbers for the year overall.
And just one open-ended question, Mr. Golagunta, largely on what you are currently seeing on the ground as well, because the momentum of EVs, and we've discussed that in quite a bit. You also, of course, you are slightly more capacity constraints at this point of time. So how are you prioritizing the key models that you have in the portfolio, as well as the orders that you're getting through at this point of time? While I'm sure the Thar as well as the Scorpio ends of the portfolio have the higher waiting periods, where have you seen that additional growth come from over the last few weeks?
Yeah, so 7XO continue to be strong, along with 9S. That was another product which we had launched as well. Very strong, robust demand we have had as well. So that should give us on the ICE side some demand boost on top of what already is strong demand across the Scorpio portfolio on the Thar, like you said, and even the Bolero portfolio post GST has done well for us. So, like I said, the demand is quite robust across the portfolio. EVs, no doubt, will give the additional growth you're talking about, but 7XO also is driving some additional growth for us.
And just one final question, because there was a lot of emphasis on the rural side of the portfolio too, even the quarterly earnings, even by Dr. Shah as well. Do you think it's now time to look at the Bolero as well as in a much more refreshed way of what we've seen? It's been a portfolio winner for you over the last 26 years. But when you look at that new model launch pipeline, you have almost 10 ICE vehicles which will come through over the next 4 years. 9 will be all new models. So how are you looking at the rural portfolio, as well as any comment you can get currently on the discounting for you?
Yeah, so as you know, we unveiled the new IQ platform last year in August, and that was to tap into not just the urban side of our business, but definitely on the rural side. It's a sub 4 and 4.3, squarely focused on that segment as well. And there are products in that portfolio which will address that market. But having said that, the current rural demand continues to be very robust. Post GST, Bolero has done extremely well. Scorpio Classic has done well. So we don't have any concerns on that front, on that overall. What was the second question?
Just on discounting, if because we've seen the demand continue even in the last 3 months or so. Generally, Q1 is a slower quarter, but this time around that's not the case. So have that reduced, or is it very model specific that they have increased?
Yeah, there's some tactical actions we have taken, but nothing of particular concern at this point in time. Like you said, dealer stock is at a very low level, and we are stocking up for festive as well. So we don't see major discounting happening going forward.
Got it. Well, Mr. Golagunta, thanks so much for joining in, giving us time here on NDTV Profit. Wish you the best. Wish you the best for the 15th and the main event launches too. We'll of course see you there, but thank you so much for joining in.
Thank you.
Well, that was the management of M&M. Stay tuned, lot more action on the other side.
Well, let's get in our fundamental guest, Narendra Solanki, Senior VP and Head Fundamental Research, Investment Services, Anandati. Narendra, you heard the management of M&M. They're quite confident on their growth path. They're expecting volumes to increase even going forward. How are you looking at this counter at the current valuations?
Yeah, good afternoon. See, right now for M&M, we have a hold rating on the stock. If you see, overall revenue growth was decent, but if you talk about margins and operating performance, then it was lower than our estimates, which was due to lower than estimated automotive margins. Also, we expect the volume growth to taper down going ahead in FY27 and 28, and the reasons being the absence of market share gain. So broadly the growth would be the market very close to the market, and we see a decline in tractor volumes also coming because the sluggishness in the industry which we see going ahead for 3 to 4 quarters, and also due to the GST there has been a visible shift towards the smaller cars in which the company has a very low portfolio in terms of model. So all these things combining, we see growth to moderate and thus have a hold rating on the stock right now.
Sports King is one counter that's been buzzing in trade. Let's get in Shivam to understand what could be the potential reason behind this 13% up move that we are seeing in this counter today.
Yes, Sports King is mainly involved in manufacturing the textile products such as cotton and yarns, and recently the company has released this Q1 FY27 results where they have posted a strong sales growth. In terms of margins also we have seen a substantial expansion. If we talk about the top line growth, that was mainly driven by the improved realizations as the business is mainly working towards implementing the orders. And in terms of financing and energy cost too, we have seen a downtick this time, which has led to better operational efficiency. Margins mainly expanded, which is due to the favorable conditions in the demand market, and also the geopolitical tensions that management has stated that has continued to impact supply chains and logistics, but has managed to improve the challenge. In terms of revenue too, we have seen a growth of around 20%, and that stands around 704 crores. Net profit has also gone up by 123%. And in terms of other metrics, the total production volumes of the company stands at 20,120 metric tons. That has seen a substantial improvement. Yarn sales volume has also gone up to 20,492 metric tons. In terms of management outlook, the management has said that the demand outlook for the company remains strong. In terms of the support consumption, the management has said that the upcoming festive season is expected to support the consumption and order flows. However, on the capex side, we have seen a company has commissioned solar power project which is expected to improve its operational efficiency, and going forward we can see a downtick in the energy cost, which will further improve the operational efficiency. The temporary removal of the cotton cotton import duty that the government has taken, that has also improved the availability and greater supply of raw materials in the market too. So overall the picture looks positive for Sports King.
Multiple tailwinds that we are looking for this counter. Narendra, any view here?
We do not have any active coverage, but if you see overall the business of the company, it is transitioning from a pure play commodity yarn spinner into a comprehensive textile player, and especially their Odisha capex, once it becomes online in I think it's expected by Q3 FY27, then I think it would provide a significant leg up in the business of the company going ahead. And also the recent acquisitions offer a medium-term catalyst. So I think from that point onwards, the performance should also pick up, also from the operating margin perspective.
Well, thank you, Narendra. Thank you for joining us and giving us your views on the stocks that we discussed in trade today. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ,
हर पल बनाओ
केसरी त्योहार विमल बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। पी मार्क द मस्टर्ड स्पेशलिस्ट सिंस 1933।
सरसों से सरसों।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
पी मार्क द मस्टर्ड स्पेशलिस्ट सिंस 1933। बरसों से सरसों। कुछ तो बात है इस दिल में।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
Hello and welcome back to NDTV Profit. You're watching Ask Profit. This is the afternoon edition. My name is Puneet Zaveri, and over the next 30 minutes, we'll try and get to all your stock related queries. So if you haven't already done so, do start sending in those queries on numbers that are flashing on the top of your screen. Also call us for your stock related queries. But as we generally do, and as we get to your stock related queries, a very quick check of how the markets are doing, because has been a day where we have been happy with the kind of gains that is seen on the screen, very close to the 24,600 mark, and it's a mark that's eluded us for a while now. So when you pull up the Nifty 50 and the heat map specifically for the same, there have been a few stocks like ITC where the results were weak but seeing a better reaction on screen right now, while Indigo, Infosys also continues to gain yet again on this Monday afternoon. Shriram Finance, TCS as well as Bajaj Finserv are some of the other key gainers for today. You're seeing some losers on the healthcare side. So Cipla, Apollo Hospital as well as Sun Pharma are down in trade today, but largely continuing to see a good healthy screen. Almost 39 to 40 stocks continuing to be in the green as we speak. Also put up the advanced decline ratio as well, because that is the other key factor about the broader markets. Last week there have been some areas where there have been some declines coming through on the broader markets. Today we've maintained a 4:1 in favor of the advances, and that too is visible on the mid cap as well as the small cap index. So those seeing some momentum today after a while, almost a 1% on the mid cap 150, small cap 250 up also 1.5% now, and hopefully a good start to this week as well. In terms of the individual movers though, on the BSE 500, you've seen some punishing reactions come through on results. So you've seen Muthoot Finance continuing to be under pressure, but it has recovered from the day's low. Z Entertainment now down 12.8%, while Latent View, Thermax, Gale, Balaji Amines are some of the other losers. Redington continues to gain, and that has been on a one-way streak We also seen some good moves coming in on First Source Solutions, as well as Jindal that continues to be up 8.6%. Aegis Logistics also giving up good gains as well. But let's welcome in our guest who will be solving all your stock related queries now. Vishnukant Upadhyay, he's the AVP Research at Master Capital Services, and Rajesh Agarwal, Head of Research at Om Capital. Gentlemen, both of you, very good afternoon. Thank you so much for joining in today. And let me start off with the first stock related query. This one, it's coming in on SBI. Our viewer Aparna is actually holding 125 shares of the counter at 860. Wants to know if looking forward for the next 2 years, if he can, if she can continue to hold and add more at the current price. Rajesh, good afternoon. Welcome to the show. Would you recommend buying more right now for the next 2 years?
Good morning, Puneet. Good morning, everyone. As far as SBI is concerned, it's a strong stock to hold for a long-term portfolio, and since she's ready to hold for 2 years, I think she should continue to. As far as adding new is concerned, I think one should wait for results that's due on Friday. And if I remember right, last quarter, when the numbers came, the stock cracked. So if that kind of crack comes and stock moves to maybe around 940, 50 odd level, that would be a very good point to add. But at this point of time, somebody looking for a long-term horizon can continue to hold, considering the number of branches is there. The asset quality has been very strong, balance sheet has been cleaned. So everything is in favor, and it's the largest PSU bank in the country. So it's a hold from us.
Got that view, Rajesh. But the next one, and this one's coming on Z Entertainment. We spoke about the stock being the top loser for the BSE 500. Our viewer Siva, he's holding almost 5,000 shares of the company, but at 154, so taking some steep, losses right now. Vishnu, very good afternoon. Thank you for joining in as well. What would you recommend Siva to do? Would you recommend him to exit because he wants a 3 to 6 month view on the counter? What would your strategy be?
Hi, Puneet. Good afternoon, and good afternoon, Rajesh sir. In fact, there has been a very dramatic fall in the G Entertainment. The prices are now down 12%, but it's a news-driven decline in the prices. Stock is basically the stock is technically was doing good until this news, but yes, there has been some collapse in the counter, and prices are now very close to 200 exponential moving average, and that aligns also very close to a very good horizontal support. That is a 96, 97. As long as prices are trading above this price zone, one can maintain a stop loss below 96. And on the higher side, I'm expecting if with the validation of 96, prices can again take a U-turn for 160 and then 120.
Got that view, Vishnu. So those are some of the key levels to watch out for on Z Entertainment, as mentioned on news flow buzzing today on the downside though. The next one, coming in on Syngene International. Now, our viewer wants to know if it's a good time to enter the stock for the next 1 year. Rajesh, actually, the recent results are very weak. Q1 results are seeing some pullback from those lows. But what would be your opinion?
See, I think at this point of time, somebody trying to put new money should try to avoid. Better go for Biocon, that's the holding company of Syngene. And as far as Syngene is concerned, the numbers this time were pretty bad. And I believe that that my trend should continue in the next 1 or 2 quarters unless some dramatic changes are there. So these kind of research companies take some time to give good numbers. So this is just a pullback, not to enter at these levels. If you want to put money in this, go for Biocon.
Got it. Well, and Biocon is a counter also after a really long time, seeing some sustained moves above that 400 odd level. But let's go across to Vijayawada now. Balaspanda, and I hope I'm pronouncing your name correctly, is joining us for a stock-related query. Good afternoon. I hope I'm pronouncing your name correctly, but what's your query?
And sir, I have this Varun Beverages Limited at 498 rupees.
Okay.
125 stocks shares I am having, and shall I continue it or sell it or?
And did you enter this counter with a technical view or a fundamental view?
Fundamental view only, but somewhere around 1 year before I entered into that one, keeping the fundamental view only, I have taken that.
Got it. Well, let me go across to Rajesh then. Rajesh, yet again in this quarter, I think there was 13% growth in volumes in the domestic market, but I think below the street expectation, hence stock has fallen. Would you recommend him to continue holding? Is it a good time to average?
It's a strong company, no doubt on that. One can average. It's the second largest bottler of Pepsi outside US and operating not only in India but neighboring countries like Nepal, Bhutan, and others. They have recently moved into liquor business. Or they have taken over a liquor company and trying to move into that. The real reason for fall this time could be attributed to the fact that summer was a short period, shorter than expectation, and the competition it faces from Reliance, that's Campa-Cola. But going forward with the kind of profile is as Pepsi and other non-carbonated drinks, I think these levels are good levels to add to. So continue to hold.
Continue to hold. Got it. Well, let's go across to another caller from Mysuru this time. Ramesh has a stock query for us. Ramesh, very good afternoon. What's your query?
Hi, sir. Very good afternoon, sir.
Good afternoon, Ramesh. Go ahead.
Sir, trend stop in right time to in correct level in short term, please technical analysis, sir.
Got your view, Ramesh. Vishnu, what would you recommend? Is it a good time to enter trend now?
Yeah, definitely. It's a beaten down counter, and currently it is trading well above its all key moving averages. So I think risk reward is also in favor on the lower side. I believe 28.34 will act as an immediate support. So with keeping stop loss below that level, 28.34, one can go long on the higher side. I'm expecting 33.50, 33.80 sort of levels can't be ruled out in short term. So yes, one can go long.
Got it. Well, let's go across to Angel One now. Anil Nair, who's from Abu Dhabi and joining in, wants to know if his 1,000 odd shares that he's holding at 270 is the right pick. Rajesh, what would be your opinion?
Say book partial profit, I would say. The numbers would be okay. And company is doing well, but with the kind of volatility which we are witnessing in the capital market, I think at these levels one should try to book some amount of profit, if not full. Book partial profit. Move that money to some other capital market names, or maybe a BSE would be a good name to put on.
Got it. Got that view, Rajesh. But the next question, this one's coming in from Gaurav from Gandhinagar. He has a question on Senco Gold. He's bought these shares at 420, holding 500 of them. And Vishnu, he wants to know a good target as well as a stop loss that he can hold for the medium to long term. What would that be? Because you've seen, of course, a very spectacular move on Kalyan. Does that replicate on Senco?
Well, definitely. In fact, on a chart, the stock is looking quite. One second. Yes, on chart, the stock is looking quite positive, in fact. I believe the stock has now gradually coming down close to its 21-day exponential moving average. So this could be a very good entry point here. With keeping stop loss below 378, one can go long in Senco Gold. On the higher side, I'm expecting 430, which is broken decisively because that's a recently formed high 430, 434. If prices manage to breach that price zone on the higher side, 460 and then 470 could be on card. So yes, one can go long in the Senco at a current levels.
Got it. Well, the next question, this one's on Jay Kumar Infra. It's a stock we haven't spoken about too much, but today Hanish, who's from Sydney, has a question on it. He's holding shares at 490 though, and close to the current market price. Wants to know if it's a good hold for the next 3 years. Rajesh, we've actually seen a correction on all of these infra names. How are you looking at them, and is Jay Kumar a good pick right now?
See, somebody thinking of adding more should go for names like Larsen or Dilip Buildcon rather than putting new money into Jay Kumar Infra. Somebody holding can continue to hold. The order book is good. All the negatives have already been discounted in the correction and all. I think in the next 2 quarters or so, this stock can move to around 530, 540 odd levels. For 3 years down the horizon, what I would suggest is keep a tab on the quarterly numbers and the company presentations, the order books, order inflows and all, and then take a call. Because these kind of companies, 3 years time on horizon is a long period to comment at this point of time.
Got it. Also, Rajesh, sticking with you for the next question as well, because this one's an interesting one. It is from Rajesh, who's from Hyderabad, and his question being, if he should focus on an EV focused play like Sedama Mechatronics, which is a recent listing, or something like Sansera Engineering. Now, both of those counters, Rajesh, have run up, have a very heavy export focus as well. But with the current opportunity, with the current run up, do either of them make the list, or would you prefer something else in the auto ancillary space?
See, if you're looking to pay purely on a EV space, I think Sansera, out of these two, Sansera is a good buy. Otherwise, what I would suggest is go for Sona BLW. They have a good order book, and the major part, that's almost 70-80% of the order book is from EV space. They're doing well. Even the railway company which they took over, it has started giving out good numbers. And all the issues of the promoter side, which were there in the recent past, have taken has been left behind, and the numbers have been pretty good. So this can give very good returns in the long term. So what I would say, Sansera and Sona, these are two out of the picks which have been given.
All right, well, let's go across to Bengaluru now. Moin is joining in for a stock-related query. Moin, very good afternoon. What's your query?
Hey, good afternoon to you all. I have Sarma SGS at the average price of 1,400.
Okay.
Now, my idea was to do a quick trade on this, considering good numbers, quarterly numbers, and the possible QIP in this month.
Yeah.
I wanted to know the short-term view on this.
Got it, a short-term view. Vishnu, on Sirma SGS, there has been a very spectacular run just in this year as well as the last 1 year too. What would you recommend moving to do? You have, of course, the earnings which are also out of the way. So what do the charts suggest now?
Well, definitely. Prices are now consolidating in a very thin range after witnessing a very stellar move. And the range is 1,465 on the higher side, 2,165 on the lower side. The good part is that the stock is currently trading off the short-term key moving averages, and the price action is clear-cut indicating that the breakout should take place on the higher side. So I believe, prices should not fall below its recently formed low, that is at 1,260 sort of levels. With keeping a stop loss below that, at 1,260 on the higher side, prices might approach towards 1,600 and then 1,650. So one can definitely build a long position from the present juncture.
Got that view. But another interesting question now coming in from Vijayawada. Jassi, who's a regular viewer of the show, wants to know about Nykaa. He's holding shares at 280 odd and wants to know a long-term view on this one. Rajesh, after again a very long time, we've seen a couple of good results from the company in Q4, a big guidance also for the next 5 years. What would you recommend Jassi to do? Should he continue to hold?
Of course, it's a hold from a side, doing not only good in online, but also they are moving into offline stores too. And this is one platform company which has been reporting profit since very long period of time. Although the profits were very small to be talked about, but still the bottom line was in black. The numbers have been started improving, revenue has been moving up, and that offline presence is also increasing. For a target of maybe 400 odd rupees, one can continue.
100, got that view. But the next question, and this one's on AI engineering. Our viewer Raj has actually bought these shares at 4785 and wants to know what's the near-term upside potential from here, Vishnu. Yet again, a counter which has been very interesting, coming back into focus after a long time. What's your view? What's the stop loss? What's the target?
Well, so, stock has been in a very good uptrend, but recently stock is, some losing momentum from the higher levels because the prices, have now started to form a lower highs kind of pattern. Prices, I believe, are likely to consolidate within a range of 4870 on the higher side and 4400 on the lower side. So if someone already have this counter in the portfolio, maintain a stop loss below 4400, below which I believe prices should take further plus towards 4100. While on the higher side, prices must give a breakthrough above 4890 sort of levels to continue its uptrend. So completely it's looking a range bound market.
Range bound, got it. Well, the next question is from Bindu from Hyderabad. Wants to know an entry level for EPAC durable for the long term? Yet again, Rajesh, last year was a washout, no PLI income benefit coming through. Would you still look at this one favorably just before the results?
I don't think it's better avoided. The numbers have not been great in the past, dependent more on PLI. And at these levels, I don't think there is much of left in the valuations part also. So it's better avoided.
Got it. Well, let's now start the rapid fire round in this edition of Ask Profit. Rajesh as well as Vishnu, you know the drill. The first question coming through, and this one's on FSL. Our viewer Mahesh is holding these shares at roughly around 200 odd. Wants to know if he should book his profits right now. What would you recommend here, Vishnu?
Book partial profit and maintain trailing stop loss below 300.
300, got it. Next one coming in on Bikaji Foods. Our viewer actually bought these at 735, so at elevated levels. Wants to know if he should book out his profit now and invest that in Marico. Would you recommend that, Rajesh, either of those trades?
No, continue to hold in Bikaji. If you want to purchase something new into FMCG, ITC would be a better choice.
ITC would be a better choice, got it. On the Newgen Software, our viewer is holding shares at 590, and this is Harshad from Pune. Wants to know if he should continue to hold this one for the long term. Rajesh, would you recommend that?
One can have a look. It's a decent company.
Got it. Next one coming through is on Greaves Cotton. Arijit is actually holding these shares at 260, but he's holding a massive quantity. Rajesh, 24,000 odd shares. Yet again, not the most higher performing counter. What's your opinion on the counter, and what should he do with his position as well?
At this point of time, it's a hold. Try to exit if it moves up around 250, 255 odd levels. A lot of EV battery, EV story going on. So at this point of time, hold.
Next one is on Gillette India. Ashish wants to know if it's a good time to buy from the medium term perspective. Vishnu, would you recommend that?
No, in fact, prices are currently trading below 200 exponential moving average, so stay away from the counter as of now.
From the logistics space, Blue Dart Express, if it's a good time to make an entry for the long term, is Sandeep's question. Rajesh, should he do that?
Yes, one can add.
Ajay wants to know about DLF. Again, from the long term perspective, is it a good time to enter, Rajesh?
Yes, one can enter. Debt-free company doing good.
Next one's from Vishwanath Reddy on Reddington. He is holding 200 shares, but at 157. So yet again in good gains on this counter, almost doubled his money, and wants to know if it's a good time to book profits. Rajesh, should he do that or ride the wave?
Unless you are in need of money, continue to hold. Strong company, good numbers.
Got it. Next one's on from Ashwini on CSC. He's bought 1,000 shares at 196. Vishnu, question being, should he still continue to hold?
Yes, definitely. Maintain his stop loss below 161.
Also, Rajesh, your view on Amara Raja is the question from Satyan. Or should he shift out to another sector? And his question is on PFC. So either of those?
Amara Raja is the pick out of these two. Continue to hold.
Got it. The next one's, from Koteshwar Rao. He's holding NCC since 2024 and he's down 40%, Rajesh. Again, I think we spoke about a little bit about the infra space, but what's your view now? What should he do?
Can move up to 160 odd level in the next 6 months. So at this point of time, it's a hold.
Got it. On Car Trade Tech, that's the next counter where Suresh Kumar is holding shares at 2350. Vishnu, he wants to know if it's a good time to book profits now.
No, definitely one can hold the position, but maintain the stop loss below 2600. On the higher side, I'm expecting 3050 and 3090 sort of levels can't be ruled out.
Also, Vishnu on Delta Corp as well, because one of our viewers, he bought these shares at almost 220, but at elevated levels. So he's asking, he's bought it at 91. What should he do at 63?
That's not a prudent levels to get exit, but yet the stock is in a bearish trend. So I would say maintain the stop loss below 58. If prices falls below that level, try to get exit from the market.
Got it. Well, that was the last question of the rapid fire as well as this edition of the show. But Rajesh as well as Vishnu, thank you so much for helping us solve almost 31 queries, and with that, a grand total being 103 queries, including the morning and afternoon edition. So thanks so much, viewers, for all those who tuned in and all those who asked us questions. But do stay tuned. A lot more action on the other side. And we'll see you tomorrow at 10:30 for Ask Profit, the morning edition.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। ये लीजिए भाई, मैंने बनाया है। व्हाट्सएप आपके साथ खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करने अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो। The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front.
Thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. We're coming to you, actually that I should have said, that is Mahima Vachajani. We're coming to you live from the NDTV Profit Suzlon studio. Hi Mahima.
Hi Alex.
Well, it's a good day of trade. It's a good start to the trading week. We're trading pretty much at the high point of the day, 24,600 or thereabouts, very close to that mark, up as much as 0.8%. And that's because the setting of everything was looking very strong at the start today, right?
Yeah.
Crude oil prices coming off, geopolitical tensions easing, the update from the Reserve Bank of India that said that in the swap window, you've had over $40 billion that has come through since the start of June.
Yeah.
All of those things bode well for the Indian equity markets and India as a whole.
And earnings season has also been very good. That is one factor. Plus overall in terms of macro factors, in terms of how power has fared, the demand has gone up by 13%. Plus there are bank deposits which have also picked up very well. All of these factors combined together are faring very well for the economy, and that's reflected in the markets as well.
So you have the Nifty Bank that is more or less keeping step with the Nifty 50 up about 0.9% or 0.8% or thereabouts, and the broader markets actually also looking okay, pretty good actually. The advanced decline ratio should tell you that, but pull up the mid cap index and the small cap index on the screen and you'll see what I'm talking about. So we're holding out with gains of about 0.9% for the mid cap index, more than 1%, 1.5% in fact for the small cap index. So that looks robust. Let's pull up the heat map for the Nifty 50, and we started off the day with fair bit of green on the screen that has held through.
Continued, yeah.
And just about 10 stocks in the red. Sun Pharmaceuticals, Apollo Hospitals, Cipla, some of those defensive names and pharmaceutical names. Generally, when the market is doing well, healthcare and pharma tends to take a bit of a back seat. That is indeed happening. And ONGC, for obvious reasons, as crude oil prices have come off. That is seen as negative.
Yeah, and on the flip side, you have Indigo, topping that chart because crude prices have come off, up almost 4%, and IT is back in action again today. You have Infosys, TCS, etc. doing very well. Plus, auto names have been doing very well in the past. They've actually done very well in the past 1 week, and the relative strength is also looking very strong in all the auto names, and that's why you're seeing gains coming in on something like a Tata Motors, Eicher Motor, etc. Plus, Bajaj Twins have been outperforming. Did outperform in Friday's trade session also. Have been outperforming today as well, and Eternal still topping there, up by about 2.3%.
Yeah, the one thing that we didn't mention actually is the fact that auto sales data for the month of July has been incredibly strong, not just for passenger vehicles but also for commercial vehicles and for tractors. Mahindra & Mahindra reporting a 20% increase in domestic tractor sales. That certainly is better than a lot of people had anticipated, and I think it's a shot in the arm for the path ahead for rural as well. But let's talk about the broader markets. We just did actually. Let's talk about the sectoral heat map for the market as a whole today, and let's look at the screen because IT more or less ruling the roost. That's been the case recently. You also have the metal index, PSU banks, FMCG up and about over 1% of gains. This is largely on account of one stock, and that's Z Entertainment. It is losing ground. There is a fundraise that is planned, but there are a few headwinds that the promoters will have to deal with as well. Healthcare and pharma taking a bit of a backseat.
Yeah, I think the BSE 500 will also be an interesting one because yet another day of earnings action at the broader end of spectrum. You have something like a Reddington. Yet another day of gains coming in for this one. We discussed this counter on Friday as well. Aegis Logistics also doing very well, up 8.5%. You also have something like a Balrampur Chini. In fact, all sugar stocks have been doing very well today. Something like a Dalmia Bharat is also up almost 13%. You have Balram Chini, which is also up 7%. Jamna Auto, KIOC and LTM are the other ones that are doing fairly well. We talked about Z Entertainment. Muthoot Finance is the accident of the day, down by about 7.5%. And you also have Latent Few and Narayana Hrudayalaya on the back of weak earnings, down 4%. IEX, there's a Supreme Court update that's come in with regards to the market coupling, and on the back of that, the stock is down by about 4%. Balaji Amines is where the pressure has still continued because it's still down by about 4%, and so is GAIL down by about 4%. But what are the factors that we're going to watch out for today, Alex?
Very interesting, right? So a couple of things changed today. We'll talk about it in just a bit. The settlement for F&O stocks is changing, but we'll take you through everything that you need to know. For now, what you need to know is that the Nifty is continuing with its uptrend for the 6th consecutive session. The rupee has strengthened. The yields have cooled off across the board, not just in India, but globally as well in the US. Crude has fallen on those global cues. You're seeing value buying come through across small and mid-cap names as well. The Nifty 50, 24,600 is acting as a key resistance. We're not too far away from that mark right now, just 10 points. A decisive close above the 24,600 mark could actually open the gates for 24,800 to 25,000, and 24,500 acts as a support. That entire range has actually moved higher. 24,400 will be a strong support below that mark as well. For the Nifty Bank, you have PSU banks that are leading the gains. 57,800 to 900 is seen as a resistance level. 57,600 to 500 is seen as a support level on the downside. We're joined today by Lakshmikant Shukla, Senior Technical Research Analyst, Yes Securities, as well as Ashish Chaturmota, Managing Director and Fund Manager, Apex PMS JM Financial. Thank you so much, gentlemen, for taking the time. Let me start with you, Lakshmikant. Very strong setup, and for once you actually have the frontline stocks that are keeping pace with the broader markets. It has been a tale of two ends of the markets moving in different directions. What do you think about the setup right now, though?
Yeah, good afternoon to all of you. Yeah, I agree that setup is strong and the Nifty continued to extend its winning streak, gaining over around 1,000 point from last few sessions. But it is now nearing its crucial hurdle of 24,600. This region is also aligned with its April month swing high. While the index has been to sustain above this level multiple but the likelihood of a breakout appears stronger this time, supported by broad-based strength in IT, auto, and pharma stock. And even today, index if it surpasses this level of 24,600, then after it will going to retest it 200-day SMA that is placed around the zone of 24,770 to 24,800.
Lakshmikant, apologies. I'm going to have to stop you there because your line is not the clearest. So we're going to try and get that fixed. In the meanwhile, let me go across to Ashish. Ashish, I'm asking you this because you actually have experience in the technical side of things as well. And I just want to understand from your perspective and for our viewers as well. We'll be talking about it multiple times over the course of the next 1 to 1.5 hours. The change in the settlement that takes place today, right? The fact that F&O settlement moves from a volume weighted average price to an auction method towards the close to have better price discovery. Can you explain it in a simple manner so that people understand what is happening?
Hi. So I think broadly the objective is to reduce very extreme volatility, and I think that last half an hour typically a lot of activity which led to even if there's no serious interest in the whole day, and in half an hour if there's extreme volume, it changes the overall closing dynamics, and that's how this methodology has been changed to an auction based, which will bring more price volatility, price stability, less volatility. And I think it will also create a mechanism where one can take a very informed decision basis this input. So I think it's a way to reduce the to curb the volatility, and which is good because we have seen extreme change during the end, and which will get reduced. So my sense is it is going to bring a lot of price stability eventually. And this is one more mechanism actually to bring down the overall measures. So I think it's in the right direction.
Is in the right direction. So that's an initial overview of what the changes entail. But of course, starting 3:15 today, we'll get you a better sense of what is happening while it is happening, so that you have a fair idea of what you're experiencing as well. Ashish, just a quick view on the markets as things stand right now. Are you seeing opportunities, or should retail investors now, based on everything that they're seeing on the earnings front, on the external front, now go out and add to their positions?
Yes, so I think look at the numbers. You will see very encouraging set of numbers coming, not just from the small and mid cap, but even the large cap after a long time has started doing very well. So out of 32 stocks, out of the top 50 names have come out with the numbers, and the numbers have been quite encouraging. We have seen double-digit top line growth. Same is the case with EBITDA and PAT growth, which we have witnessed in the large cap. Now, obviously, when you look into the small and mid cap, the numbers are far more encouraging, because there we are seeing more than 20% kind of top line growth and EBITDA and PAT growth. So definitely, there's a lot of incremental alpha which is being generated from our earnings side into the small and mid cap. But surprisingly, the large caps, after a very lean quarter for last so many quarters, we have seen some very serious numbers coming into it, and that's where I think the re-rating is happening. And after a long time, we are seeing Nifty eventually crossing 24,500 mark and remaining stable. So generally, we had seen that it used to go to 24,500, and every time there was a profit booking which used to happen in this range. But this time, we are sustaining about 24,500, and eventually we are going to cross the 200-day moving average, which is close to 24,750, 24,800. And once that happens, I think there would be further re-rating which will start taking place. Now, coming to the sectors, if you look at some of the CDMO players like Divi's Lab posted its numbers, and a very encouraging set of numbers where there's they're doing almost 2,200 crore capex, and the way the optionality is going to go up in the CDMO space. I think players like Divi's Lab, Naveen, Laurus has been positively surprising on upside. Same is the case with some of the NBFC companies. So we have seen, Shriram Finance or Bajaj Finance, showing a very strong traction because of the cost of borrowing coming down for Shriram Finance, and same is the case with Bajaj Finance, where the credit growth has been very strong.
Got it. Okay. So those are, some of the names to watch out for. But today, the stock of the day that we've chosen is Urban Company, and arguably has to be the one, right? Because overall, it's seen an uptick of 13% and it's upheld those gains throughout the day, right? And to understand as to what's worked this quarter, because core business has remained very strong in terms of where the India consumer business stands. That has remained extremely resilient despite of the inflation, the competition, etc. That the entire segment is seeing. Margins have improved alongside of growth. This was not something that was anticipated by analysts, but margins have improved, and that's one of the reasons as to why we're seeing that significant uptake in the stock. Plus, they've added 1.2 million new users in a quarter for the first time. This is higher users being added in any quarter for Urban Company. In terms of the native business, the product is this particular product is nearing its profitability, and that is also something that has triggered reiterating for this counter. Now, if you take a look at the numbers, overall prima facie revenues saw an uptick of almost 44%. EBITDA losses and net losses did widen because EBITDA loss came in at 92 odd crore versus that of 4.8 crore. For net loss, it was at 92 odd crore versus that of 7 odd crore, and this was largely on account of them making investment in the native business. So overall, in terms of where segments go, India Consumer Services saw an uptick of around 29%. This is the net transaction value that we're talking about. International business saw a growth of around 76 odd percent. Native net transaction value saw a growth of 51%, and InstaHelp, because it's a very nascent business and it's in the early stage of it. This is a metric that we compare on a quarter-on-quarter basis, so that's seen a growth of around 32 odd percent. In terms of management commentary also, I think it's a positive one because InstaHelp total addressable market is estimated to be anywhere around that 7,000 12,000 crore mark, and core business margin targeted anywhere between 9 to 10% of the net transaction value. This is what the management has said, and AI is now used across onboarding, training, audits, markets, coding, etc., which is going to further help them reduce their cost. Lastly, I think Morgan Stanley's double upgrade on this counter was also one of the reasons as to why the stock is zooming in trade. They've given it an overweight and with a target price of 165. What they're saying is that structural expansion in India consumer services is something that they've liked, and confidence on profitability across segments with growth execution is something that they have proved since the last couple of quarters. Lastly, in terms of profitability target, they believe that they might achieve this ahead of the guidance, and the elevated InstaHelp losses can also force consolidation, and ROC can normalize around 20% plus. The starting point of valuation has become reasonable according to them. So that's of course one debatable point, but that's what Morgan Stanley believes right now. So that's the overall picture of how things have fared for Urban Company and why the stock has zoomed so much in trade. Ashish, I'll quickly come to you with regards to this particular counter, considering that the competition is intensifying, right? What do you make of this business and the stock Urban Company per se?
So Urban Company, we have seen a very strong re-rating post the kind of growth it has witnessed, and I think this InstaHelp business, obviously there is going to be huge competitive intensity coming from Snapbit and other players, but our sense is that the TAM is really large, and once you reach a size and scale, then automatically the business is going to turn positive, and that's what market is reading now. And this is not the case with just Urban Company, but the entire new age businesses are seeing this re-rating. So off late, you have seen what has happened to Eternal, Swiggy, and even for that matter, today Misho has done really well. So our sense is that this entire space is seeing a lot of traction because of the kind of TAM which is expanding, and we believe that even Urban Company is going to benefit out of this re-rating. But our top pick in the space would be Eternal and followed by Misho.
Okay, Lakshmikant, we couldn't hear you the first time. So quick view on the benchmark and individual stocks that you're liking this afternoon.
So today benchmark had played fairly well, and now it is approaching towards key resistance levels of 24,600, where its April month swing high is also placed. multiple times it has faced a hurdle, but I think in upcoming session we will see this breakout because there is a strong traction which I have found in the Nifty IT, auto, and Bank Nifty. Today, Bank Nifty has also reclaimed its 200-day SMA with the formation of bullish candles. So here also I am looking positive. So I am expecting good upside move, and probably Nifty could retest its 200-day SMA, that is placed around the zone of 24,770 to 24,800 levels. So that's it, my view on the indices.
And what about individual stocks, Lakshmikant?
So I am seeing traction in the Nifty financial space. Today we have recommended call on the LTF. It has given rounding bottom breakout on the daily chart. So I'm expecting the levels of 240 in L&T Finance soon with the stop loss of 200, 318, 308 on the downside. So as long as it holds this level, I am expecting positive momentum in LT Finance. Apart from this, I'm also looking good in Supreme Industry. So today it has also given a congestion breakout on the upside, and from last few sessions it has formed base around its 50-day SMA levels, and we could expect the breakout of the levels of 3,540. Once it taken out this level, then it will move higher toward the levels of 3,700. So that is our expected target, which we are thinking for this Supreme Industry with the stop loss of 3,400 on the downside.
Lakshmikant, what do you make of the auto space right now? Because there are a lot of names that are showing relative strength. There's also something like a Hero MotoCorp, which just gave a good breakout on Friday. Do you think any of these names still have some steam left and you can go ahead and trade?
So there are a few stocks which we are also liking among Nifty auto space. First one is Eicher Motor, which is looking good on the daily chart. From last few sessions, it has been making higher tops and higher bottom. And now in today's sessions, even it has formed a bullish candle on the daily chart. So I'm expecting upside move toward the levels of 8,200. Second one is Ashok Leyland. Since so long, this stock has been trending lower, but today it has given range breakout above the levels of its 200-day SMA, that is placed around the zone of 166 to 168. So I'm expecting further upside move in Ashok Leyland toward the levels of 184 to 185 kind of range. Apart from this, Tata Motor Commercial Vehicle has also seen a pullback move in today's sessions, which is also looking good, where we can think to initiate long position in the upcoming sessions. It had also breached its previous swing high of 445, and now it is going to close above the same. So I'm expecting the move toward the levels of 470 to 470 kind of range with this stop loss of 435 on the downside.
Okay. All right. So that's a technical check on the auto pack, and it's looking good in trade. Certainly has momentum. Mahima was pointing that out to you just a short while back. But Ashish, on the fundamentals, based on the numbers that you've seen, based on the earnings, Maruti also came through with the numbers, and it was a bit of a disappointment on the margin front. But I guess to a certain extent, you can view it as positive if you expect that down the line, sooner rather than later, input costs will actually go down. And from that perspective, moving to a monthly settlement with suppliers would be a positive. So with that in mind and the rest of the pack in mind, what would your fundamental picks be in the automotive space?
Sure. So I think the entire space is looking very, very positive. As you rightly mentioned, there are two things to be noted. One, post this GST and income tax, relief which has come, we are seeing this month the volume jump has been almost in double digit, and a lot of these companies have seen more than 18 to 20% kind of growth rate YOY. So clearly, after almost 6, 7, 8 quarters of very sluggish growth, we have seen very, very sharp recovery. And this is not just wholesale dispatches, but even the retail sales has been really very sharp in nature. So clearly indicate that the demand is for real, and that's what is getting reflected into the numbers of Maruti, Mahindra, or even for that matter, even two-wheeler space has seen very, very good traction. Second, if you look at this margin thing, so it can be considered as kind of a very temporary blip, but eventually we are going to see normalization in the same, and the margin profile is going to see some improvement. From a valuation perspective, if you look at Maruti is trading at a forward 20 multiple, Hyundai is trading at a 15 forward multiple, and that's where we believe that there's a very good headroom for growth for a lot of these companies. So our topic at least in the passenger vehicle segment would be a player like Mahindra, which is going to be a big beneficiary of SUV plus I think even the tractor sales is also going to do very well. So Mahindra is our topic. In the two-wheeler space, we like TVS Motors and Ather Energy because both these companies are gaining lot of market share from Ola. So I think these are the names which we like at current.
Yeah, certainly. Some of those EV two-wheelers have done incredibly well. Ather for one, and for Bajaj Auto, it's Chetak is doing well. But we were talking about Urban Company a while back, and it's arguably the stock of the day with gains of as much as 13.4%. On the sidelines of an event that took place over the weekend, Urban Company's Varun Khaitan spoke about the business model and the value creation for employees as well. This was at the Decipher event that was organized by Deserve. Listen in.
The journey at Urban Company really started with a very deep internal conviction on our model. Back in 2013, we'd shot our first startup, spent many months really trying to answer the question of what's biggest problem in urban India that a new company can solve. And in that journey, we were very deeply convinced that services was broken. It was broken because of the prevailing model, where we actually don't place trust on the individual service professional. Like it's controlled by SMBs who really marginalize the final working professional. And flipping that model was the entire basis of starting our company. So internally, we never asked this question of how do we build trust. Internally, we knew this was the right thing to do. By doing this, we were, aligning incentives beautifully. And then followed the journey of how to actually build the platform, where we invested a lot in training and standardizing the service SOPs. We built a lot of technology to make the lives of the individual service professionals easy.
Right, so that was Varun Khaitan of Urban Company talking about the business model as to how technology is changing for them, but also so is the competitive intensity, right? Because of the advent of Snapit and Pronto, which are burning cash rate at a very higher pace as compared to what Urban Company is doing. So it'll be an interesting one to watch out for. But let's get in my colleague Somit Sarkar, who joins us with all the chatter that he's been hearing from the dealing room. Somit, what is it that you're hearing today?
A host of stocks and a lot of stock-specific action in dealing room. Firstly, it's Jubilant Food. Now, there are buy flows on the FI desk and delivery volumes are expected to be seen on the higher side, and that is one of the reasons why the stock perked up in trade, up around 7% in trade. Buy flows coming in on the FI desk for this counter. On the flip side, there is Titan and Go Digit. Now, dealers indicate that there are sell flows on the DI desk at higher levels. Mutual funds have been seller in both the counters at the higher levels is what dealing rooms are indicating. For Sudarshan Chemical, that stock was under pressure for the last 15 to 20 days, and right now what dealers are indicating is that the selling pressure is largely over and the stock could rebound from the current levels. For Axis Bank, there are buy flows on the institutional desk. Both foreign and domestic institutions have been accumulating this counter in trade, and delivery volumes are also expected to be on the higher side. In fact, dealing rooms are giving a target of nearly 1500 rupees on Axis Bank in the next few months. For Geo Finance, there are buy flows on the large HNI and PMS desk. Dealers are expecting some positive news flow to come in here. The stock has been gaining for the last couple of trading sessions. And lastly, given the fact that it's earnings season, SBI, Samvardhana, Motherson and Fortis, there are buy flows on the PMS desk. Dealers are expecting stable Q1 numbers to come in from all the three names.
Yes, Amit, thank you so much for getting us those details. I think, Geo Finance is the one which is standing out, has seen significant amount of gain in the last 1 week, still trading higher. Titan is the other one. The earnings are supposed to come out on 7th, but we're seeing sell flows coming on the PMS desk. So it's a wait and watch because it's already run up so much.
But based on the quarterly updates, it's expected to be a very strong set of numbers.
Yeah, it could be sell on the news strategy, maybe, probably. Yeah. We'll have to wait and watch out for.
But at the longer term chart, charts
Yeah.
for Titan while we're at it, right? Pull up the 3-month chart maybe, or the 6-month chart, or year-to-date chart for Titan. There you go. Okay, so the 3-month chart looks good. It's up about 11-12% or thereabouts. So it's bounced quite considerably from the low point. Okay, the 6-month chart is even better. Ashish, a quick view on Titan. If you manage to hold it or you manage to buy it at the lows earlier in the year, would you use opportunities to take money off the table if you've made between 15 and 20%? I think you might be on mute.
Yeah. So as far as Titan is concerned, it is growing at a very high base. Also, we have seen very strong growth, and the way they've been trying to diversify into some of the businesses also is clearly giving us a sense that this trend is going to continue. Maybe some profit booking here and there could not be ruled out, but if any profit booking, any serious profit booking which comes even post results, I think that should be viewed as an opportunity to go long, only because structurally we believe this is one company at a very high base, growing very strong, diversifying into other segments, all put together with senses it is going to be a good compounding story, and in a sector where we have always concerns regarding the CG issues. I think this is one company which has stand very, very strong. So our belief is that Titan one should continue to ride the trend, and any dips should use as an opportunity to add more into the stock.
That's the view coming on Titan, but Kirloskar Brothers is the other one that's eyeing double-digit growth, even as profit has remained flat this quarter and margins came under pressure in Q1. In fact, we spoke to Rama Kirloskar, Joint Managing Director of Kirloskar Brothers, on understanding as to how the quarter has gone by and how growth outlook is looking like going forward in FY27. Listen in to what he had to say.
The first one would be in the building and construction sector. Our order book has increased by 14% year on year. Indian cities have a rapidly growing skyline, and this will be one of the drivers for growth. KBL specializes in pumping, boosting, HVAC, and firefighting systems for high-rise buildings. Globally, our pumping systems operate in buildings such as the Shard, Burj Arab, Burj Khalifa, Marina Bay Sands, Singapore, Walkie-Talkie Building, just to name a few. So that's one of the space that we are very, very strong in. We have all the product certifications to be able to assure safety and performance to the end customer, whether it's FMUL or LPCB. That's the first one in building and construction. The next one is in data centers. That is a significant opportunity in India, but it is difficult to quantify at this point in time because the Indian market is still at a very nascent stage. We are already qualified along with global majors because we have supplied to markets such as the US, where there are already more than 3,000 data centers that are operational. So that's the first building and construction segment. The next one is in defense. KBL supplies specialized high-performance marine pumps for the Indian Navy for frontline warships, stealth frigates, and destroyers. Under our Honorable Prime Minister's Atmanirbhar initiative, we have already supplied equipment for the Project 17A stealth frigates and the 15B class destroyers. Our sale in Q1 increased by 93% year-on-year basis as we've developed a very special kind of high-end exotic material that our Navy prefers. And we are the only pump company in India with this capability. I would also like to highlight that we have 7 in-house foundries capable of casting more than 121 materials.
Okay, a significant update in the payment space here in India. And this is exclusive information that is coming through that my colleague Shrimi has picked up. The government is proposing 0 MDR, that's the merchant discount rate, on digital payments. To tell you about what this is and why it is significant, Shrimi is joining in. Shrimi, why is it significant that they're tagging this as 0 MDR? What does it mean?
Yeah, actually, just to give a bit of context, a lot of back and forth on whether the MDR is coming or not on the large payments or on the small payments. This has been going on for some time, and we have seen that impacting stock quite a lot. And this is a proposal which is coming in the form of payment and settlement amendment, which government is proposing. In fact, NDTV Profit has reviewed that, bill, and in fact, it's talking about that the new framework would prohibit banks and payment system providers from levying any charges on digital payment modes, which will be notified by central government after introducing the bill in Lok Sabha, that we could expect from FM Nirmala Sitharaman very, very soon, perhaps tomorrow. And that's also, Alex, for the reason because the bank and payment system provider will be barred from imposing directly or indirectly any charge on person making or receiving payment through these electronic modes. So that's the context. Is important. Also, no bank or payment system provider can levy charges on users' electronic payment modes notified by central government. So, in that thing, they keep mentioning that there should be a notified payment mode. Now, we have to wait for that A list, which will, have no NDR levy, and that's going to be very, very crucial. But the important news here is that this particular amendment is coming, and there the government is going to propose zero NDR, which means there's no NDR going to be levied on any digital payment.
It's a very interesting update, and thanks so much, Srimi, for getting us those details. Incidentally, and this was not planned, I must tell you, MobiKwik and the management of MobiKwik is joining us to speak about the numbers gone by. In fact, Upasana Taku is with us right now. Upasana, thanks so much for taking the time, and a pleasure speaking with you as always. The street is giving the results a thumbs up, so let's start with the Q1 numbers. And seemingly quite a bit of ground has been made up with regard to the margins, with regard to the GMV as well. So tell us what has worked in the first quarter and whether that's replicable in the remainder of FY27.
Absolutely, and thanks so much for having me here. It was brilliant to hear the discussion going on right before.
Ask you about that as well, by the way.
Sorry?
I'm going to ask you about that as well, but I thought let's get the numbers out of the way first.
Yeah, absolutely. See, it's been a great quarter for us, so it's an exciting and hectic day for me. This is our third consecutive profitable quarter. The PAT is 7.6 crores. And the swing from last year same time is about 49.5 crores. So I'm very excited about the fact that, we've been able to deliver a great change and shift in the company's business model structurally over the last 1 year. Last 2 quarters were also profitable, but this quarter, we have further enhanced the profitability. And I think the other interesting things to know are that the platform GMV, which is the total payment GMV that we process, is also on an all-time high. This is our 14th consecutive quarter where we have grown our payment GMV, and we've clocked it at about 58,700 crore, which is a 50% year-over-year growth. In terms of UPI, we are the second fastest growing UPI third-party app in India since last year, same time till now. Our UPI transactions have grown 5x faster than the industry. We continue to retain our position as the largest wallet in India with about 19% market share. And in addition to that, on the lending side, which is our core monetization engine, we have delivered yet another brilliant quarter. Credit quality has improved by about 25%, resulting in net financial services margin improving from 1.1% last year same time to 5.9% in this quarter. And that is really a lot of hard work paying in, not just in terms of credit quality improvement, but also recoveries on current book as well as past book playing through. So very excited about this quarter, and we do believe that this is the baseline. We expect to be profitable in all quarters going forward in this financial year.
Great to hear, Upasana. Hi, Mahim also joining this side. Correct me if I'm wrong here, and whether this is the right way to look at it, because you mentioned that GMV has gone up by 50%, but payments revenue saw a slight dip of 2%. So going forward, from an understanding that UPI volumes are expected to go up, and there's also Apple Pay, which could possibly put pressure in terms of where the volumes go. How do you see this panning out for the rest of FY27?
No, you're quite right. I mean, although we had a 50% GMV growth in payments, but in terms of the payments gross profit, it has translated to 31% growth year over year. However, we've not been able to translate a similar growth in the revenue line item in payments. And this is because there were a few categories, that were paused in Q4 of last financial year and Q1 of this year. These are card-linked payment categories, and because of which there has been a drip in the payments revenue, as well as in the payment gateway cost, which is the direct cost. The significant growth that we have seen in GMV has come from our fast-growing and emerging merchant payments business, as well as in UPI and non-card linked categories, where the revenue take rate is actually lower, and that is why we see this delta. But we do expect that we will recover and resume some of these categories with the right guardrails in place. So we are expecting revenue to grow both in terms of payments business as well as lending business in the coming quarters, regardless of all the changes that we talk about, new entrants in the market, regulations changing, things moving. I think one of the interesting things about being a fintech is you have to learn to become resilient. It's a tightrope, balancing regulations, evolving market conditions, profitability, and growing for the future.
It certainly is, and I think you've managed doing that quite well. I know that I've been speaking to you since 2015, and you've done that quite well. But having said that, I do want to ask you, Upasana, about this latest proposal, and NDTV Profit is finding this out exclusively. This is basis a possible amendment to a bill, or rather bill being introduced to amend an existing law, which is the Taxation and Other Laws Amendment Bill 2026, where the proposal is to have a list of payments in which there will be zero MDR, and seemingly it could be heading towards having zero MDR on digital payments. So what does it mean for you and the rest of the industry?
Actually, I believe that this change is required so that different payment methods can be clarified in terms of what can be zero and what can't be zero. At least that's my rudimentary understanding. I'm not a lawyer. I've not read this in detail. I've also heard this news in the last few hours only in terms of the proposal to make this a change. But essentially, we believe that this legislative change is going to have create a change in the Payments and Settlements Act, and thereby allow ease of change of MDR for different payment instruments. We believe right now the way the language is not flexible enough to allow changes in MDRs for different payment instruments. But that's my understanding. I have, your guess is as good as mine in terms of if MDR is coming on UPI or not.
Yeah,
but I can tell you it will help the entire industry, and it will definitely help my company as well.
Certainly, and indeed, you've heard pretty much the same thing that my reporters and my colleague Shrimi has just reported exclusively on. So it seems like everybody's on the same page, and if there's more clarity, Upasana, I think that's beneficial for everybody, including the customer. Wish you all the best in the rest of FY27, and as soon as we have clarity, perhaps once you've spoken to your lawyers, we can have another conversation on the implications of this latest change for the industry. Thank you so much for taking the time.
Great. Thank you. Bye-bye.
Bye. All right. We've got Osho Krishan as well as Siddharth Khemka joining in. And gentlemen, as always, a pleasure. Osho, it seems like we're ending the day positively, and we're holding above those critical levels, and unfortunately not able to breach that critical resistance level of 24,600. Is that how you see it as well?
Very good afternoon, Alex. Firstly, thank you for having me at the show. Well, definitely there have been many positive developments in the day. Although there have been positive developments throughout last 6 trading sessions, there has been a winning spree that can be seen on the Nifty front, and even on the technical fronts, there has been a sloping trendline breakout. There has been positive crossovers within EMA. Plus, there has been very positive developments from the derivative front. That means put writers are now taking positions on higher strikes. So there have been multiple positive developments. So I'm taking all these things and expecting that in the coming period, market may march towards the zone of 25,000. Although there is a small hurdle in between 24,750 is the zone where we can see some kind of correction. But overall, we are still having a very strong momentum in the market. So I'm quite bullish in the market. No doubt today, after the gap up, there has been some kind of subdued momentum, subdued movement in the benchmark index. But overall, the undertone is very positive, and I'm expecting that this might see a robust undertone in the coming period. So overall, the whole market sentiments now is turning bullish, and I'm expecting in the coming period we may see of a strong momentum coming in the whole overall market perspective. Overall, even Bank Nifty is also contributing decently in today's trading session. There has been a consolidation breakout. So I'm expecting that from here onwards, if Bank Nifty stays on the higher end, then we may witness a strong momentum in the whole market. So whole market is looking quite bullish. One should stay focused on sectoral movements for outperformance.
Okay, all right. So that's the view coming in on both the Nifty as well as the Bank Nifty. But you know what? If you are a BTSC trader in the F&O space, so today's market will slightly look different because there are changes in terms of where timings go. And Sharad is here to explain us exactly what these changes are. Sharad, what is it that is going to be different today in terms of trading perspective, especially in the F&O space?
Well, for the F&O space, the continuous trading stops at 3:15, but let's take it minute by minute, and we are almost there. You could say between 3 to 3:15 would be your normal trading. That's the timing. This is the regular continuous trading session will continue, and this is for the F&O stocks in this closed auction settlement or session, as you call it. Let's move on and see what happens next. At 3:10, the brokers have moved, or they are auto squaring of the trades as well. And this is for the F&O stocks. But at 3:15, what happens? This is important. Exchanges, of course, calculating these prices right now as we are speaking right now. This is on the VWAP. This is your weighted average prices to put that in perspective. And at 3:15, the continuous trading stops for cash eligible stocks. That's nothing but your F&O stocks. What happens after that? Order matching starts. 3:15 to 3:20, there is a transition period post the closing where the rates are settling in, and after that, if you see how things are panning out, between 3:20 to 3:25, this new market orders and limit orders would be coming in, and plus there will be a plus minus 3% of price band. After 3:25, what happens? Limit order comes in. That's the limit order session, and only limit orders are accepted in this. That means a larger manipulation is not possible. So much limit order session will be a system driven random closure between 3:28 to 3:30 p.m. So this is the minute by minute breakup happening. But what happens after 3:30? The order matching and the final equilibrium price determination comes in. Across all the closing prices, only one price comes for you, and at 3:40, the equity derivatives, the F&O contracts trading closes. So the timings actually increases, overall for the settlement. For the regular trading cash stocks, auto square of rules remain as it is, and they close at 3:30 p.m. So this is the minute by minute strategy coming in. But remember, this is the first day. There might be some teething issues across the ecosystem, but we'll update you on each minute.
So just to clarify, Sharad, this means that you can't run away at 3:30, right?
No, I cannot run away at 3:30, and neither can you. Till 3:40, we will be there.
All right. So you have to stay with us, but we'll find out from our guests what they think about this, and we'll get you a little more of an explanation about what happens in actuality, and we'll see this play out, of course, because today is the first day when this takes place. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
Hey, welcome back. You're watching India Market Close, and we have just established that Mahima cannot rush out of the studio at 3:30 because starting today, she's forced to spend 10 additional minutes in studio with me. Correct, Mahima?
Correct, because prices will settle by 3:42.
3:42. Yeah, we've been speaking about the change. Osho Krishan, you want to weigh in on this change and how this changes the life of the average trader? Effectively, they have to spend a little more time doing what they love, right?
See, definitely, this is a kind of a historical change in Indian market. This is for the first time that we are going to stay till 340, because by 330, 35, everybody is into a rush that market has been closed. Now, whatever happens, we'll see tomorrow. But this is for the first time that we will be waiting for 340. So I expect, although there might be the kind of the kind of volatility that we have seen in the previous some of the cases, so that might get negated with such kind of development. So I will be looking forward to it. This will be the first day, so there might be some of the glitches, or there might be some kind of technical things that we have to go through, whether our software is going to have that scenario, that whether it will be sustaining till 340 or not. So again, today being the first day, so I will be definitely waiting that what happens, and from day after tomorrow, tomorrow we can see how markets pan out.
Siddharth, the other, and from a fundamental standpoint, you have to look at these market participants, including the exchanges, and you have to identify what the implications of this could be, right? Because it changes the experience for derivative traders, and also it could potentially have a bearing on volumes going forward. So, from a longer standpoint or longer term standpoint, how do you see this panning out?
So yeah, I think look at this impact. I think the good part is, because we are now seeing, Alex, what we're seeing is that the derivatives volumes are now surpassing the cash volumes by a huge margin, especially in some of the liquid stocks. Hence, a better price discovery through this mechanism will be always much better, far better, superior in the longer term, and hence investments into mutual funds, some of the others, which take the closing price into their NAV calculation, will be effectively much better. And as I think Sharad highlighted and Osho also highlighted, think because there would be a lot of pooling, the sharp volatility will be reduced and manipulation will go away. I think from that perspective looks positive. And even from an exchange perspective, I think slowly, gradually, these are the better practices that they are trying to implement, and that should only help them in the longer run in creating a transparent way of arriving at the closing price.
Just a minute away from at least for F&O trade to be over with, because 3:15 now is the time when F&O trades will have to be closed. The last trade that you can take is now. So remember,
and then the auction starts.
And then the auction starts, exactly. So that's when the closing price will be determined. But the other factor is with regards to how Bank Nifty has seen a good recovery in the last 2 odd days. Osho, if you look at the charts also now, I think we are now tracking the 58,000 levels as resistance as to when that will be achieved. Do you think that is going to happen anytime soon now, considering that today it's in tandem with what the Nifty 50 is doing? And if yes, anything in particular that you're liking in the banking space?
See, Bank Nifty definitely have seen very strong consolidation. The whole previous week has been very strong, confined between 20 and 50-day exponential moving average. And today with the gap up, we have seen a very strong consolidation breakout. So I'm expecting that from here onwards, Bank Nifty can see some kind of a strong performance. Now, not an outperformance, but definitely a performance that can be seen on the positive front. Majority of the private sector banks have now started gaining traction. So Axis Bank will be the first counter, which is looking quite positive to me. It has seen a very strong correction from the zone of nearly 1380, and it has plunged towards approximately 1200, 1210 odd levels. But again, with the kind of technical developments, it has been into it plunged lower to the oversold territory. And again, in today's trading session, there has been a kind of a potential bullish reversal. So I'm expecting Axis Bank can see very strong momentum going forward. 1290, 1300 will be the first target. And even if it breaches above 1300, then we may witness another set of rally in Axis Bank. So this will be the preferred pick from the banking space.
All right. Now, quite a bit of attention, of course, is going towards the new settlement system. We've moved from, or we are in the process of moving from a volume-weighted average price settlement basis to what is called a closing auction session. It started from today, and in fact, it started a minute back. This is for F&O stocks. Ashish Rathi, COO and whole-time director of HDFC Securities, is joining in to tell you what this means. Ashish, thanks so much for taking the time, and good afternoon to you. Historic moment, one can say, for the equity markets, because you're moving to a different way of operating, and of course the time incidentally is just going up by 10 minutes, right? But having said that, as we speak, can you describe what is happening right now? The move from VWAP to the auction process?
So, first of all, a very good afternoon. I think so. It's a historic moment, as you rightly said. So, at 3:15, what will happen is the equity markets for this cash securities, which are around 200 plus, will actually stop trading. Then 3:15 to 3:20 will be a reference price, which is obviously derived from 3 to 3:15. Then 3:20 to 3:25. Then again, some limit orders will be allowed. Then again 3:25 to 3:30 limited orders only will be allowed. And in the final 2 minutes, in the final 2 minutes, there will be random closing. And 3:30 to 3:35 order marching and trade confirmation. So what happens typically for cash securities? I mean, for all most of the practical, like if nowadays retail considers market open at 9:50, not at 9 o'clock. Okay, at least for equity segment. At least for cash related segment, retail will now start considering 3:15 p.m. as the market close, because there are a lot of computations happening after that, wherein you can still place orders, but you will not receive instant confirmations. It will be basis equilibrium price or some other price. Now with this historic movement, what we have seen earlier, you remember long back market used to start at 9:55 a.m. correct? Then they moved to 9 a.m. Then you had this pre-open session wherein it moved from 9 to 9:15 a.m. actually speaking. So what happens is typically these movements we have seen happen. So initial few days or a month or so, some understanding is required, and after that things settle down, and you see the volumes as they were earlier. So yes, today is an important session to watch out. What happens after 3:15? It helps better price discovery. But however, all the computations are being done at the exchange level only. So as a retail customer or as an institutional investor, I just get the numbers which are computed by the exchanges. So that is how it will pan out. I mean, we are waiting for the last few minutes, and obviously in the equity derivatives, you have now 10 minutes more to trade, which is till 3:40 p.m.
That is, so the post-auction derivative window, which is what you're describing, 3:30 to 3:40, where based on the price that is determined in that auction period, you can actually do a certain cleanup based on that clean rate. And there are no wild fluctuations that would normally occur in certain securities where the volumes would be very low.
Correct, because that is the whole idea. Because what we were seeing is what was leading into, say, stock futures, you have physical settlement. Okay. And even for indexes. So at the time of expiry, with larger trades or larger movements, you could actually have a lot of in the money call options out of to see to it that these all malpractices, what you can say, or a price manipulation goes away. This is a better methodology, and internationally also this methodology is being followed. So that way it gives better price transparency, gives more comfort to institutional investors, and the chances of manipulation also get reduced.
So Ashish, then just trying to understand, does this mean that closing price will now directly come at 3:40 and 3:40? This is for the F&O price, and will square off at 3:40. Is that understanding correct?
Yeah. So F&O continues till 3:40. Now the square off timing actually depends from broker to broker. Like you have day trading products. Okay. So they will determine. So right now, what was most of the brokers offering in cash segment till 3:15 p.m. They might move in cash segment at least for cash securities till 3 p.m. only. Because 3:15 actually literally the market closes, whereas you have certain sessions. Whereas in derivatives, definitely the timing can be extended by 5 minutes or so, because now the derivatives market, equity derivatives market, is open till 3:40 p.m., which was earlier 3:30 p.m.
Okay, and this plus and minus 3% price band that has been given, that is the price range within which the closing price movement will happen. Is that understanding also correct? Okay.
So plus 3, so what will happen is, what they will do is 3:15, they will compute the reference price. Now that reference price will be basis. So right now what happens, the closing price is determined basis weighted WWAP, what they say, of the last half an hour. So what they will do is 3 to 3:15, they will take the pricing. On that, the VWAP would be applied, and that will become the reference price. And for all other trades which happen after 3:15 p.m., plus or minus 3% of the reference price will be taken.
Okay, understood. So therefore, and this is now happening at the index level as well, right, Ashish?
Correct.
And so for example, on a weekly expiry, where traditionally in a bank Nifty, for example, with the 2 or 3 large securities with the weight that they have on the index, where traditionally you could have the possibility of a sharp move for the index one way or the other, that now is limited, right?
Yes. That's the whole idea. That's the whole idea and concept. Because some of the players could move the prices in the last, maybe because they have access to more data also, frankly speaking, which a retail may not have. So they may be able to compute at their end and accordingly, maybe with the help of few trades or larger trades, move the prices, which is more beneficial to them. So that will absolutely stop.
So then for the average watcher, somebody who's not necessarily looking, Ashish, at F&O trades, where would you then judge the close of trade? You would wait till 340, right?
No. For the equity segment, if you are not an F&O trader, 315 for the cash securities. Cash only 208 as of now, approximately 200. For rest, the market normally continues till 3:30 p.m. So if you are in Reliance, HDFC Bank, for all practical purposes, retail, the market will close at 3:15 p.m.
Right.
But if you are not part of that F&O slip, then that will continue normally till 3:30 p.m.
Okay, just one more clarity. So 325 to 330 limit orders can be placed and it will continue till 340 for the closing price, correct?
So 325 to 330 limit orders can be placed. However, in the last 2 minutes, there will be random closing, like how it happens currently in pre-open. Then again, 330 to 335 will be order matching session. So ideally speaking, 325 to maybe probably you can take 328, you will be able to place orders. And after that, entire matching and everything will happen, wherein an investor will not be able to do anything.
So just to explain, and I read about this, right? The random closing is aimed at discouraging last minute dumping of orders, correct?
Yes, currently also if you look at the pre-open session, so 9 to 9:07 is the pre-open session, and after that there is a random closing in which price is determined. So that similar way it will work over here also.
Okay. So let's hope, Ashish, that we're seeing this as we speak, right? We're seeing this play out.
I completely understand. See, we have seen that pre-open session. For a retail, it is important that the order gets executed or it doesn't get executed. They will not come to know of all these nuances.
Yeah.
But obviously, on an institutional side, they will be more, and these HFTs.
Yeah, understand. And it's also, look, it's our objective to ensure that all market participants and particularly the retail have the ability to understand what is happening in the market, right? So thank you so much for joining in and for explaining this to us and our viewers. Thanks so much for taking the time.
Thank you so much.
All right, well, now you know, in case you didn't know earlier. I certainly know better than I did about 25 minutes back. But let me go across now to Varsha, who's joining in to talk about, I believe we're talking about Divi's Laboratories. No, we're talking about Narayana Healthcare. All right, and for good reason. The stock is down at the lowest point of the day, 5.5% lower. And if I remember correctly, and Varsha, you'll tell me, obviously, because this is a spotlight, but the numbers on the top line were good, but it was weak on the bottom line because of the UK facility that they have, and they're guiding towards there being a trajectory for the improvement of that, right?
Yes, absolutely. So on the revenue side, we saw growth of almost 78%, but margins were kind of weaker, which then was expected. So overall, if you see 78% of revenue growth year on year, but margin pressure was seen year on year and quarter on quarter. This is because of the UK business. Now, talking about India business, which was a strong year for the company, well, India business had double-digit revenue growth, but the consolidated PAT, if you see, grew only 6%. Despite 78% revenue growth that you have seen, and this is, and also depreciation and interest costs were also reason why you're seeing the PAT only growing at 6%. Talking about international business, well, was up almost 58% year on year, a quite strong growth we have seen there, but the UK operations are actually diluting the profitability. So this is the reasons why the PAT was not good or the margins were under pressure. Now, talking about the aggressive expansion, well, they have an aggressive expansion plan. They are targeting 7,600 plus beds by FY30, but there's been a timeline shifts for projects. which has, raised execution risk for the company. Well, talking about the bed capacity is expected to increase from 5,775 to over 7,600 by FY30. But, expansion phase could actually keep cost elevated in near term. So overall, I would say company has a huge expansion plans, good revenue growth considering the UK acquisition, but you also might want to consider the margins going forward, because UK is delivering 8.8% margin, which is actually not at the level what India hospital margins are. So you might want to check on the margin side what company will be doing going ahead. Okay, Varsha, thank you so much for getting us that bull versus bear perspective for Narayana Hrudayalaya. But Siddharth, your quick view on this one, because we've seen hospitals in a have come out with either strong earnings or something that's impacted in this quarter, and unfortunately Narayana Hrudayalaya is on the other side. What do you make of this? And for the entire space, is there anything in particular that you're liking?
Yeah, I think if you look at some of the other earlier results that came from the healthcare space, they were pretty strong, especially if you look at something like Global Health, which is your Medanta. They delivered better than expected Q1 performance, around 12% higher than our expectation, both on revenue as well as EBITDA front, while the net profit was marginally below expectation due to higher depreciation. Overall, I think the healthcare space continues to witness strong demand. There has been good growth, and some of these players have also added capacities, and the newer capacities are now reaching that space of, you can say that EBITDA turnaround that they are witnessing. Narayana Hrudayalaya, we don't have active coverage. I think results not that strong. But I think, again, going back to companies which are under coverage, Medanta, Apollo, I think these are the two companies that we like. Some of the newer ones, for example, those companies are also ramping up the volumes. But in this space, what we like Medanta, there is a buy rating and a target price of 1670. Global Health is what I'm recommending. Apart from that, Apollo Hospitals is the other one that we like in this space.
While we're at it, let's talk about the technicals of these healthcare providers, Osho, and let me throw in your diagnostics companies as well. If I were to extend that list to the diagnostic companies as well, which would be the top one or two picks?
See, again, from these counters, I expect the overall momentum in Divi's Lab is very strong, although at present level, the technical parameters does not support the risk reward. But this counter is having a quite decent run, and there have been very exponential run, in fact, in the last 1 week. But overall, this counter was looking quite positive. But if someone has missed the train, then Dr. Reddy is some counter where one can look for a potential bullish reversal, because there has been very strong correction in the counter from the zone of nearly 1380, 1400 zone towards 1100 kind of a correction. And from current levels, now the counter is turning bullish, positive. So I'm expecting Dr. Reddy can be seen as a positive setup, and one can look for buying or accumulation at current levels. 1280, 1290 will be the first technical target. If it breaches those levels, then again we need to review the counter.
Okay, all right. So that's the view coming on both Dr. Reddy's as well as Divis. Osho, ABB is also one of those counters which disappointed on the back of numbers, but there have been brokerages which have gone ahead and hiked target prices for this one. What do you make of ABB on the charts?
See, overall, this counter is looking very positive. There has been very strong consolidation around the zone of 7300. And in the recent period, the counter again have started gaining some kind of positive traction. So I'm expecting that, looking at the technical developments overall on the daily and weekly time frame chart, the counter looks quite positive. I'm expecting nearly 7880, 7900 as the first potential target for the counter in the short term duration. And if it breaches those levels, then again from there onwards, we can see further movement on the higher end towards 8400 to 8500 from medium term perspective. So
Osho,
overall, the technical structure is positive.
Osho, I want to ask you about the benchmark, and we're seeing the first day of this new settlement process, right? And the level that I see for the benchmark right now is 1.6% higher for the Nifty 50, 24,774. And as I understand it, the auction window extends till 35, does it not? And so therefore, what are we seeing on the screen right now?
See, firstly, today even this is a kind of a very strange figure that is being seen in the counter, because the 10-minute exposure was given to eliminate volatility, but I am witnessing a very strong momentum in Nifty. So not very much sure whether it will close at these levels or there will be any further price movement. So today being the first day, it will be very early to say anything, but I will be waiting for today. But if such kind of movement is really happening in the market, then a strong volatility can be said. So I'm not very much realistic figure the Nifty is witnessing at present level. So I'm not very much looking for these levels for Nifty as of now, but don't know. We'll be waiting for another 5-7 minutes. Then we'll conclude that where Nifty
This
is
is
having its
visible.
close.
This is visible for the Nifty Bank as well. If I look at the
points.
if I look at the last tick for the Nifty Bank, I'm seeing a similar spike up, and it's at 1.7% higher. So you're saying you'll have to wait for another 7 minutes till we get the final rates at 340, correct? Osho?
Yes. We need to wait till 340, because I guess by 335 there will be some kind of price discovery that can happen. But again, by 340 we will be having the final closing and final levels for the benchmark index. So again, we need to wait for the day that what is happening in the market, and then can conclude what has happened actually.
So some of the names, if we can try to pull them up, because those names have also seen significant uptake, something like a Bajaj Auto, Federal Bank, Grasim, Prestige, all of these, are picking up in the last minute is what we're seeing. You also have something like Titan, Oberoi Realty, some of the names, Axis, that have picked up. So that's
Axis as well, right?
That's probably, it's a wait and watch, right? It's the first day to try to decode as to what's there, go Axis. To understand as to how this will pan out. But I think 340 is when we'll have the real prices, Alex, as we were earlier also trying to understand.
Yeah.
Indexes though Bank Nifty a short up of around 983 odd points is something that was not expected. And like Osho was mentioning, that this is not supposed to be volatile, but it's seen so. Osho, in terms of just cash market stocks, if you can take a look at some of those. And because these are expected to be squared off at 330 itself, right? So there, is there volatility being witnessed, or no? Those prices have completely settled now. What is it that you're seeing?
See, overall, there has been some kind of a strong volatility in the last 10 minutes, 5 minutes. So there is a strong volatility that is being seen. But again, being the first day, even I was expecting that whether what kind of movement we are going to witness in the market. So this is very strange that we are witnessing such a strong volatile movement even in the cash market. It's not that cash market is not having any kind of volatility, but when Nifty was frozen around 315 and again at 330, we are witnessing such a huge gap up or a huge strong momentum in Bank Nifty. So we need to check. I'm not very much sure that whether it will be the closing price or there will be something different closing that we are going to witness. But again, there has been a strong volatility. So the purpose of what the 10 minutes addition has happened is definitely not being seen in today's trading session.
Okay, let's wait for another few minutes to see how it ends up. But just going across to Sharad. Sharad, so just to recap, right? So 3 to 315, you saw the VWAP price, and on the basis that was a reference price that took place. From there, 315 to 335 is when the auction window takes place, right? So
the entire adjustment, Alex, happened from till 330 and also is pushing over till 335 to simplify things. For cash market, it remains as it is, but it's an anomaly actually. The entire idea of this setup was that there shouldn't be any anomaly, and now you're seeing for Nifty, it has gone up almost a 400-point closure. At 340, we'll get the final closure of how things are happening. Let's pull out Nifty Bank also and see what's happening here. And most of the stocks in the FNO have got an actual good up move coming in. Let's pull out Reliance chart to see what's happening. These are the large names. HDFC Bank also, whether adjustments were made or not. See, not so much in the larger plays, but in the smaller ones, if compared to the larger ones, that's where we saw a little bit spike happening here. Largely, we still don't know why this is happening, because overall the pricing which is there, that pricing closed numbers are still being added, and finally at 340 these levels might change. But yes, for the indices, it seems like there is an anomaly at play, and what was the entire thesis of getting CAS is actually looking like a reversal here. So we need to wait it out. It's the first day. There might be some teething issues. I already explained to you, especially on the exchanges. So we need to wait it out, and maybe some positions might get reversed or cancelled in the next trading session, which is tomorrow as well. So it is an anomaly right now. This is first time for us.
Question now. I'm looking at the various things that happen in the settlement process, right? The transition period begins at 3:15 to 3:20. 3:20 is when you have an order entry session, 3:20 to 3:25, where orders can be modified, placed or cancelled within a plus or minus 3%. So is that where this might have taken place?
That might have been because it's still under that band, Alex, and most of the stocks which you were discussing, all were actually in that +3, -3, and most of them are between that +3. It's not that they have exceeded that. So yes, by definition, that move is there, but will it sustain or not? That is something which we'll be watching out for, and I think we have crossed the 340 levels.
No, it's still 338.
It's 338. So we need to wait it out and just get the final rates in, because right now also rates are settling in. So this is what we are getting initially, and this is the first day. So we need to understand more as in time comes and things happen.
We have Osho with us, just trying to understand. Osho, because tomorrow's opening will be an interesting one to watch out for. If we settle at a higher end, do you think there could be a gap down opening, just because it's the first time that we're seeing this happening, the cash settlement?
See, overall, this might create a kind of confusion among the whole traders community, because we are not very much sure the kind of levels that we were witnessing around 24, 550, 560 was Nifty, where 573 to precise, where Nifty was frozen around the zone of 315. And after that, if there will be around 200 points of jump, then obviously there will be some hesitation among the traders that whether these positions are going to stay on the higher end or not. So I'm expecting if this will be a closing price, then there might be a possibility of some panic selling that can be seen, because there has been 200 points of rally without any point. So it's not a very positive signal as of now. But again, we need to check that whether it will be happening or not. Although I'm not very much satisfied with the kind of closing that is being witnessed. No doubt Nifty is having a very strong momentum. So levels are looking very positive. But there should be some kind of a strong backup behind it. So if it is not, then again, we need to check up.
Then so what you're suggesting, Osho, is that if it actually holds at 1.6% higher, and all of these indices or rather all of these stocks in the F&O space, where you're seeing a higher than expected closing, this could wreak havoc in the open positions that are currently there.
See, definitely, because the time at 3 o'clock or 3:15, the kind of position which was made in the market, now that will be having a total different face, and there will be no positioning that there is visible positioning that we people will be having. So put writers were having very strong writing around 24,500, but now that 500 point of jump, even the call writers who were having position at 24,600, now what has happened to those positions? That will be a concerning factor, because if it happens, if there will be a short covering, then again those people will start taking out the money and again will be putting on the higher strike. So I'm expecting that if this happens, then there might be some kind of confusion.
Osho, I have a query here. Now it's already 340, and what anomaly which we are talking about, it seems like that's the fixed closing happening, that 24,774. It's up 1.6%. There seems to be there can be an arbitrage opportunity also. If you look at how the futures are playing and the spot is playing, there is a confusion in the market. So how do you see that?
It's a very volatile market. It's like the thing for which this was all made is, I think, is losing its substance as of now, because 200 point of rally within 15 minutes for Nifty is a big thing in the market. People have already taken positions. Even we were expecting that 24,600 was having a very strong call writing. So there will be positions that people would have taken on the higher end. But with the kind of strong closer, 24,800, near about 800 is the next position that we are witnessing. So definitely the whole movement, reasoning behind making the settlement does not look very positive at present. So I'm not very much sure, but again, we'll check whether tomorrow we are going to have some kind of repercussions over it. There will be any kind of gap down opening. If that happens, what will happen to the existing positions? That will also be a concerning factor.
I think the arbitrage that Shad was just talking about, because Nifty futures are down almost 114 odd points, and Nifty is seeing an uptick of almost
390 points, nearly 400 points, and 200 points of that has come through just now.
Yeah, just now.
In the settlement.
And same thing has happened with the bank Nifty, 980 points of an uptick. And Sensex also is seeing that kind of volatility. So I mean, it's just interesting to see what.
I guess it's gonna. So we'll come to know soon enough what has taken place. But teething issues seem to be what everyone's talking about. So Osho, of course, we'll wait for a clarification on what exactly has taken place. But what advice would you have for those that have open positions that have to face trade tomorrow? What would you do? It depends on which side of the fence you are.
See, overall, there will be a caution that will be advised at present, looking at the market momentum. No doubt there will be some positions which will be making decent money or maybe a lot of money with these kind of closure, or there will be positions who are also being trapped at these levels. So this is not a very strong signal in the market. No doubt we are having a very strong closer. So bullish momentum is there, but as of those who have taken positions in the derivative segment, they are going to have some kind of very strong time, depending that whether we are going to open tomorrow at what levels. So one should maintain caution until there is some kind of clarity that how these kind of 200 points of movement in Nifty is not a very normal thing. If that happens in 15 minutes, then it's a very concerning factor. I'm not very much liking the kind of market scenario that we have witnessed just now. But again, a caution will be advised at present level if there will be any clarity by the exchange or why these kind of movement has happened. So one should definitely await for any clarification.
So Osho, hypothetically, assuming that this is an anomaly and it looks like it is, then within the open session tomorrow itself, in the first few minutes, it could get rectified. So even if you have made money in the derivative space based on an open position, your window to take advantage of that could be very, very short.
See, firstly, if someone is already making money, for them, it will be fine that market is having some kind of, or by 9:15, 9:20, those things will get settled off. But if for those who have already taken positions on the writing front at call options, because that was having a very significant positioning, 24,600 was having a very significant positioning. So that will be a concerning factor. If it happens, then very nice. But if it does not, then the premiums will definitely see very strong escalation, because the premium, when the market was 24,570, the options were quite having a very lower premium. But now when the market is at 24,774, obviously there will be 200 points of premium jump, or maybe 120 points of premium jump can be seen. So that will be something very concerning for any writers in these market conditions. For all buyers, definitely they are going to enjoy the night, but for writers, they are not going to have a pleasant night for the day.
Has been listening into this conversation, Siddharth, almost as an innocent bystander, pretty much like the rest of the retail investor community. Do you have anything to add? You've been witnessing history in the making.
Alex, I was actually confused. I was expecting what Osho was saying is after some time, some settlement process will start and the price will move to a realistic price. We have been used to seeing such kind of anomaly opening at 9 a.m. in the morning, which we generally ignore and we just look at the screen at 9:15. So I was waiting for that time. Unfortunately, I think we'll have to understand this process to really fathom what's happening. But as of now, I have started getting calls from our business partners, from our dealers, from a lot of people in the market, because Sensex, we are seeing nothing and no anomaly there, while Nifty and Nifty stocks, that is showing a sharp anomaly. So a lot of reading and understanding needs to go. I think NSE has to come out with some clarification of how to read into what has happened today.
So I think orders which were being put between that 320 to 328 are just acting like that pre-open trade, I think, and that's why we're seeing that spike coming in. But I think just a good day.
No, but it's actually a good point that Siddharth makes. This is visible in the NSE indices. If you pull up the Sensex, and you should do that, if you can actually pull up a split chart of the Sensex and the Nifty 50, you will see exactly what Siddharth was pointing out. You have a close of 0.7%, 544 odd points, and you had about 180 points odd gain for 190 points odd gain for the benchmark Nifty 50 at the same time. Right. And then in the new settlement process, you've had a 200-point gap up closing. It's the first time that I'm ever saying 200-point gap up closing, but I think that I hope that is not the case. You probably can't see that, in fact, because it's that last tick that showcases. If you look at the Nifty 50 chart and you see the blue tick at the top, that's where it ends, and that's pretty much significantly higher than what it has been through the trading session. So we're going to have to wait and see what the clarification is.
Yeah, absolutely. And I think tomorrow's trading session will also give us some more perspective, whether this settles tomorrow morning in pre-open, or how does that pan out is something that we'll want to know. But Osho, one more question. In terms of this acting just as the pre-open session,
or the closing session.
Or the closing session, like a pre-closing session, if I may call it that. Do you think that it is very likely that between that 9 to 9:05 is where we are going to see the settlement coming in? And ideally, for somebody who was holding position exactly at the levels where, before 3:30, it'll come back to those levels, or below those levels can also be expected?
And we're dealing in hypotheticals, so let's put that caveat out.
Definitely, we need to come out with some kind of clarification answer, because now it is quite okay to have a discussion over the topic, but the time I complete the show and go and face the traders, then there will be a lot of questions that those people will actually have, because someone who already holds position in the market with such volatility, they will be having very strong questions, and we need to be answerable for that what has happened. But looking at present, the same scenario which we witnessed pre-market around 9 o'clock, there has been multiple movements, multiple gap up which being shown, but by 9:07, 9:08, we witness a kind of a very decent momentum in the market, which gives us a sense that whether we are going to have a positive day or a negative day. But with this market condition where we are already having a very strong volatile closer, and again tomorrow we will be having a volatile opening, so that will be frightening from a trader's point of view, that we are not having a very decent market conditions at present. So definitely, if something happens around 9:05 a.m. and there will be any kind of decent price discovery, which will lead to the price movement, which was near about the zone of 315, 320, then I think that might be a decent movement for the market. That might give a better picture for the market in the coming period. But if there will be again a drastic movement, or if there will be a gap up opening from there onwards, so that might not give a very clear picture. So again, we need to have a very strong clarification. As of now, even I do not have, but I will try to put perspective in it.
We appreciate, all your inputs that you gave us, Osho. But just to point it out quickly, because the Nifty futures are at a discount of 114 odd points, and the Bank Nifty futures also around 340 odd points of a discount is what we're seeing there. So it'll be interesting to watch out for, because what's happening is just like the pre-open, right? You have the buyer, but there's no seller, so the cost is going up, and that's causing the spike
exactly
in the
what Osho was talking about with the premium experience, right? The premium will get affected. All right, but on that note, gentlemen, thank you so much for your patience on this first day of the new settlement. Let's see what the clarification, if at all, comes through, and let's take this up tomorrow as well. Thank you so much for taking the time.
Thank you.
Right, and viewers, you've probably been left with a few more questions than you had at the start.
Co-powered by LIC, हर पल आपके साथ, and Coin Switch.
Welcome to NDTV Profit. You are tuned into Crypto Minutes powered by Coin Switch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin above $63,000 levels on regulatory optimism. Tokenized funds, central bank pilot and record equity volume signal an important shift. Crypto ecosystem pushing for Senate vote for Clarity Act. And lastly, billionaire investor Ray Dalio says 1% of his portfolio is Bitcoin. Well, the crypto markets are known for their volatility, which often makes investors wonder, is this the right time to buy? One strategy that can help take that guesswork. Now, out of investing, is dollar cost averaging or DCA a good idea or not? Remember, DCA is one of the simplest ways to build long-term exposure to crypto. Now, instead of investing a large amount all at once, you invest a fixed amount at regular intervals, every week or every month, regardless of whether prices are rising or falling. The biggest advantage, it removes emotion from investing rather than trying to predict market highs and lows. Now you are investing consistently over time, which helps average out your purchase price. So how you can build a disciplined DCA strategy? Start by deciding on an amount you can comfortably invest on a regular basis, whether it's 100 rupees, 500 rupees, 1000 rupees, or any amount that fits your budget without affecting your essential expenses. Next, choose a fixed investment schedule, can be weekly, monthly, and stick to it. Many platforms also are offering automated recurring investments, making it easier to stay consistent without worrying about the timing of the market. Now, for example, you invest 2000 rupees in Bitcoin on the 1st of every month. The same amount buys more Bitcoin when prices fall and less when prices rise. Now, over the time, your purchases are spread across different price levels, helping out the averaging of your overall purchase cost instead of relying on perfect market timing. Finally, review your portfolio periodically, perhaps every 6 or 12 months, instead of reacting to every price movement. The real strength of DCA lies in its discipline. It shifts your focus from trying to time the market to spending time in the market, while no investment strategy can eliminate risk. Investing consistently and maintaining a long-term perspective can help investors navigate crypto's volatility more effectively. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline, where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ,
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है, तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है, शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ,
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer.
Nifty jumps 390 points to close above 24,700, hitting the highest level since March 2026. Sudden spike of 200 points was noticed at 3:30 p.m. due to closing auction session introduced by SEBI. Oil prices fell over 5% after US President Donald Trump said that fresh talks with Iran would begin this week, raising hopes of easing geopolitical tensions and reducing the risk of supply disruptions. Muthoot Finance stock falls over 7% after its June quarter results. A sequential drop in profit and revenue disappointed investors, while urban company shares surged after its June quarter results as confidence in the company's long-term growth strategy overshadowed a wider quarterly loss. Finance Minister Nirmala Sitharaman likely to move the Taxation and Other Amendment Bill 2026 in Lok Sabha tomorrow, proposes some changes to the Payment and Settlement System Act for digital payments. FCNRB deposits show a sharp increase in foreign currency deposits. Following the RBI's special measures, banks have mobilized over $60.5 billion through FCNRB deposits till July, compared with an outstanding base of $32.5 billion in June. Willie Bosch assumes charge as the new CEO of Indigo as challenges of global expansion and premiumization loom after taking charge. Willie Walsh says opportunities ahead for Indigo are immense. Commerce Minister Piyush Goyal says India and Uzbekistan can explore FTA as Uzbekistan Finance Minister is on 4-day India visit. Uzbekistan offers opportunities in mining. India deeply interested in investing in mining. Rain wreaks havoc in Kerala and Assam. 15